Can we start once again, everyone? Now, after consolidation, now we'll take what? Ind AS 19. Ind AS 19 is what? Employee benefit expense. So, all the employee benefit expense except employee share-based payment will be covered in this chapter. This is all form of employee benefit except share-based payment already covered under Ind AS 102 that will fall under the scope of this chapter. Correct? Now, for accounting treatment, all types of employee benefit are of four types. What are the four types? First is known as what? Short-term employee benefit, then long-term employee benefit, post-employment benefit, termination benefit. Means any employee benefit which is paid or payable within 12 months is short-term, which is payable after 12 months from balance sheet date or reporting date is what? Long-term, and which is payable after retirement is known as post-employment benefit, and which is paid because of termination, that is known as what? Termination benefit. So accounting will be done based on short term, long term, post. Now when I am coming to short term is very easy. Short term will be accounted at undiscounted amount, means it will be recognized as an expense and liability at undiscounted amount. Okay, short term employment benefit will include wages, salary, profit sharing bonus, short term compensated absences and other short term employment benefit. Means very easy, it will be recognized at an undiscounted amount. Only this we need to understand, this short term compensated absences. Means in the revised study material they have given some question on compensated absences. Now it become a very important topic. It become now important topic. So now we need to understand what will be the accounting treatment for short term compensated absences. What is the meaning of short term compensated absence? Means you all know that some leave is given to, some paid leave are given to employee. Correct. So that leave, if it is not availed, can be carried forward. If it can be carried forward for 1 year, not more than 1 year, then it is short term. If it will be carried forward for more than 1 year, it become long term. Right now we are discussing short term. So short term compensated absences. So accounting treatment for leave, just try to, very easy. If it is availed during the year, then no entry. Now if not availed, but if it is non-accumulating, means if it will not be carried forward, non-accumulating means it will not be carried forward, it will be drawn, lapse, then also no entry. Only we need to understand what will be journal entry when it is carry forward. So this type are this accumulating leave are of two type. One is known as vested leave, one is known as unvested leave. When I say vested means cash will be paid for the leave which is unavailed. Means it will be paid in cash. It will be paid in cash. So it is very easy. Correct. Now we need to find out. What number of unavailed leave per employee. Then multiply by salary per working day. This will be the amount. So what journal entry will do? EB expense account debit to payable. And it is paid, payable account debit to bank. So of course it will paid in next year only. It will remain as a liability, current liability in the balance sheet. I think this too no doubt. Vested leave no doubt. So how to calculate the amount? First we need to find out number of unavailed leave multiplied by salary per working day. With this amount will what journal entry will pass? EB expense account debit to payable. Once paid, journal entry payable account debit to bank. We need to only understand this unvested leave. Unvested leave means leave will be given against leave. Means it will be carried forward to next leave, and the employee may take leave in the next year, subsequent year. Correct. So in this case, what India says that we need to recognize proportionate amount of provisions should be created for expected leave. Proportionate amount. Let me take one question based on this. Then I will come to what they want to say. So let me see whether I have taken any question. Yes, I have taken question. I think so. So come to first question. So these all questions have been added in revised study material. So that question only I have taken. You can see Mr. Niranjan is working for Infotech. Consider the following particulars. You can see annual salary 30 lakh for 2 years. Number of working days during the year is 300. Leave allowed 10 days, 10 days. Leave taken 7 days, 13 days. Leave unutilized 3 days and nil. Based on past experience, Niranjan will avail the unutilized leave of 3 days of 2001 in 2001-2002. Infotech Limited content that it will record is, leave it, let me come to the solution. Means they are given 2 year. They are given how many year? So I am writing year 1, year 2. चलेगा? बताओ. How much leave allowed? 10 days, 10 days. Then we'll add brought forward from previous year. Nil. First year nil. First year nil na. First year nil. It is 10 days. Then minus what? Leave taken. How much leave taken? 7. So how much carry forward leave? Yeah, you can say number of leave unavailed, which will be carry forward to next year na. You can say unavailed leave. How much? 3. Understood? Now what India says that first calculate salary per working day. Working day. What is the total salary they have given? What is the total working day they have given? What is salary per working day? 10,000. Correct? Understood? Now, understood? Correct. Now just try to understand. This is leave unavailed, which can be availed in what? Next year. But it may or may not be availed. So what Indians want to say that first you need to find out what is the probability of availment. Means based on past experience, this employee will avail how much leave in the next year. So can you say based on past experience we can find out? In this question they have given the probability of availment is what? Probability of availment is what? 3 days only. It is given now. Means they will avail entirely. It can be 2 days also, it can be 1 day also. But because in this question they have taken 3, so we'll take 3 only. Now it means how much provision required? Provision required become 10,000 into 3. 10,000 into 3 means how much? 30,000. Means what is my EB expense? Can I say EB expense will be 30 lakh plus 30,000? That is 30 lakh 30,000. What journal entry will do? EB expense account debit how much? 30 lakh 30,000. Let us assume the contractual salary has been paid. So 30 lakh is paid and we should create a provision of how much? We will call it provision for short term compensated absences, 30,000. Have you understood this? Have you understood this entire working? Can we come to the next year? Now come to the next year. Can I say brought forward is now 3? It become 13 and they have taken 13 only. It means what? Nothing will be carried forward. Understood? It means, can I say no provision is required? Provision required is nil. But whatever provision you have created will reverse in this year. So it means EB expense will what? 30 lakh minus what? 30 lakh will be reversed now. We reverse. We will reverse what? The provision which is already created. So your EB expense will what? 27 lakh. Sorry. 29 lakh 70,000. Are you able to understand? Means whatever provision you have created last year will be reversed or not. So what journal entry you are doing, batao? How much EB expense? 29 lakh 70,000. How much provision reverse? 30,000. How much you will pay? You will pay as per contract. Payment is 30 lakh only. Have you understood this? Correct. Very simple. Have you understood? Have you understood? I hope you have understood. Now, let us assume the probability of availment was 2 days. Let us assume, because that question is also given in ICAI study material. Same question. Can I take this debt? Everyone. So year 1, year 2. What was the leave allowed? 10. Plus what? Brought forward leave, how much? Nil. How much leave taken? 7. How much unavailed? 3. Now, let us assume probability of availment is 2. It means my provision will be what? 10,000 into 2 means 20,000. And my EB expense will be what? 30 lakh 20,000. Understood this point? Journal entry we can do. Correct. Now coming to next year, you will say what need to be done. Okay, this will be 10. This will be how much? No, 3. Leave carry forward is 3. So brought forward is 3 na. Probability of availment is what required for provision. But this will be only come na. Are bolna re. Bolna. So this become 13. This become 13. Correct. Now 13 was taken. So this become 0. Means can I say this is changes in accounting estimate? Last year we have created provision for 2, but we should create provision for 3. So what we can do? We can first increase the provision by 1 day and then decrease the provision by 3 days. Or better, whatever you have created that you reverse, same impact will come or not. Means can I say in this way, in simple word, in last year provision will be reversed in current year irrespective of availment, irrespective of actual availment. Means can I say actual availment may be 3 days or 2 days or 1 days or 0 days. Are you able to understand what I am saying? Follow. Okay, last year provision will be reversed irrespective of what? Irrespective of availment. Follow. Okay or not? Okay, understood? Means can I say it will be no more required and your expense will be what? 30 lakh minus what? 20,000. Or we can say in this way, 30 lakh. First you increase the provision by 10,000, then decrease how much? Same impact will come or not? So better whatever you have created that you reverse. Means can I say in this way, last year provision will be reversing current year irrespective of actual availment. Actual availment. This you understood? Let me come to next. Year 1, year 2. 10, 10, 7, 3. ठीक है ना? Probability was how much? Let us take 2. How much provision you have created? 20,000. This much you understood? Now suppose next year this will come, but they have availed only 7 days. Quite possible. Now there can be two situations. Question has said that leave will be availed on FIFO basis or REFO basis. Either FIFO or LIFO as per policy or management. If suppose they have said FIFO, so this leave will be first adjusted with what? With previous year entitlement, then with what? Current year entitlement. If they say LIFO, then first current year, then what? But if suppose FIFO, let us take FIFO. So can you say this will be first adjusted with what? And balance we have taken for what? So this to become 0. Out of 10 days, how much we have availed? Means how much will be carry forward? 6 will be carry forward. And now we should create a provision for 6. So now my provision will be 6 into 10,000. So last year provision will be reversed. Current year provision will create. So we reverse what? 20,000 and will create what? 60,000. Understood? If suppose, now in the same question, this much you understood? I'm assuming that you are understanding, huh? Because I don't have much question, I'm just creating question. Suppose they say LIFO basis. But this 7 will be first adjusted with what? Current year entitlement only. So current year become 10 minus 7. And previous will be lapse now. Previous will be lapse because it cannot be carried forward. It means your unavailed leave will be what? Batao? 3 only. Very good. It will be 3 only. Understood? Why 3? Because this will lapse. It cannot be carried forward. Now you should create provision only for what? 3, 30,000. Can I say this will be reversed and this will be created? Have you understood? I hope I have discussed all the cases. Got it? Understood? Zindabad? What is given? You can see that is only given. Proportionate amount of provision should be created for expected cost of lease. Means provision is equal to number of unavailed leave multiplied by sometime probability is given in percentage form. Suppose 70% will be availed. So you will do multiply by 70%. If question is silent about this probability, then always assume 100%. Correct. I hope this journal entry also you have understood. Just see for unvested. Look at next year this provision will be reversed irrespective of actual availment. Yeah, this journal entry vested also you have understood. Have you understood? Any doubt? No doubt. Come to what? Post employment benefit now. Add now. Consolidation, lot of power is required now. So my energy went down. Have you understood this much? Now let us come to post employment. Now you must be thinking, so why you are not taking long term, before long term you are taking post? Why? Because once I complete post, automatically what will be covered? Long term. So better take post. Automatically what will be covered? Long term. Correct? So post employment benefit are of two types. One is known as defined contribution plan. One is known as defined benefit plan. Defined contribution plan means where both employer and employee contribute to certain plan. For example, PF, ESI, etc. Defined benefit plan means what? Where the amount of benefit is defined, but amount of obligation is not defined. That is gratuity, pension, etc. And in that case, employee never contribute. Employee never contribute. So first let us take DCP. DCP means what? So guys, this is very easy. Defined contribution plan, what they want to say that, can I say employee will contribute, employer will also contribute as per legislative requirement. Now can I say employer is only to contribute a fixed amount. Once they contribute the amount to the plan, then there is no other obligations. It means whatever they have contributed, that become an expense. Correct? It means, can I say whatever contribution is required will be recognized as an expense and liability when they are liable to contribute. When they are liable to contribute on due date. On due date. Therefore, will pass one journal entry. EB expense to payable. Once paid, payable account debit bank. Correct? If suppose that contribution is payable after 12 months from reporting date, then what India says, discounting is also required. But normally this type of contribution is payable within 1 month only, and therefore practically no discounting is required. Understood? Means, can I say in this case is a plan under which entity pays a fixed contribution to a separate entity, which is known as what? Plan asset, and will have no obligation to further contribute if plan asset do not have sufficient fund to pay employee. Means whatever we have contributed to a separate entity, if they are not able to pay to the employee, so this is not responsibility of employer. Can I say entity responsibility is over once they have contributed that amount to the plan asset. Means it is an expense, expense will be recognized. That only said. So what they said, the employer contribution to DCP is recognized as an expense and liability when employer is liable to contribute. If contribution is payable after 12 months from reporting date, then such amount should be discounted. Understood? Entire discussion means 90% chances is that they will ask question from DBP. This is only important topic in this. Now 10% chances they will ask short-term compensated absence. Means in this I will say there are two topics which is important. One is defined benefit plan. One is short-term compensated absence. Short-term compensated absences you have understood. Now I need to only explain what DPP. Now DPP means what? Correct? DPP means what? DPP means what? So I will explain this defined benefit plan with one question. But before that, defined benefit means what? One benefit is announced, means one plan is announced, just like ESOP plan. It may be gratuity plan. So in that benefit is provided to whom? Employee. What can be the benefit? They will say every employee who has completed minimum year of 5 years of services, there will be one condition, is entitled to 20% of last drawn monthly salary for each completed year of services. So this is a plan announced. One plan is announced by entity. Means any employee who is completing condition, they are entitled to 20% of last drawn salary, means on the date of retirement, for each completed year of services. First, can I say in this we don't know, I mean right now just try to understand first. Suppose this is what first year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year. We don't know now how when he will retire na. This is infinity right now. We don't know. Infinity though we should not say. Because age is what? Certain. Death is certain na. I can't say infinity. But we don't know when it will retire. Now my just try to this is first year of job. Means he joined in this current year only. My question to you right now, 5 year is not completed. So right now the plan is unvested. It is unvested. And once it will be completed, the plan will be vested. My question to you all, should we recognize any expense in this year? Right now he has not completed 5 year of services. So my question to you is, should we recognize any expense in first year for gratuity? Yes or no? This is what? Yes or no? No. Yes or no? No or yes? This is what? This is what? Fast, fast. Can I say just try to understand? If you are saying no, it means you have not understood share-based payment. In share-based payment, we recognize expense during vesting period only. The options were unvested only. So can I say we need to recognize in every year? Every year. In share-based payment also we have recognized on some estimated basis only. So here also on estimated basis, we need to estimate whether this employee will be able to complete or not. There also we have estimated if this much employee will work, this much employee will not work. Estimation done now. So can I say in this, yes, it will be recognized from the first year only. First point you have understood. But can I say there are a lot of uncertainties. First, we don't know whether he will complete this time or not. Then we don't know when he will retire. Then we don't know what is growth in salary. Then we don't know what growth in salary we don't know. Then we don't know inflation rate also we don't know. Correct now. There are many other uncertainties involved, and therefore what Ind AS 19 says that this calculation should be done by expert, and that expert are known as actuary. Normally in your office, one actuary report will come, will take the information from there and will pass the journal entry. But how that amount is calculated, that we need to understand. However, can I say this is totally based on many assumptions. That assumptions are known as actuarial assumption. That assumptions are known as actuarial assumption taken by actuaries for calculating this amount. This assumption can be financial assumption or demographic assumption. However, we are not supposed to understand what is this. Correct? This much have you understood? So how to calculate this amount, that we need to understand. Let me take one example. One plan was announced, gratuity plan. If 40% of last drawn salary for completed year of services. Correct? That an estimated number of year, let us assume 5 years. Growth in salary is given, suppose 8% per annum, compounded annually. Understood? And they have given discount rate, how much? Let us assume 10%. And salary of year 1, let us assume 40,000. Correct? Understood? This is the question. Very simple question I have taken. So how to calculate the amount of expense that we need to understand? Can we take the solution? Solution. Solution. First we'll calculate what? Last drawn. This is 40,000 per month. Huh? Last drawn monthly salary. What is year 1? Then it will increase by what? 1 point, it will increase by 8% every year. So we can see 1.08. So this will become second year. Then 1.08, this become what? Third year. Then 1.08, this become fourth year. Then 1.08, this become fifth year. Understood? Understood why we have done 4 times? 5 year but 4 times. Because first year salary is given. So this becomes second year, this become third year, this become fourth year, this become fifth year. How much? 54,000. Understood. Then we'll find out projected benefit. What we'll find out? Projected benefit. As per plan, it is 40% of what? 54,420 multiplied by how many year? 5 year. How much? This is the only plan. How much? 840. Now what India's 19 say that this will be allocated to each year on SLM basis. You will find out allocated benefit. Allocated benefit will be 1,08,840 divided by what? 5. How much? 768. Means can I say in this way? This is 5 year. So first year allocation is 21768. This amount is payable after 4 year. This amount is payable after. This amount is payable after. This amount is payable after. And this amount is payable is Y0. This is Y1 na. Y2, Y3, Y4. Are you able to understand? So now because this is payable in future, this amount is future value. We need to find out present value. This amount is payable in future now. We need to find out as on this date what will be my liability at present value terms. So we'll calculate. Next, point number 4. Calculation of current service cost. We call it what? Current service cost. CSC means what? Current service cost. Read on year 1, year 2, year 3, year 4, year 5. What is allocated benefit? 21768, 21768, 21768, 21768, 21768. Are you able to understand? Can will calculate discounting factor at what rate? So can you give me discounting factor? No. Can you give me discounting factor year wise? First year how much? Zero point. Very good. Miss, can I say will you start from this? You have done in this way, na? This will be 1 na. This will be 0.9. This is 0 point 0.336. But this is danger. Why danger you understood? You can start with 1 for y1. Danger in exam. Be careful. Be careful. Correct? Be careful. Now we can find out current service cost. Can you give me current service cost? I want year wise. Year wise recognize. We recognize expense year wise na. So why you don't give me total 5 year? I want year wise expense. How much? 14,867. 16. Then 19,7. Then understood. So I hope you have understood how to calculate current service cost. Now, next point. That on. We need to prepare one liability statement. Liability statement, but year wise. Year 1, year 2, year 3, year 4, year 5. So guys, first we write on opening balance of liability. Then we'll add interest cost. Interest cost. Then we'll add plus what? Current service cost. And this will become what? Closing balance of liability. This liability is known as defined benefit liability. We call it what? Defined benefit liability. Correct? Means can is a present value of defined benefit liability. This is a present value of defined benefit liability. Are you able to understand? So we call it present value of defined benefit liability. So first your opening balance 0, interest 0. What is current service cost? 14,867. Closing balance is 14,867. This will become opening balance. What is the interest? 1,487. What is the current service cost? 16,348. What is the closing balance? I hope you are understanding. Huh? Closing balance is what? 32,702. This is 3,270. Then 17,980. How much? 53,9. Huh? 52. Then 53,952. This is 5,395. This is 19,787. Then what? 79,134. This becomes 79,134. Last year interest always take us a balancing figure, because this we know 21768, and this projected benefit also we know. What is the projected benefit? 1 lakh. Projected benefit 1 lakh. This should only come na. So what is the interest balancing figure? Means approximately we are doing correct only. 7938. Understood? Means what journal entry we are doing? Journal entry is what? Interest cost, current service cost to what? Present value of DBO. This is journal entry. This interest cost will be transferred to PL. This current service cost will be transferred to PL. This current service cost will be shown under the head EB expense. This interest cost will be shown under the head finance expense. Understood this point? Have you understood? Correct. Now just try to understand. Right now we are in which year? Year 1 now. Right now we are in year 1. Correct. We are into year 1. Means we are preparing financial statement for year 1. Correct. Can I say in year 2 reassessment is required? There may be some changes in actuarial assumption or not. Means just try to understand. In year 2, just try to understand. Can I say this may change? Abhi we have estimated that he will retire after 5 years. This may change or not? Can I say this may change? This may change. This is known as changes in actuarial assumption. Any changes in actuarial assumption, can I say my opening balance in the second year will also change? Means just try to understand what I am saying. This is opening balance as per old assumption. But as per new assumption, this will change or not? So any changes in opening balance of liability due to changes in actuarial assumption is known as actuarial gain or loss on DBO. Have you understood this point? One second. Abhi right now we are into year 1. Year 1 accounting done. But in year 2, assumption may change. If assumption will change, we will require reassessment. So due to that reassessment, my opening balance will change. Opening balance change due to changes in actuarial assumption. So that changes, increase or decrease in opening balance due to changes in is known as what? Actuarial gain or loss. That actual gain or loss will be transferred to OCI as remeasurement gain or loss, and that will not be recycled to PL. Understood? However, in exam, is in ICAI book, they have not given how to calculate actual gain loss. Means they are giving actual gain loss in the question, we need to only pass journal entry. Correct? However, can I say if they have given new assumption, we can do the recalculation. So can I say you can also always find out this opening balance as per new assumption? Suppose I have said now the discount rate is 10% at 10%, 20%, 12%. So entire calculation will change. So can you find out opening balance based on what? 12%. So if you can find out opening balance based on 12%, what will happen? There is some increase or decrease. That increase or decrease will be known as what? Actually gain or loss. Understood? I mean, exam they will not ask that calculation. Can I read now? Correct? Just try to understand what they want to say. Accounting treatment of DBO. Current service cost. Current service cost is an increase in the present value of DBO resulting from employee service during the current period. What journal entry will do? Current service cost account debit to present value of DBO. DBO means defined benefit obligation, or you can say defined benefit liability. Both are same. Then actual gain or loss are changes in the present value of DBO resulting from either experience adjustment. Experience adjustment means difference between estimation and actual information. Means in the last year there will be some actual expense. So experience adjustment means the effect of difference between previous actuarial assumption and what has actually occurred, and the effect of changes in actuarial assumption. This actuarial gain loss will be recognized in OCI without recycling to PL as remeasurement gain loss. So what journal entry for loss? My liability will increase. So my journal entry will what? Remeasurement loss transferred to OCI to what? To present value of DBO. If gain, then present value of DBO to remeasurement gain transferred to OCI. Interest cost is always calculated by applying what? Discount rate on opening balance of DBO after changes in actuarial assumption. Correct? Means in new opening balance. Can I say in this way? Understood? So interest cost to present value DBO, this will come. Understood? This much. Any doubt? No doubt? No doubt. Now, normally just try to understand now. One part over. Normally they will ask this question only if they will ask whatever I have said. Or they will give you some reconciliation statement that we can do after completion of second part. But this is very easy, na? Very easy. Everyone. Now just try to suppose this is what? Entity and this is employee. Correct? Can I say entity knows that on retirement they need to pay some use amount? Whenever we have some obligation with an use amount, we should plan it or not? We should plan it. However, there is no legal requirement to plan, but always entity will plan their expenditure. For example, I know that after 20 years, right now my elder son is what of 10 years. But I have done planning from last 10 years, I am doing planning for him. I have two sons and son are always nalayak. So I need to plan or not? Always, maha nalayak. Correct? They will to pakka never become CA. So I need to plan on that. I need to plan na. I understood they will not become CA. Correct now. So I need to plan their life or not? My father has not planned my life because he has faith on me. But I need to plan na. Are bolna emotional father, Indian father. Simple. So from last, not from initial, but last 5 years I am planning. From my earning, some amount I am depositing somewhere. So that once he become 18 years or 20 years for higher education required, because he will not do CA, so is very inexpensive course. But if he will do MBA or what, he will go to what, some foreign countries, so you know how much amount is required. It's a very inexpensive course. It is the best course, I will say. Less expenditure, high return. Correct? But for nalayak, need to plan na. So I am depositing some amount so that amount become 1 crore. At the age of what? 18 year or 20 year. The planning is that the amount should become 1 crore because I know 1 crore will be required at that point of time. This is planning na. Because I know expenditure by 1 crore, chalo theek hai, if he suppose he don't want to do higher education, the for business will be required. My business so he can't carry because I am to be a teacher, he will not become CA. And even though he becomes CA, he can't teach FR na. So my profession so he can't carry on. So I need to give some money for business. Some investment was required. So for that also I am planning. Chalo kuch nahi, for marriage so required na. Because after 10 years, 20 years, the boy need to give dowry. The reverse situation is going to come. The change of pattern. You will see now boys need to give what? Dowry. So we need to give dowry na. So for that also planning is required. Everything I am planning. Pura full plan. Correct? And so see hai na, the planning karna padta hai. But what I want to say, whenever you use expenditure, we need to plan or not. Therefore, can I say, they will contribute some amount to a separate entity. Correct? But can I say, in this case, this is not required, employee contribution is not required? Because there is no legal obligation to contribute for getting contribution from employee. For DCP, both contribution is legally required. But in this case, only who will contribute? Entity will contribute. Correct now. To a separate entity. This entity is known as plan asset. We call it what? Plan asset. Correct. And of course, this separate entity will do further investment. They will get some return, etc. Now, my question to you all, on retirement, under DCP, defined contribution plan, on retirement, this plan asset will pay to whom? Employee. But in this DBP, plan asset will pay to whom? Are you able to understand what I'm saying? Under DCP, plan asset will pay directly to employee. But under DBP, plan asset will pay to employee or employer? No, employer. Why employee? There is no legal obligation. Who will get the money? Employer will get. Now employer will pay to whom? Employee. But I am doing investment now, so I will get na. There is a legal obligation to contribute to their plan asset will directly pay to what? Employee. Here there is no legal obligation. So can I say here, whatever amount is payable to whom? My question to you all, it means the risk of this planning will be borne by whom? Employer. Therefore, it is not an expense, this is an investment. Bolo yes or no? Investment. Therefore, plan assets should be also recognized as an asset in the balance sheet of what? Entity. There are two types of risks. One is known as investment risk. One is known as actuarial risk. Investment risk means what? Decline in the value of investment. Actuarial risk means what? Getting less than expected. Suppose your expectation is that you will get 80 marks in FR, but you are getting 60. Will you be happy? Your expectation is that you will get 80, but if you are getting 60, will you be happy? No, now. For 1 second you will be unhappy na. Then you will say acha pass, then you will become happy na. But 1 second you will feel 80 marks, why you got 60? Correct na? Means your expectation was how much? But you are getting less than expected. This is known as actuarial risk. You are expecting that you will get a return of 10%, but you are getting a return of 8%. This is known as actuarial risk. Both fall on to whom? Employer. Therefore, this become asset of employer. Therefore, plan asset will recognize in the balance sheet of employer. So it means now we need to understand the accounting treatment of plan asset. And accounting treatment of plan asset is more important than whatever we have done till now. Means normally in exam they ask plan asset. I don't know why. But have you understood this? So now next topic is accounting treatment of plan asset. Understood what we are discussing? So first, for contribution to plan asset, what will be journal entry? Plan asset account debit to cash or bank. Now for benefit paid out of plan asset, benefit paid means first we'll withdraw amount and then we'll pay to what? Employee. There are two journal entry. First withdrawal what journal entry? Cash and bank to plan asset. Then payment what journal entry? Liability will decrease na. Present value of DBO to cash or bank. So whenever we say benefit paid out of plan asset, can I say it will affect both plan asset and DBO? Means what journal entry? Cash and bank to plan asset and DBO account debit to cash and bank. Correct? Yes sir. Whenever question is silent, they said benefit paid. So this amount and this amount will be always equal if question is silent. Means whatever you are withdrawing, that only you are paying. Practically it can be different also. But in exam it will be same. Correct. Then for recognizing interest income on plan asset by using what? Discount rate. So can you just try to understand? Discount rate is one expectation. Means this is our minimum expectation. This much return should be generated, but actual return may be different. So first what they are saying, recognize interest income based on discount rate. Means this is one type of expected income. Expected income. Expected income. So what journal entry? Plan asset to interest income. So plan asset to interest income, but applying what? Discount rate. Discount rate. There was some other view in AS 15. This you don't read. Not required now. AS 15 I used to discuss in what? AS 15 is what? In AS 19 na? This you understood? Correct. Now, can you say actual return may be different from expected income? Just try to understand. You have recognized 5,000. But your actual return is what? 10,000. Quite possible. Or your actual return may be 4,000. So what Ind AS 19 says that the difference between these two is actually gain or loss. Means this will result in gain, this result in loss. So this will be known as actuarial gain or loss on plan asset, which will be also transferred to OCI as remeasurement gain or loss. So it means we need to find out actual return. We need to find out actual return, that is known as remeasurement gain or loss. Correct? Means actual return on plan asset excluding amount included in net interest on defined benefit, means this is nothing but I will say actual return minus interest income already recognized. This is known as what? Actuarial gain or loss. Means you can add on formula actual return minus, I'm not saying actuarial, I'm saying actual, ACTUAL, actual return minus what? Interest income calculated by using what? Discount rate. The difference is known as what? Actuarial gain or loss. Actuarial gain or loss. Are you able to understand what I am saying? Huh? Are you able to follow me? The difference is known as actuarial gain or loss. This actuarial gain or loss will be also transferred to OCI as remeasurement gain or loss without or with recycling. Without recycling. Understood? So Jana entry gain means plan asset will increase, plan asset to actuarial gain. Loss means plan asset will decrease. So actuarial loss to what? Plan asset. Understood? Have you understood? Correct? Can I take one question based on this? This question was given in RTP. On 1st April 2000, the fair value of plan asset was 10 lakh. Plan paid a benefit of rupees 1,90,000 and received contribution of 4,90,000 on 30th September 2000. The company compute the fair value of plan asset to be 15 lakh on 31st March 2001 and the present value of DBO is itna, and actuarial loss on DBO is 6,000. Actual loss on DBO is 6,000, but we need to calculate actuarial gain loss on plan asset. This is on DBO. There are two actuarial gain loss, one DBO and one plan asset. Compounding happen half yearly. Half yearly. The normal interest rate is normal interest rate for 6-month period is 10% per annum, with the effective rate for 12-month period is based on following data. The company made the following estimate based on market prices at date. This is all information is bakwas, but they have given 10.25% effective rate of interest. Acha, 10% compounded half yearly. 10% per annum compounded half yearly. 10% per annum compounded half yearly. Because you have done SFM. Can you give me what is the effective rate of interest? If I am saying 10% per annum compounded half yearly, so what will be the effective annual rate of interest? 5%. Arey Baba. Chalo, I will show you. Can I say if I am saying 10% compounded half yearly, so if suppose 100, we will do first 10% into what? 6 by 12. This will become 10. This will become 5. Then for next 6 months, we'll do 105. Compounded na, interest will be compounded. Into 10% into 6 by 12. How much it is coming? 5.25. Total become what? 10.25. Means this 10.25 is what? Effective rate of interest for entire 12 months. So can I say 10% per annum compounded half yearly is equal to 10.25% per annum effective rate of interest? Both are same or not? Both are same or not? Both are same. Means can I say both are same? So both are same. But this is what? Effective annual rate of interest. Students who are not good in mathematics, after so much explanation, they are dying with the solutions, suggested solution. Those who are not good in mathematics. And therefore, in CA foundation, there was mathematics. Understood now? Because ICAI knows that we require mathematics. We also require small mathematics. Now we don't require differentiation, we don't require integration, but we require this now. FM is totally what? Mathematics. SFM is also totally mathematics. Bolo, standard deviation that you are doing now. Correlation, regression, you are doing where? In SFM you are doing or not? Are bolna rahe? Correct. So it requires, but I hope you have understood this. So first I have explained this. Determine actual return, expected return on plan asset, and also compute the amount to be recognized in OCI. Can I say, even though this information was not given, you could have done? You could have done or not? Because we want discount rate, and discount rate is given 10% per annum half yearly. Correct. Now let us come. First we'll calculate actual return. First we'll calculate actual return. Actual return means what? Fair value. You will give me the amount, huh? Fair value of plan asset at year end. Can you give me? How much? 15. Correct. Then we'll we'll compare this with book value of plan asset at year end. This we need to calculate. This is nothing but fair value of plan asset at year beginning. How much? 10 lakh. Can is the contribution received will be added? How much contribution received? Minus benefit paid how much? Benefit paid how much? 1,90,000. This become how much? 13 lakh. So you can see fair value at the end is 15 lakh and this is 13 lakh. So how much increase? So this become actual return. This is the actual return. Understood? Correct. Now we'll find out what? Interest income. Calculated by applying what? Applying discount rate. So let us use 10% only. So first we'll find out first half. Can I say initially it was only 10 lakh first opening balance into 10% into 6 by 12 how much? 50,000. Then can I say second half will calculate? It is given that contribution paid or received was at the mid of the year only. So this 10 lakh will be increased by what? This 10 lakh will be increased by first amount of contribution because that was done at the mid of the year. Correct. And decrease by and then increase by this become how much? 13 lakh into what? Into what? 6 by 12. How much? Are you able to understand what I am doing? 67,000. Total become correct. ICAI has given this solution or we have done in this way. This is 1,17,000. ICAI has given this solution. ICAI is saying that, listen, it is on 10 lakh, What is the effective rate of interest? 10.25% for the entire 12 months. How much it is coming? Then how much came at the mid of the year? Extra 3 lakh. This come at the mid of the year. We'll apply 10% into what? 6 by 12. How much? Understood? This 3 lakh how came? 3 lakh understood? 3 lakh understood how much? This 3 lakh you understood now? 4 lakh 90 minus 1 lakh 90. How much interest? Same answer is coming or not? They have given answer in this way. Look, both answers are same or not? I will say do easy one now. Why you are doing? Why you are taking long path? Yeah, this is what mathematics na. But we are not good in mathematics. To apply this now, we are good in this na. Can I say everyone can do this? And there is so many doubts, so much doubt about this. What can I say? Lot of doubt. See how this came, sir? Why, sir? First 10.25, then 10%. Can I explain this in message? If someone is asking me doubts, can I explain? Can I explain this in call? Not possible. How? Without face expression, nothing can be understood. You require face like this, like this, like this. Call whether you will be able to understand. You say teacher pagal ho gaya hai. Yes, I know you will not be able to understand if I will explain also. You say teacher ko goli maro. But have you understood now? Correct. Now, what is the actual gain or loss? Batao. Third will calculate. What is your actual return? 2 lakh. How much interest income? How much extra? That become actuarial gain. How much actuarial gain? Have you understood? This is actuarial gain on what? Plan asset. They have given one actuarial loss on what? Defined benefit obligation. How much? So can you say what? In days 19 say this net amount will be transferred to what? OCI. So what is the net actuarial gain or loss? 76,500. This question will come for 8 marks. But for 8 marks, lollipop question or not? Follow. Now you can read the solution. Same thing is given. Check kar lo. Read the solution. This calculation I hope you have understood now. This 2 lakh you have understood. This 76,500 you understood. This question will come for 8 marks. I am saying 8 marks. Chalo minimum 6 marks to pakka. But what is this? Nothing. Chalo. One more point. Suppose in this question they have given this contribution and benefit paid at what? Mid of the year. Suppose they have said at the end of the year. Suppose they have said at the end of the year. Quite possible. Then how to calculate interest income? Understood? And suppose 10% per annum which is not compounded half yearly. They may give the also. So can you see we'll do what? 10 lakh into 10% for entire 12 months. So only 1 lakh will be interest income now. If the contribution paid, contribution received and benefit paid at the end of the year, then no interest on that. Then no interest on that. Understood? Whenever they have given at the mid, then we should think about interest. Otherwise, don't think interest. Understood? Correct? Got it? I hope this also you have understood. Any doubt? You can read this. Note you can read. Correct. Then next point. Past service cost. Now what is the past service cost? What they want to say? Anytime when the plan is modified, or a new plan is introduced, or any plan is curtailed, means withdrawn, okay, there is some past service cost. Means if a new plan is amended or modified, so your past service cost, means your past period will be affected or not. Either there will be increase in service cost or decrease in service cost. That is known as past service cost. Correct? Don't worry, in exam they will give past service cost. They will not ask you how to calculate past service cost. Past service cost, whatever is calculated, that is calculated due to a plan amendment or curtailment. Curtailment means what? Reduction in number of employee. So whenever you reduce any employee, there will be some negative past service cost. Means past service cost can be positive or negative. Negative means what? Reduction in expense. Positive means what? Increment in expense. So this past service cost may arise due to plan amendment or curtailment. Whenever past service cost is there, recognize it as an expense immediately, whether the plan is vested or unvested. Whether the plan is vested or unvested. Understood? Only this much. So it means this past service cost to present value DBO, if past service cost is positive. Positive means increase in liability. If negative, then reverse entry. But this will be recognized as an expense whether the plan is vested or unvested. Immediately it will be recognized as an expense. Immediately recognized as an expense, immediately. Understood? Done? Then next, gain or loss on settlement. Now just try to understand. Whenever we pay the liability, so whatever carrying amount is of liability is coming, that will be compared with settlement price. If settlement price and the carrying amount of liability is different, there will be gain or loss on settlement. If you are paying more, loss. If you are paying less, gain. This gain or loss on settlement will be transferred to PL. Correct? Means gain or loss on settlement is the difference between the present value of DBO and settlement price. This gain or loss will be recognized in PL in the year in which settlement occur. Simple. Understood? I hope no explanation required. Correct. This you have understood? This you have understood? Now how to present DBO in balance sheet? So what they said, this DBO will be shown in balance sheet by way of deduction from plan asset. Means plan asset is shown by way of deduction from DBO. So we'll need to find out present value of DBO at closing date less fair value of plan asset. Then this will be net liability, net defined benefit liability. Net defined benefit liability. We'll call it what? Net defined benefit liability. Normally, can I say plan asset will be less than what? DBO. Normally. But can I say plan asset can be more than also this? If more than, so this amount become negative. Then it become net defined benefit asset. Now the question is that if it become surplus, means if there is a surplus, then what need to be done? Liability, understood. This liability will be shown under the head non-current liability in provision. It will be shown under provision under the head non-current liability. But if there is a surplus amount, when surplus will come? When plan asset is more than DBO. Correct? So what they say, if present value of DBO is less than fair value of plan asset, then plan has surplus. Plan has surplus. But in that case, there is some restriction. There is some restriction. What is that restriction? We need to understand. When an entity has a surplus in a DBO, in a defined benefit plan, it shall measure the net defined benefit asset at a lower of. What they want to say? There may be some agreement between employer and plan asset with separate entity. There may be some agreement. In case of surplus, they will refund the amount, but not now. The amount may be refunded after some time. Or this amount of surplus will be considered as a reduction in contribution, annual contribution. Means can I say amount whatever is surplus will be not refunded today. It will be refunded in what? Some phased manner. So we need to find out present value of that amount, and the present value of that amount is known as asset ceiling. Means this is the amount which we are getting actual refund, that is known as asset ceiling. The present value of amount to be refunded, a present value of amount which is considered as a deduction in annual contribution, we can find out, that is known as what? Asset ceiling. That is known as what? Asset ceiling. So what India says that whenever there is a surplus, the defined whenever there is surplus, it shall measure the net benefit asset, net defined benefit asset at a lower of the surplus and the asset ceiling. Means asset will come in the balance sheet at a lower of surplus or asset ceiling. How to calculate asset ceiling? However, asset ceiling will be given in the question. But how to calculate? It is nothing but present value of any economic benefit available in the form of refund from plan or reduction in future contribution to plan. Can you see, if they have given refund amount at this point of time, you can calculate present value given the discount rate. Or they have given this is the amount to be reduced from the contribution every year, you can calculate the present value of that amount to be reduced. You can find out asset ceiling, but they will not ask that calculation. They will give asset ceiling. You can compare surplus and asset ceiling. Whichever is lower, that will become defined benefit asset. Understood? Understood this point? Correct. Now, from examination point of view, this reconciliation is very important. This reconciliation is very important. Correct. Now, so we need to do a reconciliation of DBO and plan asset. However, we can do on net basis also. Net basis, but I will suggest do on gross basis. Don't do on net basis, but you can do on net basis also. Correct. So, batao. Carrying amount opening balance will be given. Then we'll add current service cost to DBO. This will not come in plan asset. Then net interest income. Net interest income is what? We'll add interest cost to this. Interest income on this by applying discount rate. By applying discount rate. So interest cost will be added to what? DBO. Interest income will be added to what? Plan asset. By applying which rate? Discount rate. Then past service cost, if any, will increase DBO. It will not come in plan asset. Contribution received will come where? In plan asset. Are you able to understand? Benefit paid will come where? Benefit paid. Can I say both? Because benefit paid is withdrawal amount from plan asset and amount paid for DBO. It will result in decrease in both. Then gain or loss on settlement will come यहाँ पर. Are you able to understand? Any remeasurement gain or loss may be in both. Actuarial gain or loss will come in both. And this will become closing balance of DBO and plan asset. This reconciliation is very important from examination point of view. However, in exam, they will give you opening balance, closing balance. You need to find out this actuarial gain or loss as balancing figure. So we can find out. If they have given opening balance, closing balance, we can find out actual gain or loss. This is very important from exam point of view. I will take one question based on this, but let me complete first in DS 19. Only 2 points is left. That is what? Long-term employment benefit. So what I say, long-term employment benefit, same to same post-employment benefit, but the extent is related to defined benefit plan, not DCP, TBP. So if you have understood defined benefit plan, entire calculation is same to same in long-term benefit, only with one difference. Difference is what? The recognition measurement is similar to defined benefit plan with only one difference. In this case, remeasurement gain loss will be transferred to what? PL, not to OCI. In that case, remeasurement gain loss will be transferred to OCI. In this case, remeasurement gain loss will be transferred to PL. Only this is the difference. However, in exam, they normally ask DBP. They don't ask long term. But if they ask you, only one difference is there. Calculation remains same. Everything remains same. Whatever we have done, past service cost, current service cost, interest cost, whatever we have done, same thing will be applied. Then coming to termination benefit. And termination benefit means what? Termination benefit means any amount which is payable due to termination of employee. Either entity has terminated the employee or employee has accepted voluntary retirement. So this will be recognized as an expense and liability when these two conditions are satisfied. There must be present obligation of termination and amount of obligation can be measured reliably. Correct. What Ind AS 19 says that if the amount is payable within 12 months, then this amount will be recognized as undiscounted amount. But if the amount, this termination benefit is payable after 12 months from reporting date, then this will be recognized as discounted amount. Understood? All points done. Ind AS 19 completed. Have you understood this point? Correct. This point. What I said, how to recognize the amount. So what they are saying, termination benefit is payable within 12 months from reporting date. Then what? Undiscounted amount. No discounting is required. But if it is payable after 12 months from reporting date, then the time value of money will be affected now. So apply discounting. Discounting applied, then you know how to recognize interest, expense, etc. Same thing in entire every chapter we are doing this only. Correct? Yes, sir. Now can we take the question? One question I think is pending. This 30 na? Only 30 na? Yeah. This question is important. However, there are some more good questions that you can do by your own. Now, what they have given? A Limited prepares financial statement on 31st March each year. It operates defined retirement benefit plan on behalf of current and former employee. A Limited receive advice from actuaries regarding contribution level and overall liability of plan to pay benefit. On 1st April 2017, the actuary advised that present value of DBO is 6 crore and on the same date the fair value of defined benefit plan is 520. Can we start preparing reconciliation? We will do DBO and plan asset. You can do net basis also if you want. But what is the opening balance? It is 6 crore. And what? How much? 5 crore? 20 lakh. Understood? I am writing by reading the question only. Then, on 1st April 2017, the annual market yield on government is 5%. So it means discount rate. But Ind AS 19 says that discount rate will be market yield on government bond. They have given market yield on government bond discount rate 5%. So can we do plus interest? Can you calculate interest at a rate of 5%? This is how much? How much? 30 lakh na? I am doing a better write down what? In 600. Better can I do in 600 like this? 600 and this is almost 520. Correct? So this is rupees in lakhs na? Rupees in lakhs. So this become 30. This become how much? 26. Then what? During the year, A Limited contribution was 70 lakh. So plus contribution, it will come in plan asset. Correct? And plan paid out benefit 42 lakh. Both these payments were made on 31st March, means at year end. So because contribution was made and benefit was paid on year end, no interest on that. No interest on that. But minus benefit paid how much? 42. You will do minus 42 from both. Correct? Then the actuaries advise that current service cost is how much? 62 lakh. We'll add current service cost. How much? This will not come here. On 28th Feb, the plan were amended, and this amendment increased the defined benefit obligation. Means this is past service cost. 15 lakh is past service cost. We'll add past service cost. How much? 15 lakh. Correct now? Are you able to understand? During the year ended 31st March 2018, A Limited, in negotiation with employee represented regarding planned redundancies, the negotiations were completed shortly before the year end, and the redundancy package were agreed. Means there was some curtailment, some employee redundant. The impact of this redundancy was to reduce the present value of DBO by 80 lakh. Before 31st March, A Limited made a payment of 75 lakh. What was the obligation? How much paid? So what is gain? Gain is what? 5. Correct. So batao. Minus benefit paid how much? 75, 75. Correct now, both. And how much gain? Gain on settlement is what? 5. You can see your DBO will decrease by what? 80. Correct. It is given also in this question that is payment were made from what? Plan asset. Even though not given, we'll assume that only. Whatever we are paying, that we are paying from plan asset now. On 31st March 2018, the actuary advised they have given closing balance 680 and 560. So can you give me first this total though? Have you written this? Can you give me the total? You have not written. Can you give me the total? Which one? 585. Second one? Hmm? 499? Correct. What is the closing balance they have given? 680 and 560. So you can see your liability increases. So it means this is actuarial loss. How much actuarial loss? 95 is actuarial loss. Your plan asset increases. This is actuarial gain. How much actuarial gain? 61. So what is the net actuarial loss? 95 minus 61. How much? 34. 34 na? Net actuarial loss. This net actuarial loss will be transferred to OCI. Understood? Let's see, answer is correct now. Because I am not confident about your calculation. 34. Correct. No, wrong. Correct. Correct only. But in solution they have given on net basis. So you can also do on net basis. But I will suggest do on what? Because net is net. Correct. But in this only, if you are applying net basis, in only one point you can do mistake. What is that point? Let's see. This is what? 80. This is what? 4. This is what? 70. This will be minus now. Because this minus this. This will be minus. Can the benefit paid will not come? Because this will be cancelled. Benefit paid will not come in net basis. Only here you can do mistake. And contribution will be minus. Bolo yes or no? This is 62. This is 15. This benefit paid will not come. This will be minus 5. What is the total coming? Total batao. 86. Whether difference of this is coming 86. 585 minus 499. 86. Correct. Correct na? So you can also do in what? Net basis. But be careful. And this is what? 120. Closing balance difference what? 120. 120 minus 86 what? 34 only. The same answer is coming. Same answer is coming now. Because your net liability increases, so it is an actuarial loss. So you can do on net basis also. Have you understood? Now in this question, because they have asked the presentation in balance sheet, so you have first find out actual gain or loss. This is a part of working note. Have you understood this? Now how to present this in SOPL? But in SOPL, we write on EB expense. Under that we write on current service cost. How much? Current service cost 62. Past service cost past service cost 15. Gain on settlement, the total is this. So this will come under EB expense. Then we write on finance cost. What is the net interest cost? Net interest 4. Are you able to understand what I am doing? Because they have asked presentation in balance sheet and SOPL. This is 72 na? And how much net interest cost? 4. This is PL. Then we write on OCI. In OCI we write on net remeasurement loss. How much remeasurement loss? 34. 34 na? This is extract of SOPL. Then extract of balance sheet. We write on under non-current liability. Heading is provision. Under that we write on net DBO. What is net DBO? What is the net DBO closing balance? 120 na? Net closing balance. Net closing balance. This amount 120. 120 na? So net closing balance is 120. This will come in the balance sheet. Understood? Have you understood? This question is given in RTP till now not asked, but good question. A simplified question is already asked. But in this question only one doubt will come. Doubt is what? You can see this past service cost was actually calculated on 28 Feb. Just see the question. Past service cost was calculated on 28 Feb. You can say 1 month interest should be added or not. Bolo yes or no? Are bolna rahe? This past service cost on 28 Feb, 1 month interest should be calculated or not? 1 month interest should be calculated. Solution is not correct. I don't want to change ICAI solution. What happened? It might happen. This is plan amended on 28 Feb, but normally the effect of any modification is done at year end only. Effect is given at year end. Normally the effect is given at year end practically also. So if the effect is given at year end, then no interest. But as per the language of the question, लगता है it is calculated when? 28 Feb. So as per the wording, so we should add 1 month interest. But ICAI has ignored, so I have also ignored. You also ignored if same questions come. Why to take risk? You know some point, why to take risk? Correct now. But if you are adding also, they should not deduct marks from my point of view. But I have not taken to match with what? ICAI solution. Correct. So in days 19 completed from my point of view. So today I think 108 left. Whatever left, don't worry, we'll do. Okay? But today I think consolidation, one big chapter completed. Big chapter completed. You should say thank you to me. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Hello. Very good morning, everyone. How are you all? Very fine. Now, last class we completed the main chapter consolidation. Okay. Now, today we'll start revision of business combination. Ind AS 103. What is the meaning of business combination? Business combination means in which acquirer obtain control of business of acquiree. It means there are two party. Who are the two party? One is known as acquirer. One is known as acquirer. One is known as acquiree. Correct? Acquirer will obtain what? Control of what? Business of acquiree. Correct? Now the definition of control is as per Ind AS 110. Means whatever you have done, control as per 110 will be applicable in this chapter also. Means control is not defined under Ind AS 103, is already defined under Ind AS 110. Correct. Now in this chapter, acquirer means what? Accounting acquirer. Accounting acquirer. Correct. And acquiree means accounting acquiree. Correct. It means accounting acquirer may or may not be legal acquirer. Legal acquirer and accounting acquirer may be same or may be different. If legal acquirer is not accounting acquirer, then that concept is known as reverse acquisition. Reverse acquisition we'll discuss, but whenever we say acquirer in this chapter, so acquirer will mean what? Accounting acquirer, not legal acquirer. So it means Ind AS 103 is applicable in the books of Ind AS 103 will be applicable in the books of accounting acquirer, not acquiree. We don't apply Ind AS 103 in the books of accounting acquiree. We apply Ind AS 103 in the books of accounting acquirer. This much you understood? Yes, sir. Now, acquirer, we understood that entity that obtain control of the business of another entity. Acquirer is also known as accounting acquirer. Accounting acquirer may or may not be equal to legal acquirer. We'll understand a case when it may not be equal to legal acquirer. What can be the case? Control already defined under Ind AS 110. Acquiring means entity whose business has been acquired by accounting acquirer. Means, can I say, just try to understand. When I am saying business combination, so under business combination, control should be obtained. So this control can be obtained in two ways. This control can be obtained in two ways. Either by acquiring substantial equity shares of another entity. Correct? Either by acquiring what? Substantial equity shares of another entity. Correct? Or by acquiring what? Directly one or more business, or all business of what? Another entity. I hope you are understanding whatever I am saying. Correct? Or by acquiring directly
either one or more business or all business of another entity. Correct? Yeah, this is nothing but formation of what? Formation of subsidiary. Formation of subsidiary. Correct? Understood? So this to already we have covered in which chapter? Consolidation. When I am saying formation of subsidiary, already we have done that on the date when control is obtained by parent in what subsidiary. Ind AS 103 is applicable. So already this topic has been covered. Correct? Means in this chapter we'll mainly concentrate on this. We'll mainly concentrate in this when control is obtained by directly acquiring the business. Means can I say in this case either one or more business will be acquired, one or more business will be acquired, or all entire business will be acquired. Entire business will be acquired. When I am saying entire business will be acquired, so can I say in this case acquiree, in this case acquiree will be liquidated. Will be liquidated. Correct? Acquiree will be liquidated, and this case will this will be means this form of restructuring is known as amalgamation. We have done amalgamation. Where we have done amalgamation? Under AS 14, see enter. It will also include what? Absorption. It will also include absorption. Correct? So when all business are acquired, to the other entity will be liquidated. This mainly consists of amalgamation, absorption, etc. Correct? But when we say only one or more business is acquired, but not entire business is acquired, it means acquiree is not. It means acquiree is not liquidated. Are you getting what I am saying? Acquiree is not liquidated. So in this case, it consists of demerger. It consists of demerger, or we can say sale and purchase of business. Sale and purchase of business, only business means, can I say one entity may have many business, so only one business has been sold. Correct? That will be also covered in this topic. Have you understood this point? This point have you understood? Means in this case you see the entire thing is concentrated on business. Means we need to understand whether business has been acquired or not. Whether business has been acquired or not. So what Ind AS 103 says that? What Ind AS 103 says that first we need to understand that whether transfer of net asset, whether it constitute business, or it does not constitute business. I hope you are understanding what I am saying. Means it might happen that you purchase group of assets and liability. If you purchase group of assets and liability, so it may constitute a business, it may not constitute a business. If it constitute a business, then only what is applicable? Ind AS 103 is applicable. If it does not constitute a business, then Ind AS 103 is not applicable. Then Ind AS 103 is not applicable. Correct? So this is known as assets acquisition. Assets acquisition. So suppose you purchase property, plant and equipment, investment property, etc. Group of assets. I am not saying single asset. If you are purchasing only PP, Ind AS 16 is applicable. If you are purchasing only investment property, what is applicable? Ind AS 40 is applicable. But suppose you purchase group of asset. The group of asset may be what? PP, investment property, debtor, etc. then it is known as assets acquisition. We have purchased either group of asset, correct? So it is known as what? Asset acquisition. Now for this asset acquisition, when we purchase assets from an entity, group of asset, so there is no Ind AS. Ind AS 103 is not applicable, and there is no specific Ind AS also. Therefore, some guidance has been given under this Ind AS only, what will be the accounting treatment whenever we purchase group of asset which do not constitute business, correct? But can I say, in this overall discussion we have understood that first we need to understand what constitute a business, because if it constitute a business, then only what is applicable? Ind AS 103 will be applicable. It means first we need to understand what is the meaning of business. What is the meaning of business? Correct. It means now let us come to the meaning of business. Correct. What is the meaning of business? What Ind AS 103 says? Ind AS 103 says that a business is an integrated set of activities and assets. It is an integrated set of activities and business that is capable of being conducted and managed. That is capable of being conducted and managed for the purpose of what? Providing goods or services to the customer. Providing goods or services to the customer, for generating investment income, or for generating any other income from ordinary activities. Means when I am saying a business consists of integrated set of activities and what? Asset. Means can I say this is input? This is input. Means there must be some input, correct, which is capable of being conducted and managed. Means it should be processed, correct, and for the purpose of generating what? Output. For the purpose of generating output. So there must be output. There must be output. And can I say this output is nothing but revenue? This output is nothing but revenue. Can I say revenue means income from ordinary activities? When I am saying revenue, revenue means income from ordinary activities. We have not done Ind AS 105 till now. So revenue means income. So all incomes are not revenue. So only income from ordinary activities are revenue. So for generating what? Revenue. For generating revenue, then it will constitute what? A business. So there must be input. Input will be what? Input will be means many assets which are conducted and managed. Means there should be some workforce, correct, which will apply the process in the input, and after applying process in the input, that should be capable of generating what? Output. That should be capable of generating output. So what are three elements of the definition of business? Input, process and output. But output is not the requirement. The group of assets must be capable of generating output. Means output is not required on acquisition date. If it is capable of generating output, then also it will meet the definition of what? Business, correct? So what they want to say, a business consists of what? Input and process that have ability to generate what? Output. That have ability to generate output, correct? It means output is not required for integrated set of activities and assets to qualify for the definition of business. So what is required? Input is required, process is required, and that when process applied in the input, that must be capable of generating output. Understood? It means can I say to qualify for the definition of business, an integrated set of activities and assets must include at a minimum an input and a substantive process. Now we need to understand what is the meaning of substantive process. So there is a process must be substantive. So what is the meaning of substantive process? So what is required? Input is required, substantive process is required, that together significantly contribute to the ability for creation of output. Understood? Now just try to understand. It means can I say whenever a group of assets and liability acquired, we need to first analyze We need to first analyze whether it constitute a business or not. Then only we can apply what? Ind AS 103. So guys, this analysis requires some effort. Therefore, Ind AS 103 has given a simplified approach. Simplified approach. What is that simplified approach? That simplified approach is an optional test. Is an optional test. So what Ind AS 103 say that one test is there that is an option to you. If you want to apply that test, so you can apply. Otherwise, you can apply the guidance given under Ind AS 103. Are you able to understand that optional test is known as concentration test? That optional test is known as what? Concentration test. So what they have given, an optional test is given. An optional test means what? Entity may or may not opt for the test. Correct? So what is given? Optional test. That test is known as what? Concentration test. That test is known as concentration test. To permit a simplified assessment whether an acquired set of activities and asset is a business or is not a business. Correct? Understood? Means this test is to identify whether it is not a business. Correct? Understood? Means what Ind AS 103 want to say that, does the entity want to apply the concentration test? If yes, then apply. If no, then consider general guidance. No, then consider general guidance means do the assessment of input, process and ability to create output. That is the general guidance. So if they want to apply concentration test, what concentration test says that we need to understand. So what they want to say is substantially all the fair value of gross asset acquired concentrated in a single identifiable asset. Is substantially all the fair value of gross asset acquired is concentrated in a single identifiable asset. If yes, test is passed and it is not a business. So can I say in this way, if substantially all the fair value of gross asset acquired is concentrated in a single identifiable asset, it is not a business. If it is not passed, then there is one more condition. What is that condition? Is substantially all the fair value of gross asset acquired is concentrated in a group of similar identifiable asset. Means is concentrated in a group of similar identifiable asset. If yes, then also test passed and it is not a business. And if no, then it does not mean it is a business. If no, then consider what? General guidance. If the test is failed, it does not mean it is a business. If the test is failed, then once again apply what? The general guidelines. What is general guidance that we need to understand? Correct. First, can I say in this concentration test, we need to understand what is the meaning of fair value of gross asset acquired. We need to understand what is the fair value of gross asset acquired. Understood this much? So what is the concentration test? Concentration test will be satisfied if substantially all the fair value of gross asset acquired. Correct? All the fair value of gross asset acquired is concentrated in either single identifiable asset or group of similar identifiable asset. Correct? Means let me explain. We know one formula. Formula is what? PC minus fair value of INA is equal to goodwill. We know this formula. Correct. If I split it, it is PC minus fair value of all asset plus fair value of all liabilities. I hope you understood why I have given plus, because it was in bracket minus plus is equal to goodwill. Can I say in this way? This is nothing but fair value of all asset plus goodwill is equal to PC plus fair value of all liabilities. Can I say in this way? Correct? Can I say this asset include what? Cash and cash equivalent. Correct. This will also include DTA, and this will also include goodwill, means this will also include goodwill due to what? Creation of DTL. Correct. We have done under India's 12 that whenever there is a business combination on initial recognition of assets and liability, we need to create DT and DTL. So whenever we create DTL, if my liability will increase, my goodwill will increase. So due to creation of DTL, some goodwill is created. Due to creation of DTL, some goodwill is created. Have you understood this point? Well, this is not considered, means when, just try to understand, whenever you are acquiring a business, will you pay any extra for cash and cash equivalent? No. Means suppose 100 lakh is cash. So if you acquire 100 lakh, you will give 100 lakh only now. Correct? So this all asset, whenever you are acquiring, the intention is not to acquire cash and cash equivalent. Intention is not to acquire DTA. Intention is not to acquire goodwill, which is due to what? DTL. Therefore, it should be removed. Therefore, it should be eliminated. Therefore, it should be eliminated. So if you want to eliminate, what will be the formula? Fair value of asset plus goodwill is equal to PC plus fair value of all liabilities minus what? Minus all these three. So this is known as fair value of gross asset acquired. So whenever you are acquiring, the intention is to acquire asset and goodwill. So this becomes fair value of all asset, gross asset acquired. Understood? So what is the formula to calculate fair value of gross asset acquired? It means PC plus fair value of all liabilities minus cash and cash equivalent minus DTA minus goodwill due to DTL. And this liability will include DTL, so that should be also excluded. So liability will be excluding what? DTL. Or can I say fair value of gross asset acquired is nothing but equal to fair value of asset excluding cash and cash equivalent, excluding DTA and goodwill. We know how to calculate goodwill. We know how to calculate goodwill. So what they have given? They have given a formula to calculate fair value of gross asset acquired. So that formula is nothing but whatever we have discussed. It means fair value of consideration transferred plus fair value of any non-controlling interest plus the fair value of any previously held equity interest. Okay, this is total PC. This total PC already we have understood in consolidation chapter. Already we have understood this in consolidation chapter. This is total PC. We'll add what? Fair value of liability assumed minus what? Other than deferred tax liability. This will be added. From this we'll deduct following item: cash and cash equivalent, DTA, goodwill relating to the goodwill resulting from the effect of DTL. If we deduct this become what? Fair value of gross asset acquired. Understood? Or can I say it is nothing but equal to fair value of identifiable asset excluding cash and cash equivalent, excluding DTA. Correct. And in this, if I add goodwill, this is what? Fair value of gross asset acquired. Now you know how to calculate goodwill. Formula we know how to calculate goodwill. What is the formula? Fair value of consideration transferred plus fair value of previously held equity interest plus fair value of NCI minus fair value of INA, that is goodwill. If you add these two, this is nothing but fair value of gross asset acquired. Understood? Have you understood? Means what they want to say, first calculate fair value of gross asset acquired. You can now calculate it. Correct? Understood? Now if it is concentrated in a single asset or group of similar identifiable asset, then the concentration test will be passed and it is not a business. Have you understood? Means suppose this amount is 1000 lakhs and you purchase one building whose fair value is 950. Correct? It means 950 divided by 1000 is 95%. Means whatever you are paying for acquisition of building only. Means you are acquiring building now. It means it is not a business. Correct? It is quite possible that you have three building 1, building 2, building 3. It consists of 950. It is group of similar identifiable asset. Then also it is not a business. Therefore it is not a business. Understood? This is concentration test. But if you do not want to apply concentration test or concentration test is failed, then you need to apply general guidelines. So we need to now understand how to apply general guidelines. Correct? Understood? There is one amendment in this. Not amendment for this attempt. It previously only amended. But no question have been asked from this topic. Therefore it become important. Are you getting? Means we are expecting some question in last two attempt. But in last two attempt no question was asked. So it means no question can be asked. Are you able to understand? So it is an important topic from examination point of view, because till now no question have been asked on this. Correct? Any doubt? Have you understood concentration test? Have you understood concentration test? Now, if the concentration test fail or entity opt not to apply what? Concentration test, then the entity need to consider the minimum requirement to meet the definition of business. Correct? What is the minimum requirement? Minimum requirement is input, process and output. Correct? Understood? So input means what? Input means what? Can I say? An economic resource that create or has the ability to create output. For example, PP, intangible asset, ROU asset, intellectual property. Means you can see in this classroom, all the assets are input. Now we require process. So any process, for example, strategic management process, operational process, resource management process, there should be some process. And when that process applied in the input, that should have the ability to create revenue. Then if this is fulfilled, means there is input, output and ability to create, input, process and ability to create output, then it will be known as what? Business. But along this, one more point they have added in the amendment. The process should be now substantive. So how we'll understand a process is substantive? So what they say in this, is the acquired process substantive? If the acquired process is substantive, then only it is a business, otherwise it is not a business. So what they want to say, there are two situations. What they want to say, if a set of activities, an asset does not have output on acquisition date, means it might happen there is no output on acquisition date, means it can be a startup business. Startup business may there is input as well as process, but they have not started business. They may not be output on acquisition date, but have the ability to create output. So whether the process is substantive, that we need to understand. So what they want to say, an acquired process or group of process shall be considered as substantive only if two conditions are satisfied. Correct? First condition, process is critical, means the process is essential. Process is critical means process is essential. Correct? To develop or convert the acquired input into output. Correct now. So of course the process, suppose just try to understand, you acquire my business. So that process is critical to convert input into output. Correct? Understood. Second condition what they said, Input acquired include both an organized skilled workforce, means entire workforce is also acquired. Input acquired must include what? Organized skilled workforce and other input. Another input which organized skilled workforce, correct now, develop or convert into what? Output. This is simple what I will say, two conditions. Process is critical and input should include organized skilled workforce and other input. If these two conditions are satisfied, process are substantive. Therefore, it will constitute a business. The first condition is what? Process is critical. Second, input acquired include organized skilled workforce and other input. Means whenever question is given, so just find out, because process will be critical from the information given the question. Means from the information given the question, you will be easily able to understand, yes, process is critical. Only you need to understand whether organized skilled force is also acquired or not. If that is not acquired, it is not a business. Correct. Second point, if set of activities and asset has output on acquisition date, means on acquisition date there is output, means already they are developing output, already the process is a process when applied into input, they are creating output. So they have given two conditions, A or B. Any one condition is satisfied, it will be what? Business. They have given two conditions, A or B. In the first, A and B. In this was A and B. If both conditions satisfied, it will be business. In this case, they have given two, A or B. Any one condition satisfied, it will be a business. So what they want to say? An acquired process or group of process shall be considered substantive if process is critical. Once again they say process is critical to continue producing output, and the input acquired include an organized skilled workforce. With similar condition, process is critical and input acquired include what? Organized skilled workforce. Simple. Or what they said, process is considered unique. The process is unique or scarce, means what? It is very rare, it is very unique or very rare, or cannot be replaced without significant cost. Means that process cannot be replaced by any other process without incurring significant cost. So can you see that process, whatever you have acquired, that is substantive only? Means you cannot apply your own process. You cannot apply your own process. You need to use that process only. In this point number B, you can see if the process is considered unique or scarce or cannot be replaced, even though you do not acquire organized skilled workforce, then also it will constitute what? Business. Means if you see in this, they should acquire what? Organized skilled workforce. In this also they should acquire what? Organized skilled workforce. But if the process is unique, then even though they do not acquire what? Organized skilled workforce, then also it will constitute what? Business. Understood? Have you understood this point? Correct. I think you have understood. Means if I just say in this way, whenever integrated set of activities and asset is acquired, so whether it will constitute a business or not. Correct? Then first you can apply what? Concentration test applied. passed. Test is passed. Not a business. Test is failed. Correct? Understood? Concentration test not applied. Apply what? General guidance. General guidance means what? Identify first input. Then what? Process. Then ability to create. Output. If not identified, can I say not a business? If identified, then to find out whether the process acquired is substantive. If no, then it is not a business. If yes, then only it is a business. Understood? Have you understood this? What I have said? Correct? Have you understood? Means in exam one question can be asked. Normally I am expecting they will ask a question on concentration test, and that too they will ask you to calculate what? Fair value of gross asset acquired. I think that can be one good question from examination point of view. Understood? Can I proceed? Can I proceed? Now let us come to the scope of Ind AS 103. So I think we have understood that Ind AS 103 is not applicable to formation of joint arrangement, because for formation of joint arrangement Ind AS 111 is applicable. Correct? It is not applicable to acquisition of an asset or group of asset that does not constitute a business. But even though it is not applicable to asset acquisition, but then also Ind AS 103 has given a guidance for accounting treatment of such acquisition. So in case of asset acquisition, when I am saying asset acquisition, it means group of asset acquired. Correct? So in that case, what guidance has been given, that we need to understand. So what Ind AS 103 says, this is guidance. Means Ind AS 103 is not applicable, only a guidance has been given. Correct? So in such acquisition, acquirer say identify and recognize identifiable net asset acquired, and the purchase consideration paid or transferred should be allocated to individual asset in the ratio of fair value of asset on the date of acquisition. It means we will not recognize any goodwill or gain on bargain purchase. Understood? Means I have just taken one simple example. A Limited purchase following asset and liability from B Limited which do not constitute a business. You can see property, plant and equipment, investment property, inventory, debtor, creditor. Fair value is given, carrying amount is given. This is not relevant. Correct. Consideration paid in cash is 10 lakh and it does not constitute a business. It is given the question only. So what journal entry will do? PP account debit, IP account debit, inventory account debit, debtor account debit to creditor to bank. So can you say this is consideration and 90,000 is the fair value of liability. So creditor will be 90,000 only. Can you see if liability was not acquired, then your PC would be 10 lakh 90,000. Means actually it means 10 lakh 90,000 you are paying for what? Acquisition of group of asset. So this 10 lakh 90,000 will be allocated to all these assets in the ratio of their fair value. In the ratio of their fair value, and automatically goodwill will not be recognized. Automatically goodwill will not be recognized. Now just try to understand. A Limited acquire 90% equity shares of B Limited. Correct? Batao. This is a parent, this is subsidiary, but this assets and liability does not constitute a business. Quite possible. Means suppose in the balance sheet of B Limited only there is one investment property, only one asset. Quite possible because we form many companies and only land will be there. You will see. This is to avoid tax. Now A Limited acquire 90% equity shares of B Limited. But in the books of A Limited, will you apply Ind AS 103? No. Correct? Means on the date of acquisition, what journal entry will do? Investment property account debit to bank or to equity shares, whatever. Correct? Suppose PC is what? 10 crore. So this will be also 10 crore. Understood? These two you have understood. Now the question arises whether A Limited will prepare consolidated financial statement with B Limited. Ind AS 103 is not applicable. But A is a parent and B is a subsidiary now. Whether A will prepare CFS with B. Yes or no? Yes. It means what they want to say, this point, as per Ind AS 110, an entity must consolidate all entities that it control. Either it constitute business or asset acquisition. Means whether it is a business acquisition or asset acquisition, parent company will consolidate all its subsidiaries as per what? Ind AS 110. On the date of acquisition, Ind AS 103 is not applicable. Understood this point? Yes, sir. Acha, in this NCA will also come. Now I forgot. NCA will also come. Same amount NCA will also come. Correct? NCA will also come na in this journal entry. But goodwill will not come. Gain on bargain purchase will not come. So this is the total consideration which will be allocated to all assets acquired in the ratio of their fair value. Understood? But they will consolidate. Understood this point? Yes, sir. Then coming to business combination, this already I have said. Business combination by acquisition of substantial equity interest of other entity or by acquisition of business of other entity. Already I have said. Now in this chapter, The accounting treatment is based on 2 points. Whether business combination is under common control or business combination is not under common control. Correct. So whenever I say business combination, it means business combination not under common control. When I say simply business combination, it means it is not under. So whenever business combination is not under, then Ind AS 103 is applicable. But whenever business combination is under what? Then Appendix C to Ind AS 103 is applicable. This point have you understood? Correct. Means whenever business combination is under common control, then Ind AS 103 is not applicable. Appendix C to Ind AS 103 is applicable. Can you see there is a separate topic? We'll discuss separately. Means now whatever we are discussing initially, there will be business combination not under common control. So when I say business combination not under common control, so Ind AS 103 has given which method? Acquisition method. Which method? Acquisition method. It has how many steps? Step 1 to step 6. You can see what is the last step. Recognition of goodwill or gain on bargain purchase. That was the first step, concept number 1. Where? Means this was the concept number 1 in which chapter? Consolidation. Means I said when I started consolidation, I said the starting point of this chapter is what? Calculation of goodwill or gain on bargain purchase. That is the starting point. Here ending point. Means that business combination and consolidation start. Are you getting? But then also I have done first what? Consolidation. Then what? But I hope you are understanding my emotion. That you have understood now. Now let us understand this. Now the objective is to calculate goodwill or gain on bargain purchase on the date of acquisition. To calculate that goodwill or gain on bargain purchase, they have given how many steps? How many steps? 6 steps. First, identify accounting acquirer. This is very important. This we need to understand. Correct. Second, determine date of acquisition. From examination point of view, this will be always given, not important. Date of acquisition they will give now. Correct. Then determine fair value of consideration paid or transfer. This is important. Then recognition and measurement of INA of acquiry. Can you see they will give fair value of INA? Means we are not supposed to measure fair value in exam. Practically we need to measure. In exam they will give fair value of INA. This is not important from exam point of view because they will give fair value of INA. Correct. Then measurement NCI. This already we have done. Not important. NCI 2 method. Fair value method and Pasina method. Not miss. We know this. And then this too we know. Goodwill gain on bargain purchase. In every question consolidation we calculated this. Means now we need to concentrate only on 2 points. First is what? Identify. Then what? Determine PC. Calculation of PC. If you have understood this chapter is super easy. Super easy. Because this you know what is the formula to calculate goodwill. Fair value of consideration paid, fair value of NCI, fair value of previously held equity interest minus fair value of INA. Khatam. Chapter is easy or not? But life is not so simple. Life is always complicated. If life is not complicated, जीने का मजा नहीं आता. Correct ना? Just try to. The life is very simple. Life is simple means we can get everything without any effort. Then whether मजा आता? No. Life is interesting because we are not getting everything easily. We are not getting everything easily. Therefore, we are enjoying our life. Therefore, we are enjoying our life. Understood? Correct. Please just try to understand what I will say. Abhi Navratri is going on. Correct? You all know. So I need to give time to my family also. And I need to give time to you also. Means what is my schedule? You just see. 8 to almost 6 I am here. Means for 8 I need to of course wake up in the morning. At least class is at 6:30, so I need to wake up. Because I require time for what? Ready. Substantial time. I require substantial time. Okay. 1.5 hours I require to become ready to come into the class. Correct. Some require 10 minutes, I require 1.5 hours. So 6:30 I need to wake up. Then after reaching home, I need to give time to family. So I need to go to what? That festival to celebrate. So I am going there and coming what at 2. And then once again coming here. The life. Enjoy it. This is only life na. Are bolna re. This is life. So life is hectic, but we need to enjoy it. In class also I need to enjoy. In with family also I need to enjoy. I can't compromise any of this. Can I compromise? No, I can't compromise. So that I want to say, right now you are a student. Can you compromise with your job? No. If you are compromising means you are not enjoying. Simple. I have just given relationship. I have just given relationship. If you are not studying, it means you are not enjoying. And if you are not enjoying, then how you will improve? You will not be success now. You will enjoy whatever you are doing. Enjoy it. Now coming to what? The next point. So can you see, we need to concentrate on step number 1 and step number 3. So my entire concentration will be step number 1 and step number 3. So come to step number 1. Identify accounting acquirer. So now we have understood that accounting acquirer may be legal acquirer, may not be legal acquirer, correct? So for this I have taken how many case? 4 case I have taken. If you understood this 4 case, so from exam point of view you will understand how to identify accounting acquirer. But you have understood that accounting acquirer is the entity that obtain what? Control. That obtain control. This is what they want to say. Suppose A Limited acquire B Limited, absorb B Limited. So can you see A Limited is legal acquirer and B Limited is legal acquiree. Normally, in a normal circumstances, can I say A Limited will be accounting acquirer and B Limited will be accounting acquiree in normal circumstances. Because A Limited absorb B Limited, so of course A Limited will obtain control over the business of B Limited. But let me give one situation. Suppose A Limited, B Limited, A Limited is a profit making company and B Limited is a loss making company. But who will acquire whom? A will acquire B. But just try to understand, as per Income Tax Act, if A Limited acquire B Limited, so this loss may not be set off. But what was the intention to acquire B Limited? To set up loss only. Suppose this is tax loss. So mere objective defeated now. Means there is a value of loss making company. Means if you are incurring loss, that entity has a value or not? Because everyone will try to purchase that company. Means whenever you are incurring loss, don't be frustrated. Am I right or not? Means whenever you are not getting success, don't become frustrated. Because with experience you will get more success in your life. Correct? So what I am saying, in this case, a mechanism will be developed where legally who will acquire? B will acquire A. Now if B will acquire A, so B's loss is B's loss and this profit now can be set off. So a mechanism will be developed where B will absorb A Limited but A will control what? B Limited. Understood point? So in this case, who is legal acquirer? Legal acquirer is what? And legal acquiree is what? A. But who will be accounting acquirer? Accounting acquirer will be A. And accounting acquiree will be B. This concept is known as reverse acquisition. Now what will be the accounting treatment in case of reverse acquisition, that we'll discuss later on. But have you understood? So how to identify this case? How to identify this case? Correct? For that I have taken how many case? 4 case. So what they have given? Share capital of A Limited 20,000 equity shares of rupees 10 each. Share capital of B Limited 10,000 equity shares of rupees 10 each. Identify accounting acquirer in the following situation. Point number 1, A Limited absorbed B Limited and has agreed to allot 1 equity shares of A Limited for every 2 equity shares held in B Limited to the equity shareholders of B Limited. Correct? So can we understand this point? Just try to understand. So can I say, in the first case, first we need to find out number of shares to be issued by A Limited, the shareholders of B Limited. So what they have, number of shares issued to the owner of B Limited, it will be 10,000 into 1 by 2, means 5,000. Correct? And number of shares already held by the owner of A Limited, how much? Means what is the total number of shares after business combination? 25,000. So if you can calculate the voting power, so after business combination, what is the voting power held by the owner of A Limited? That is 20 by 25, 80%, and held by the owner of B Limited is 5,000 divided by 25,000 is 20%. So whose owner is getting largest voting power after business combination? Therefore A Limited become accounting acquirer. So in this case A Limited is legal acquirer as well as accounting acquirer. It is a simple acquisition. Simple acquisition. Then next point, A Limited absorbed B Limited and has agreed to allot 3 equity shares for every 1 equity shares held in B Limited. To what will happen? In this case, number of shares issued to the owner of B Limited become what? 30. And how much already held? 20. Total become 50. Now what is the voting power of A Limited? 20 by 50. And what is the voting power of B Limited? 60%. It means who is getting largest voting power after business combination? Okay, this is an indication that B Limited is getting control over the business after business combination. Therefore B Limited become what? But A Limited is what? Therefore it is a case of reverse acquisition. Understood? Like one more. This point number 1 and point number 2, can you say was a case of absorption? Correct. Now point number 3. C Limited was formed to take over A Limited and B Limited. Okay, this is a case of amalgamation. When C Limited take over the business of A Limited, means A Limited join together to become C Limited. Can you say we call it amalgamation? Arey bolna. Or also we call it merger. You can also call it merger. Understood? So in this case C Limited agreed to allot equity shares to the owner of A Limited in the ratio of 3:2 and to the owner of B Limited in the ratio of 1:2. But just try to understand everything. Everyone whatever I am saying. Correct? Means in this case, what is the case? A Limited, B Limited and C Limited. Can I say C Limited is a new company? You only say whether new company has any asset, any liability of its own. So whether new company can acquire any company? No. New company cannot acquire any company. Means can you say it is only a separate vehicle which has been created for business combination? However, out of these, one company will be what? Accounting acquirer, and one company will be accounting acquiree. Means C is a legal acquirer, but C cannot be accounting acquirer as well as what? Accounting acquiree. It is newly formed company. Newly formed company will never acquire. It means out of A and B, one is what? One is accounting acquirer and one is what? Accounting acquiree. Means this case will be always reverse acquisition. This case will be always reverse acquisition, but we need to identify who is accounting acquirer and who is accounting acquiree. Are you able to understand this point? Correct. So what they have given, check करेंगे. Means in this case once again we'll do point number 3. Number of shares issued to the owner of A Limited 20,000 into 3 by 2, 30,000. Number of shares issued to the owner of B Limited 10,000 into 1 by 2, that is 5,000. Total become 35. Now if you calculate voting power, A Limited is getting how much? 85%. B Limited is getting how much? 15% around. So who is getting largest voting power? Therefore A Limited become, B Limited become, C Limited is what? Legal acquirer. It is a case of what? Reverse acquisition. Understood? Have you understood? Correct. Last case. B Limited, newly formed company, acquired A and B Limited, and the consideration is paid in cash. Just try to understand. Whenever consideration is paid in cash, then entity which is paying cash will be always what? Accounting acquirer. Whenever consideration is paid in cash, the entity which is paying cash will be always accounting acquirer. Means doubt will only come when PC is paid in the form of equity shares. Are you getting? Whenever consideration is paid in cash, then the entity which is paying cash will be accounting acquirer and legal acquirer. Means doubt will come only when consideration is paid in the form of equity shares. Means in this case, just try to understand. In this case, when I am saying A Limited, B Limited and C Limited is funded by venture capitalists. So C Limited got cash from whom? Some investor, and then C Limited acquired A Limited and B Limited. So by paying cash, so C Limited will be legal as well as accounting acquirer, and A and B will be accounting acquiree. Means it is a case of simple acquisition, not a reverse acquisition. Understood? I have taken 4 situations. However, Ind AS 103 has given guidance on identification of accounting acquirer. So what they said, if acquisition is through payment of cash or transfer of other asset, accounting acquirer is the entity who transfer cash or another asset. Very simple. Doubt will come when if acquisition is through issue of equity instrument. So they have given some indicator. You can see how many indicators they have given. 6 indicators they have given. Correct. So these 6 indicators should be collectively applied to identify who has obtained control. However, from examination point of view, mainly we can apply whatever point is given. Normally we will apply point number 1. What they said, entity whose owner received largest portion of voting power. We have done this only in all the cases. Correct. Entity whose single owner or organized group of owner hold the largest minority voting interest. Means entity whose single owner or group of owner hold largest minority voting interest in the combined entity. It is an indication that that entity may be what? Accounting acquirer. Entity whose owner has the power to compose the governing body. Power to compose means what? Power to appoint, terminate the directors. Correct now. Power to compose means power to appoint and terminate director in board of directors. Understood? Entity whose previous management Dominate the management of combined entity means the board of directors comprise of previous management only. Correct. 10. Entity that pays premium over the pre-combination fair value of equity interest of other combining entity. Means they are paying premium over the value of that entity. So the entity who is paying premium, they want to acquire them now. So if I am paying you premium over your value, it means I am accounting acquirer. Correct. Last, entity whose relative size is greater than other combining entity. These are some indicator. I will say point number 1 is important from calculation point of view. Other point they will mention in the exam. If they mention, we can easily identify what? Accounting acquirer. Once we identify accounting acquirer, next step is what? Determination of date of acquisition. Okay, date of acquisition will be given the question. Correct. However, what Ind AS 103 says, the date of acquisition, date when control is obtained. The control is obtained on closing date. Closing date means the date when the PC is paid, assets and liabilities are assumed. Asset is taken over and liability is assumed. Understood? That date will be closing date, and that date will be what? Acquisition date. Correct. Step number 2, I will say date of acquisition will be given in the question. Chalega? Correct. Then determination of PC. Determination of PC. So PC will be what? I only to just ask you some point. Just try to understand. In your CA Inter, you have done PC by which method? 2 method. One is, if you remember, net asset method. Net asset method means what? Fair value of asset minus fair value of liability is equal to PC. And then net payment method also you have done. Payment method means what? Payment to whom? Owner. Owner is what? It can be the equity participants. Correct. Understood. My question to you all, which is more preferable? Which method? Method 1 or method 2? Method 1 or method 2? Everyone saying method 2? Bolo, yes or no? I'm asking some CA Inter. Then I'll come to CA final. Method 1, method 2. Chalo. Then this is only preferable. This is bakwas method. Means actually AS14 is also silent about this. This is totally bakwas method. PC cannot be calculated by net asset method. PC means consideration paid. Whatever you are paying, that is PC. This is totally bakwas na. But in CA Inter, most of the question we have done by which method? By which method? Net asset method. Correct na? Therefore, there is some misconception in the mind that PC is net asset. No. PC is net payment. And therefore, Ind AS 103 in CA final level will never discuss about this. This is totally wrong. PC means whatever paid. Whatever paid is what? PC. So, how to calculate PC? Can I say it will be equal to fair value of asset transferred or cash paid? Can I say in this will add fair value of liability incurred, means deferred consideration? Can I say will also include fair value of what? Contingent consideration. Then will also include fair value of what? Equity instrument issued. Okay, this fourth I have already discussed where? In consolidation chapter. One question also we have done. Correct? Then what Ind AS 103 says that this will also include fair value of original SBP award replaced. Correct. This will be total PC. Total PC. But what Ind AS 103 says that if you are paying, if the PC, this PC include some payment, yes, some settlement for a transaction which is not a business combination transaction, so exclude that effect. Are you able to understand? We suppose this amount include some payment for a transaction which is not a business combination transaction, that should be eliminated or not. Therefore, some adjustment is required. This is known as adjusted with consideration for separate transaction which is not a part of business combination transaction. This, after this elimination, whatever is left, that is known as what? PC for business combination. Can you see this we know? This we know. This will be at present value. Can you see this we know? But thoda sa discussion we'll do about contingent consideration, but we know contingent consideration. Can you see this also we know? Only we discuss this and discuss this. Correct. So let us discuss first separate transaction which is not a part of business combination transaction. So what Ind AS 103 says that any transaction which is not a part of business combination transaction should be not considered for calculation of PC. Can you see it may be, there may be some pre-existing relationship, or there may be some post-combination arrangement. Pre-existing relationship means it might happen A limited, B limited has done some transaction between them before. Before what? Business combination. Correct. Means, just try to understand. If I am saying A limited, B limited, A limited has sold goods. So there will be some receivable, suppose 10 lakh. There is some payable 10 lakh. Now, A limited absorb B limited. Correct? And let us assume PC agreed for this business combination 100 lakh. But what A will say? Some receivable is there. So I will pay only what? 90 lakh. Means cash payment is what? What is cash payment? 90 lakh. अरे बोलना रे. Cash payment is only 90 lakh na. A limited will say some receivable is there 10 lakh. For business combination how much agreed? So A will say I will pay only 90 lakh. Now if you apply the formula, PC is equal to cash payment. Cash payment na. How much? Whether it will be PC? No, it will not be PC. Therefore we should adjust what? Separate transaction which is not a part of. So you will do plus what? Any receivable due to pre-existing relationship will add it, and this will what? Purchase consideration. Or can I say, just try to understand, A limited, B limited. Correct. Say A limited absorb B limited. PC agreed 100 lakh. Now B limited is liquidated. There will be some liquidation expense. Now A limited agreed to what? Reimburse that liquidation expenses. Quite possible. Suppose 10 lakh is liquidation expense. So they will pay also 10 lakh. Total cash payment 110 lakh. Batao, whether 110 is PC. Because this 10 lakh is a paid for liquidation expense of B limited, which is not a part of business combination transaction, and therefore PC will be 110 ke 100 na. We will do 110 minus what? 10 is equal to what? 100. Let me take one more example. A limited absorb B limited. PC agreed 100 lakh. But A Limited agreed with Mr. B, who is the director of B Limited, that you retain in the company for 5 years because you have some technical knowledge for running the business. If he will go, then who will take care of B Limited? Quite possible. So he asks him to retain in the company for how many years? Correct. And for that 5 years services, A Limited agreed to pay to the owner of B Limited only. Mr. B is the owner or not? So for some post combination services, A Limited agreed to pay 50 lakh to B Limited, and 50 lakh paid right now only. So total payment is what? 150 lakh. Batao, what is PC? Bolo. Total payment is 150 lakh. Out of 150, 50 lakh is paid for post combination services, which is not a part of business combination. You will do minus 50. Just like this, so I have said in exam they will say cash payment what? 150. Then they will say 50 lakh is for what? Post combination services. So what is PC? 100 lakh. And 50 lakh will be recognized as per Ind AS 19 during post combination period. Understood? Understood. That is only given. This is separate transaction which is not a part of business combination transaction. Such transactions are accounted as per relevant Ind AS. Examples: settlement of pre-existing relationship, reimbursement to acquiree or owner of acquiree for payment of acquisition related cost of acquiree. Example: liquidation expense, remuneration of employee or owner of acquiree for future services during post combination period. Then issue number 2, direct cost of acquisition. Means just try to understand. Whenever there is an acquisition, the acquirer also will incur some direct cost, acquisition related cost. For example, legal fee. For example, finder fee. For example, due diligence cost. You know due diligence. You know due diligence? Correct. So they need to incur due diligence cost. These are directly related to acquisition. What Ind AS says that this cost will be charged to PL as an expense. It is not included in PC. The direct cost charged to PL as an expense. Similarly, this liquidation expense reimbursed. Point number B will be also charged to PL as an expense. Any liquidation expense of B Limited paid by A Limited will be also charged to PL as an expense. Correct. Understood. Now one point, very important point. One illustration is given in ICAI study material. I like this question very much. I don't know whether that will be asked or it will not be asked. Let me ask you this point. Very good question. A Limited absorb B Limited. So there is a land. This will be acquired at fair value. Fair value is 100 lakh. Correct. Now this land was in the name of, now need to be transferred in the name of, so can you see there will be some stamp duty or registration cost. Suppose 10 lakh. 10 lakh. So this stamp duty is paid for registration of land. If you see Ind AS 16, Ind AS 16, this will be capitalized. Bolna re. Now you say, in this case, what will do? Huh? Land fair value is 100 lakh. And we have paid 10 lakh. So lands will be recognized in the books of A Limited at what price? 100 lakh or 110 lakh? 100 or 110? 100? Very good. Understood. 100 lakh at fair value. Ind AS 103 says that at fair value means even though this is directly attributable cost to bring the asset in working condition, then also as per Ind AS 103, this will not be capitalized and this will be charged to PL as an expense. Correct? Understood? Now, suppose A Limited, B Limited. A Limited will pay PC. PC can be in the form of equity shares, and whenever we allot equity shares or debenture, whatever, we will incur some cost, transaction cost, means any share issue expenses, underwriting commission, etc. So what we'll do about this? So what Ind AS says that this cost will be accounted as per Ind AS 32 or 109. As per Ind AS 32, this will be deducted from what? Equity, or deducted from liability. Understood? So any cost of issue of equity shares and other securities shall be recognized as per what? Ind AS 32 or Ind AS 109. Means if I give one clear idea, as per this chapter, any direct cost related to acquisition will not be included in PC. Any liquidation expense of acquiree paid or reimbursed by acquirer will not be included in PC. If I just give the concept of this chapter. Now coming to contingent consideration. One thing we have understood, contingent consideration will be recognized at fair value on acquisition date. Correct. Now this contingent consideration may be classified as liability or equity as per which Ind AS? Ind AS 32. Correct. Already we have done this in what? Consolidation chapter also. Now settlement of contingent consideration by payment of cash, then it will be classified as what? Financial liability. By delivery of equity shares, and the equity share is variable, then what? Financial liability. Fixed, then equity. Now if it is financial liability, then subsequent measurement will be done at fair value. Any difference will be transferred to BL. If it is equity, then no subsequent measurement. On settlement, it will remain in equity only. In this RTP, they have given one question based on this. One question has been given based on this. However, that question is same to same in ICAI study material, but they have given one question based on this in this RTP. Just try to understand. Whenever one point is targeted, this point was targeted in exam, suppose, if they do not target any other point, and they target this point, and suppose you forgot this point, only one point, entire marks gone or not. When they target only one point, let's see that question. I think I have taken that question. The question is very simple. I don't want to say that question is complicated. Question is simple. But let's see. How should contingent consideration payable in relation to a business combination be accounted for on initial recognition and subsequent measurement? On 1st April 2016, A Limited acquired 100% interest in B Limited. As per the terms of agreement, the PC is payable in the following two tranches. An immediate issuance of 10 lakh shares having face value of 10 per share. A further issuance of 2 lakh shares after 1 year. After 1 year, if the profit before interest and tax exceed what? 1 crore. Contingent, but this is fixed or not? Fixed. The fair value of shares of A Limited on the date of acquisition is 20 per share. Further, the management has estimated that on the date of acquisition, The fair value of contingent consideration is 25 lakh. During the year ended 31st March 2017, the profit before interest and tax exceed 1 crore. Is condition satisfied? As on 31st March 2007, the fair value of shares is now 25 per share. My question to you are, what is PC? First, give me PC. I think in one point you will do mistake. Let's see whether you are doing mistake or not. First, PC on date of acquisition. First, can you give me PC on the date of acquisition? First. One answer I got 1 crore. One crore is not correct. I was expecting you'll do wrong and you have done wrong. Fast. I will say. Very easy. Taking a lot of time. PC, I said calculate PC. 1, 25 lakhs. One answer I got 125 lakhs. How you are getting 125 lakhs? Whenever I ask something, write and do. I always say write and do. And you are not writing. You think you are Paramatma. First, you think you are Paramatma. I have asked you to do one question. You are only thinking. You are wasting your time. You are wasting your time. You are wasting my time as well as your time. I have read this much. I said calculate PC. I will calculate. Chalo. Now, when I say PC, first you will find out fair value of what? Equity shares issued. How many equity shares given? How many equity shares? 10 lakh into what is the fair value? Fair value 20 will become 200 lakhs. That's why I was asking. To write and do na. You are not writing. Then fair value of what? Contingent consideration. How much given on the date of acquisition? So PC become 225. I was asking this. What you were thinking? Always whenever something is asked na, write and do. Write and do. He will always write and do. Correct? Don't think much. You are wasting your time, energy and marks also. Correct? If I say, what will be journal entry? A journal entry will be any account debit. That is not given the question. 2. Equity, share capital. What is the nominal value? It will be 10 lakh into 10. Means how much? 100. 2. Securities premium will be how much? It will be 100. 2. Can I say contingent consideration classified as what? Equity. How much? 25. And the difference, if any, will be goodwill. That will come. The first journal entry. Now, this was journal entry on 1/4/2000. What is the date of acquisition? 16. Then after 1 year, 31st March 2017, can is a condition satisfied? So what journal entry will do? Contingent consideration 25. Correct. Can you see will allot equity shares? How many equity shares? How many equity shares? 2 lakh. What is the fair value? Now 25. Correct now? 25. So now it becomes 50. Equity shares will be issued at current fair value 50. The difference will remain where? Achha, you can say in what? In this way. Nominal value is what? 10. How much? Is this I am doing as per what? Companies Act. Premium will be what? $25 na? 15. How much? The difference will be transferred to what? It will remain in other equity only. However, this journal entry because of Companies Act it have become confusion. So it will be to equity and the difference will also remain in equity only. The difference will also remain in equity. So automatically it will remain 25 only. Because if you have done 50 year, 25 year, the net impact is what? 25. The difference will remain in equity. Understood? Correct. Then what they have given? Continuing with the fact pattern A above, the number of shares to be issued after 1 year is not fixed. So they have given second case. Rather, A Limited agreed to issue variable number of shares having a fair value equal to 40 lakh after 1 year. If the profit exceed 1 crore, A Limited issued shares with 40 lakh after 1 year because condition was satisfied. So in this case also PC remains same. PC remains same now. Even the variable consideration, fair value is what? 20 lakh only. Sorry, 25 lakh only. So PC remains same 225. But in this case, can you say subsequent recognition will be done? If I am saying initially it was 25 lakh. Understood? Now you have issued worth rupees 40 lakh divided by 25. What is the number of equity shares? How many equity shares issued? $1.6 lakh into 25 only is 40, and this difference will be transferred to what? L. This difference will be transferred to L. Understood? Correct. So what is the difference? This 15 will be transferred to L. Got it? Can you read the solution? Solution is given. Read the solution by your own. Have you understood? Then issue number 4. This is also very important. Contingent payment to employee or selling shareholders. Just try to understand. Shareholders may be employee also. One doubt will come whenever you are paying to shareholders who is employee, whether that payment is for PC or that payment is for employee services. Can you see if the payment is for employee services, then it is not a part of PC. So whenever selling shareholders is employee, so one doubt will come. Therefore some guidance was required. So what they said, if the consideration payable to non-employee shareholders, non-employee means the shareholder who is not a employee, it will be always a part of PC. No doubt, it will be always a part of PC. But payment is payable to whom? Employee shareholders. But if that payment is fixed, then it is a part of PC. Payment is fixed, then it is a part of PC. But if the payment is contingent, one doubt will come. Are you getting? The payment is fixed, is PC. But if the payment is contingent, and that contingent consideration, correct now, cannot be forfeited, even though employee terminate, that contingent consideration cannot be withdrawn, even though employee terminated, then it is what? Part of PC only. But if that contingent consideration can be forfeited, if employee terminate, if that payment is for employee services, therefore it is not a part of PC, then it will be treated as post combination remuneration. Post combination remuneration. It is not a part of PC and therefore excluded from PC. Understood? This is also important. Can be asked in exam. Then next point, correct? Can you see when I was saying PC, so I have given 2 star mark. Can you see this too you have understood? Only now I need to explain what? This part. Correct? Just try to understand what they want to say. Suppose A limited, B limited. Correct? B limited is what? Acquiree. And suppose B limited is liquidated. Correct? A limited absorbed B limited and B limited liquidated. Now B limited might have announced some SBP award to their employee. Suppose the vesting period was 5 years, but out of this, let us assume expired is 2 years. Correct? It means the remaining vesting period is what? 3 years. Correct? Can you say already? It is already accounted as per Ind AS 102. Means already in the balance sheet some SBP reserve will come. SBP reserve based on what? Ind AS 102. Just try to understand. We are discussing about equity settled SBP. Can you see if it is cash settled, it is SBP liability, and that SBP liability can be taken over, will be taken over at fair value. But SBP reserve is not a liability. Are you able to understand what I am saying? One second. When I am saying when B is acquired, so what will come? Asset will come, liability will come. And this liability will be including what? SBP liability at fair value. But SBP reserve will not come now. Because SBP reserve is not a liability. One second. Please smile, huh? If you are not smiling, I am thinking that you are not able to understand. One second. B is acquired by A. So all asset will come at fair value. All liability will come at fair value. Liability will include what? SBP liability at, means we are not discussing anything about SBP liability. Means if there is a cash settled SBP, we are not discussing that. We are discussing what? Equity settled SBP. Whenever equity settled SBP reserve, so batao whether SBP reserve is taken. No, because asset will come, liability will come, equity will not come now. Correct? So doubt will come now. What will be the accounting of equity settled SBP? Correct? So what India says that what is the fair value of this award, SBP award, on acquisition date? Suppose 600 lakhs. Now, can I say, because B Limited is liquidated, so employee of B Limited will now become employee of A Limited. Means the employee of B Limited will now provide services to whom? A Limited after combination. Correct. It means now this award need to be replaced with which award? With SBP award of A now. Require replacement because SBP award of B it does no more exist because B Limited liquidated. Now A Limited cannot allot equity shares of B Limited now. Now to this employee A Limited will allot equity shares of A Limited. Replacement required. Therefore this is known as replaced SBP award. Understood? Replaced SBP award. Correct. Now can you say when it is replaced by A award, the vesting period might change. Now in this case, suppose vesting period, vesting period is equal to 4 years. Quite possible. In this vesting period was how much? 5 years. Now the fair value on the date of acquisition, let us assume it was 700 lakhs. Correct. Now can you see these will be attributable to pre-combination period and post-combination period? Because for 2 years already employee has provided services to B Limited, and for the remaining 2 years the service will be provided to A Limited. So can you say post combination period will be accounted as per Ind AS 102? Correct? Because they will get services of employee for post combination period, but for pre combination period already service was given to B Limited. Now shares will be allotted by A Limited. To whom? To the employee of those company. And therefore, what they say, this will be included in PC. This is nothing but payment to employee on behalf of what? B Limited. In the form of equity shares only. This is a part of PC or not? Have you understood this point? Only we need to understand what will be this amount. So this amount they have given a formula, fair value of original SBP award multiplied by expired vesting period divided by original vesting period or replaced vesting period, whichever is higher. This formula has been given. Fair value of original SBP award multiplied by expired period divided by original vesting period or replace vesting period, whichever is higher. Means in my question, what was the fair value of original SBP award? But doubt, you have doubt. Huh? I'm saying, first write down. I'm not completed my discussion, Ray. You know, I'm just given formula. I will explain this now. Correct. Have you written this? Now, in my question, what is the fair value of original SBP award? I have given 600 lakhs. Check kar lo. This was 600 on acquisition date. Huh? This was the fair value of replaced award. But in formula, I have taken fair value of original award. On which date? Acquisition date. It is not on grant date, on acquisition date. multiplied by what is expired 2, original vesting period 5, replace vesting period 4, whichever is higher. Means it will be 600 into 2 by 5. Means this is how much? 240 will be included in PC. Correct. And can you say what was the fair value of replace award? Minus what? Is equal to what? 460 will be accounted as per Ind AS 102 in the post combination period. Understood? Means, can you see in this chapter this is relevant, this is not relevant because they will ask journal entry on the date of acquisition. Understood? Understood? Next 2 years. 4 minus 4 was the replace na. Next 2 years. Understood? This is very important. Already they have asked one question including this to calculate PC. And in exam, even though we understand, we do mistake. I don't know why. Have you understood the formula? Formula can we do rectification? What is formula? Fair value of original award on which date? Acquisition date, not on grant date. Fair value of original award multiplied by expired period divided by original vesting period or replace vesting period, whichever is higher. Formula is very easy. Now, when you pass journal entry on the date of acquisition, you can say INA will come, add fair value. Suppose PC is paid in the form of cash. Suppose some amount will be paid in cash. 2 we add on SBP reserve. How much? How much? 240. Understood? This is journal entry on the date of acquisition. So this become SBP reserve now. And the difference will be goodwill or gain on bargain purchase. Understood? Simple. Can I say you understood this? This part you understood? Issue number 5 you understood? What is the what they have said? Fair value of replace award will be attributable to pre-combination and so it means in my example 700 will be attributable to pre and post. Pre will be included in PC. In my example this was so 700 minus 240 will become how much? Understood? But to calculate this we'll take fair value of original award. Correct. I hope you have understood. Now, issue number 6, non-replacement award of acquiree. Till now, no question have been given on this. What they want to say? It's quite possible A limited, B limited, and B limited is not liquidated. For example, in case of formation of subsidiary, it can be a case of demerger. Then there is no need to replace the award because B is not liquidated. So B can allot their own equity shares. So this is known as non-replaced award. Same example I am taking. Fair value, suppose 600 lakhs. Vesting period original 5. Expired period 2. Correct? Now in this case what we'll do? You can say these 600 will be allocated to pre and post. My question to you, post we understood. Post will be done as per Ind AS 102. But this pre will be what? Just try to understand. Employee has provided services to B Limited. but now they will get equity shares of B Limited only. Okay, it is nothing but NCI, non-controlling interest. Right. So any amount attributable to what pre-combination period will be classified as NCI. Understood? Have you understood this point? So what they want to say? If it is non-replace award and if it is already vested on the date of acquisition, already vested, so there is no need to allocate. Can I say entire fair value on acquisition date will be classified as what? NCI. So fair value will be classified as NCI. But unvested, the fair value of SBP award on the date of acquisition is attributable to what? Pre and post. Pre will be classified as what? NCI. Post, it will be treated as EB expense. Correct? But can I say EB expense to SBP reserve now we can't do? Because now A Limited will not allot shares. Shares will be allotted by, it is EB expense of A in post combination period, but will be NCI. Any other owner of B Limited will become what? NCI. So post combination period journal entry will be EB expense to NCI, but this is not important from exam point of view because they ask journal entry on date of acquisition. It will be classified as what? NCI. So what journal entry will do bata? Same journal entry, INA to cash to what? NCI. But what will be this amount? This amount will be what? Same formula. Fair value of original award multiplied by expired period divided by original vesting period or modified vesting period. There may be some modification in vesting period, not replacement, modified. There may be some modification. Are bolna rahe? Whichever is higher. Understood? Write down this formula because not written in book. Understood? This is not yet asked in exam. Can be asked. Oh my God. Lot of effort is required in these chapters. Why effort is required? Because actually I don't know what you know, what you don't know. In regular batch, so we assume we don't know anything. Correct na? We are knowing this point, but recollected everything. Can we proceed? So with this, PC completed. Now, come to step number 4. Measurement of INA. Can I say fair value will be given? But there are some important points. What they said, the INA will be recognized only when it meets the definition of assets and liability. Correct? It must be exchanged as a part of business combination. It may be recognized even though it is not recognized in, it may be recognized even though it is not recognized in the balance sheet of acquiry. For example, self-generated brand. Brand was not in the balance sheet of, but if brand has fair value, it will come in the balance sheet of, and if it meet the definition of asset, an intangible asset also. Correct. Measurement at fair value will be given. Now, there is some point intangible asset other than goodwill, because goodwill will be always balancing figure. So goodwill we don't measure. For goodwill there is a formula. Correct. Other intangible asset, what Ind AS 103 says that it will be recognized if it meet the definition of intangible asset. Means we don't apply recognition criteria. We require We apply only definition criteria. Correct? Understood? So all intangible asset will be recognized at fair value. Such intangible asset must be resulting from a contractual or legal right, if not separable. If you remember, intangible asset we have done, it must be identifiable. Identifiable, I said there are two conditions. Any one condition satisfied, it will become identifiable. First condition, it must be separable. Second condition, it must arise from contractual legal right. Correct? You remember? That is given. Such intangible assets must be resulting from contractual legal right, even though it is not separable. Then other intangible assets which are not resulting from contractual or legal right should be recognized if and only if they are capable of being separable from acquiring. In simple word, intangible asset we recognize even though it does not meet a recognition criteria, but meet what? Definition criteria. Correct? Understood? Then contingent liability. Now one doubt will come whether contingent liability of acquiree can be recognized in the books of acquirer. Recognized, not disclosed. So what they say? Yes, if two conditions satisfied, and do not apply Ind AS 37. Ind AS 37 has given three conditions, but Ind AS 103 has given two conditions. What they say? There must be present obligation arising from past event, and fair value can be measured. One condition is missing. What condition? You can see what they said. Such liability will be recognized even if outflow of resource which is required to settle the obligation is not probable. Even though not probable, recognize it. Please don't apply Ind AS 37. Apply what? Ind AS 103. This is also very important. Very important. They will give contingent liability and they will say outflow is not probable. Then also recognize it if fair value is given. Correct? Then calculation of DT and DTL. In this to already we have done where? Ind AS 102. We need to recognize DT and DTL for initial recognition of assets and liability as per Ind AS 12. Measurement of NCI, two method, fair value method, Pasina method already done. Goodwill, this formula you know. Formula you know. What is the formula? Read it, don't say. This was the full consolidation, we have done this only. Correct? Correct. Gain on bargain purchase. Now, everyone. Bargain purchase. What is the meaning of bargaining? We are expert in bargaining, huh? You have done bargaining? Where you have done bargaining? Acha, have you done any bargaining in a mall? Have you done bargaining in a street market? Yes. Why you have done bargaining in a street market? Why you have done? Why you have not done bargaining in mall? Street market they also write fixed price. Then also you do bargaining. Bol yes or no? Street vendor also they write fixed price. One mango 10 rupees, not 10, 50 rupees. And they will say fixed price. Then also you will start from 25 only. Bol yes or no? What fixed price there? No, no, no. Because you know that they are under financial stress. We always exploit weaker people. We do not exploit financially strong people. All, what is in your mind? They are financially strong. They will not listen to us. And therefore you don't bargain. Same thing you will purchase from street market. You start bargaining because you know they are under financial stress. And therefore let us exploit them. बोलना yes or no. My wife is expert in bargaining. I can't I can't convince her because he is not chartered accountant. But I can convince you na why bargaining we are doing. Correct na? I can't stop her from bargaining. If I stop, then divorce ho jata. Correct? But can I say we should not do bargaining? Yeah, we should do bargaining where? In mall na. From today, don't do bargaining in street market. We should not do until unless they are charging reasonable price. And from my point of view, they will never charge higher than reasonable price because there is a lot of competition with them also. Lot of. And now they are competing with Reliance Trend. Vegetable street market. Now they have a competition with whom? Reliance, Tycoon. Correct. Whether they can compete. They can't compete now, but they are doing competition with them. So I will say they will charge less than their price. And then also we are doing bargaining. So we should not do bargaining, we should avoid. And I will say that don't purchase anything vegetable, means necessary thing, is this is only my suggestion. All necessary items, not branded item, but necessary item, vegetable, fruits, grocery item, we should purchase from small vendors, not from this big tech. They are multi-millionaires. Why to go to them? Same thing is available there also, na? Same thing. Whether fruit will change, whether vegetable will change, whether grocery item will change, will not change. Same thing you are purchasing from Reliance Big Reliance Press is there, na? Reliance Press. I don't know the name also. There is some more store, supermarket. Why to go there? They are multi-millionaire. They are multi-millionaire, na? Correct? This is my suggestion. Choice is yours. Choice is you. Never. I will say never. Correct now? Understood? So can I say bargaining is possible whenever the other party is under financial stress? So what India says that gain on bargain purchase will come whenever there is an evidence of bargain. Evidence of bargain means acquirer is under financial stress or under compulsion of sale. Then only bargaining is possible. So if there is an evidence of bargain purchase, this gain will be transferred to OCI and accumulated in capital reserve. Means through OCI to what? Capital reserve. Correct? But if there is no evidence of bargain purchase, till now no question have been asked on this, but can be asked. If there is no evidence of bargain purchase, okay, then gain should not come. Then how gain? Can I say if bargaining is not possible, then other party will sell at higher price only or equal to fair value or more than fair value but not less than fair value? Are you getting what I am saying? So in this case what they are saying, gain should not come. But even though gain is coming, then there might be some error. Error in what? Calculation of fair value of INA or fair value of NCI or fair value of consideration are recalculated. So what they are saying, if GBP exists, means PC, NCI, INA should be remeasured. But if GBP exists, means gain exists, after remeasurement, then such gain will be directly transferred to what? Capital reserve. Means it will not be transferred through OCI. It will directly transfer to what? Capital reserve. Understood. The difference is this only. I hope you have understood. Any doubt? No doubt. Correct. Can you see step acquisition? So already we have done in consolidation. Multiple acquisition. Same to same thing is written. Same to same. Correct. Understood. Now there is one concept of measurement period. After this we'll take questions. Then all theory points will be completed. Measurement period. Do you know about measurement period? What is measurement period? Bolo. Let me explain. Suppose this is what reporting date. And suppose this is the date of acquisition. And this is only 15 days. You only say, can we calculate the fair value in 15 days? Practically impossible. And suppose, of course, we need to wait for approval of financial statement. Suppose this is the date of approval. So can you say what India says that it is quite possible that business combination accounting might be incomplete before approval of financial statement. Means valuation report has not been received. But can you defer the finalization of account? No. We need to publish our financial report now. You can't defer it. You need to publish your financial statement. So what India's 103 says that accounting will be done on provisional basis initially. Correct? And you need to measure INA at provisional amount. And goodwill whatever is calculated, that is also provisional amount. Correct? Understood? So if business combination accounting is not completed before approval of financial statement, Ind AS 103 has given some relaxation that you can follow provisional accounting. But they have given measurement period. That maximum measurement period is 1 year from the date of acquisition. So they have given measurement period. And maximum measurement period is what? 1 year from acquisition date. And what they want to say, in this measurement period, you need to collect or obtain new information. You need to obtain what new information which were not on which date? Date of acquisition. New information can be of two types. One is about the facts existed on the date of acquisition, or it can be about the facts after what? Acquisition date, after the date of acquisition. So this new information can be of two types. New information about the facts and circumstances existed on the date of acquisition, but this information can be adjusted on a retrospective basis. Understood? But this information should not be considered. For this too will follow subsequent accounting only. Are you getting? Means what they want to say, during measurement period, collect new information about the facts and circumstances which existed on date of acquisition, and such information should be adjusted retrospectively on the date of acquisition and recalculate what? Goodwill. Recalculate goodwill. But once the new information is obtained, your measurement period will be completed. Means can you say measurement period will be what? The date when all the information is received, or 1 year, whichever is earlier. Means measurement period will be what? The end of measurement period will be what? When information has been received, or 1 year from acquisition date, whichever is earlier. It is quite possible that, everyone, this much you understood? But it is quite possible, suppose this is measurement period, some information was obtained यहाँ पर, existed on date of acquisition, but this will be now error. And for error, apply what? Ind AS 8. So any information which obtained after measurement period for the facts and circumstances existed on the date of acquisition will be considered as an error and apply what? Ind AS 8. Ind AS 8 also say retrospective restatement. But as per Ind AS 8, disclosure is required as per Ind AS 8, and third balance is required as per Ind AS 1. But for this third balance it is not required. Have you understood? Can you read once this? Now you will understand. Can you read fast? Read it. You will now understand whatever I have said. Just read it. Great. Have you understood? Chalo. Let me take one example so that you can understand whatever I am saying. Suppose this is what? Date of acquisition 31st 12 2020. This 31st March 2021. This 31st March 2022. Here we have recognized fair value of property, plant and equipment 1 lakh. Correct? And suppose we measure NCI, let us assume NCI is 2 lakh. Correct? And we already calculated goodwill, suppose 50,000. Correct? This is only one PP. Huh? There may be other asset also. There may be other liability also. I am not giving that information. So can you say on this you have already charged depreciation for 3 months? Let us assume 10%. So 10,000 into 3 by 12 how much? Means 2,500 depreciation already charged. Means in the balance it will come how much? 97,500. This will come same amount in the balance sheet. This will come same amount in the balance sheet. Now what happened during measurement period? We found that this 1 lakh is not 1 lakh. This is 1,50,000. As per the valuation report received from valuer. Have you understood? So can you see we need to do some retrospective adjustment? We will increase PP by how much? 50,000. Can you say PP will increase? Suppose NCI was 20%. Huh? 20%. And suppose Pasina method we have done. Pasina. Which method? Pasina method. So can you say your NCI will also increase? Because NCI was based on fair value of INA, Pasina method. So your NCI will also increase. It will be 20% of what? 50,000. Means how much? 10,000. Correct. And the difference will be adjusted where? In goodwill. Means goodwill will decrease by how much? 40,000. So can you see we need to pass this journal entry? This journal entry. Can you say we need to also increase the depreciation of last year? So depreciation will also increase. Okay, depreciation will be affected retained earning. Retained earning account debit to what? PP and 50,000 additional depreciation. 10% I have said into 3 by 12. How much? How much? Depreciation journal entry I am saying. 1250. Correct. Understood. Look at this journal entry you are doing in current year. Because last year financial statement already approved. Can you change that? No. Means in current year financial statement, will restate previous year figure. Previous year figure need to be restated. Batao. After restatement, PP will now become how much? It will be what? How much? It will be 97,500 plus 50,000 minus what? Minus 1250 na? 146. Can I say goodwill will be also restated? It will become 10,000. Bolo yes or no? And NCI will be also restated. NCI will increase na? It will become 2,10,000. Are you able to understand what I am saying? Bolo. Correct? Have you understood? So the goodwill will be decreased by 40,000 na? Okay, correct only. 50 minus 40, 10. Correct? Have you understood? This type of question can be asked. Got it? Have you understood? And can it in SOPL depreciation will be restated? SOPL depreciation will be restated. Chalega? Got it. So one question I have taken. If asked, you should be able to do it. However, one question is there based on this, which can be asked, and therefore I have given concept behind this. Correct. Now let us come to the questions. Let us come to the questions. Now, from examination point of view, what are important? Means I will concentrate only on those questions which are important. However, in class, so we do a detailed discussion on this chapter. First, any question can be asked, which is simple acquisition. Means I should not say simple acquisition. Means first topic, they may ask question based on reverse acquisition. One, this is very important. So one question will take for reverse acquisition to explain you entire thing about reverse acquisition. Then one question I will take of acquisition which is not reverse acquisition. Correct? Acquisition which is not reverse acquisition. Then third, they may ask question on business combination under common control. This is a separate point. So these three topics are important. Correct? Understood? Correct. So can we take some questions? First, I have taken one question of reverse acquisition. Chalo. We'll take what? 5-minute break. Hello. Now, can we Start once again. Okay. Now, we are discussing about business combination, all points covered, all steps covered, correct? Now, we will take some questions, but which question I should take first, that I will decide. Let me take one question first for a question which is acquisition, which is not a reverse acquisition. Better first. Question 21 is already asked in exam, but once again can be asked. The balance sheet of Professional and Dynamic Limited is given. You can see PP, investment, inventories, financial asset, trade receivable, cash and bank balance, equity, liability, equity, share capital, equity shares of 100 is of Dynamic Limited and 10 is of Professional Limited. This type of questions are dangerous when they are given different face value. If you are not reading, you may do mistake. Reserve and surplus, OCI, non-current liability, long-term borrowing, long-term provision, deferred tax, current liability, short-term borrowing, trade payable. Other information. Professional Limited acquired 70% of Dynamic Limited. So 70% of Dynamic Limited is 70% of equity shares of Dynamic Limited. In this nothing but Dynamic Limited will become what? Subsidiary on 1st April. For by issuing its own share in the ratio of 1 shares of Professional Limited for every 2 shares of Dynamic Limited. The fair value of shares of Professional Limited was 40. The fair value exercise resulted in the following. PP, fair value is given how much? 350 lakhs. Professional Limited also agreed to pay an additional payment that is higher of 35 lakh and 25% of any excess of Dynamic Limited in the first year after acquisition over his profit in the preceding 12 months. This additional amount will be due after 2 years. Dynamic Limited has earned 10 lakh profit in the preceding year and expect to earn another 20 lakh. This point number B, if I want to explain, I will try to explain this only, because if you understood this question is very easy. What they are saying, point number B, is some additional amount will be paid, which will be higher of point number 1 and point number 2. Point number 1 is what? How much? 25. 35 lakhs. And point number 2 is what? 25% of, can you say, surplus profit or excess profit? Correct. Means, can I say there can be 3 cases. Either these and these are same, or second case, this is 35, this is 20, or third case, this is 35, this is 50. Can you say in all case minimum payment is what? Means, can you, this is deferred liability, and in third case there can be some excess payment. Excess payment is contingent. So can you say the excess payment will be contingent consideration. Means this point number B has a deferred consideration of 35 lakh, and there is some excess payment which may also arise, which is right now contingent. So we know deferred consideration will measure at present value and contingent consideration will measure at fair value on acquisition date. But in this question, the fair value of this is not given. However, from my point of view, they should give, but they have not given. Whenever fair value of any contingent consideration is not given, we'll assume it is nil from examination point of view. So, but can I say in your exam they may give fair value of contingent consideration, so that will be taken into consideration, and deferred liability, they in this question by mistake they have not given discount rate. However, in exam they will give discount rate. In solution they have taken discount rate. If discount rate is given, we can apply it. Understood? Point number B understood. Come to point number C. In addition to above, Professional Limited also agreed to pay one of the founder's shareholders a payment of 20 lakh provided he stay with the company for 2 years after acquisition. So can I say it is a payment to employee shareholders with the condition that he need to stay with the company. So can I say it is not a part of PC? So can I say it is not a part of PC, should be ignored? Should be ignored or not? Then Dynamic Limited has certain equity settled share-based payment award which got replaced by new award issued by Professional Limited. Replaced na? As per the original term, vesting period is 4 years, and as of acquisition date, employee of Dynamic Limited have already served 2 years. As per the replace award, vesting period has been reduced to 1 year. 1 year from acquisition date. Means it is reduced to 1 year from acquisition date. Means remaining vesting period is 1 year. Means total vesting period is how much? Are you able to total vesting period of replace award is 3 years? So can I say, I will say replaced vesting period is 3 years. Correct? The fair value they have given on acquisition date, original award 5 lakh, replacement award 8 lakh. But we need to find out pre-combination period allocation. The pre-combination period will take 5 or 8? 5 into what? Into 2 divided by 4 or 3, whichever is. So 4. So it will be 2.5. Here this 2.5 will be included in PC. Correct? Yes, sir. Dynamic Limited had a lawsuit pending with a customer who made a claim of 50 lakh. Okay, it was a contingent liability in the books of Dynamic Limited. Management reliably estimated fair value. Okay, if fair value is given, it will be recognized in the books of Professional Limited at fair value. So it will be recognized even though it was contingent liability in the books of acquiry. Correct? Yes, sir. Applicable tax rate, whenever they give tax rate, it means you need to calculate DT and DT or DTL. You are required to prepare opening consolidated balance sheet. Means in this chapter, if parent subsidiary, to opening they will ask on the date of acquisition. In consolidation chapter, we used to do what? On reporting date after acquisition date. Understood the link? Link understood? Understood? Yes, sir. Now, can I say the solution is very easy? Can we take the solution? If you permit. A minute. Now, so can I say in this question, first we need to calculate what? PC. PC na? calculation PC. First, fair value of equity shares issued. How many shares acquired? 70%. 70% of how many equity shares? You will say me. 70% of how many equity shares? 70% of 4 lakh. Correct. What is the swap ratio given? 1/2. Correct. Multiplied by fair value of equity shares of Professional Limited. How much? 40. So can you see we'll do 70% of 4 lakh multiplied by 1/2 into 40. I will always suggest first calculate number of equity shares to be issued. So this is second bracket is number of equity shares. So 1,40,000 is number of equity shares to be issued multiplied by 40. Why you require number of equity shares? To find out premium also. To find out premium. Because in balance sheet premium will be separate, capital will be separate. So always calculate number of equity shares to be issued also. So can you see it become 56 lakh? Then we need to find out fair value of deferred consideration. Let us assume discount rate is 10%. It is payable after how many years? Check karo. It is payable after 2 years. It is given the question. We will do discounting for 2 years by applying 10%. So 35 lakh we can apply discounting factor. It is coming how much? Batao? How much? How much? So much time. Oh my God. 1.10 divide equal to into 35. Coming 28.92. Why you are taking so much time? Arey Baba, first calculate discounting factor. 10% 2 year. So you don't know how to calculate discounting factor? It is given 8264. How much time why you are taking? 28.92. Okay. 28.92. Then we'll find out fair value of contingent consideration. Whether it is given. We have assumed what? Nil. Correct. Then fair value of replaced SBP award. Already we calculated. Fair value of replaced SBP award will come. That is 2.5 already calculated. Then additional payment to employee shareholders. Can I say this will not come because this is contingent and it will be forfeited if employee terminate. Therefore it will not come. Are you getting what I am saying? But if suppose they said it will not be forfeited even though employee terminate, then it will be part of PC. Therefore I have just mentioned that additional payment to employee shareholder, it will be forfeited if employee terminated, therefore not a part of PC. Understood this point? Correct. So the total PC become how much? Total PC become how much? 87.42. Understood? Correct. Understood. I will suggest whenever this type of questions come now, always think on what journal entry will be done in the separate financial statement of parent company. Because if you can identify that journal entry, you will never do mistake in consolidation. Consolidation to you are expert. Bole yes or no? But can I say first you need to find a PC and pass journal entry in separate financial statement of parent company. Okay, journal entry will be investment account debit 87.42 to equity share capital 1.4 into 10 because 10 was the face value of Professional Limited. Then 2 securities premium will be difference. 2 deferred liability 28.92 and 2 SBP reserve 2.5. Understood? Can you say no journal entry in the books of D Limited, Dynamic Limited? Because shares have been acquired from shareholders. Now, can you say we need to calculate DT and DTL? DT and DTL and fair value of INA. So can you say we need to find out fair value and the tax base? In this question, tax base of Dynamic Limited is not given. You remember, we have done under India's 12 tax base will be the tax base of previous owner. The tax base of D Limited is not given. We'll assume carrying amount of Dynamic Limited is tax base. Understood? Okay. So can you say first we'll find out fair value of all asset. Fair value of all asset. They have given fair value of only PP. Means all other asset has been taken over at book value. So can you say the total asset is 1380? 1380 minus PP. What is given PP? Minus 500 plus what is the fair value? What is the fair value? Can I say we can do in this way also? Or you write down all asset one by one? Same answer will come or not? To save time we can do in this way. And tax base will be equal to carrying amount. And carrying amount is 1380. Similarly, we'll take all liability. How much all liability given? All liability, not equity and liability. How much all liability? Everyone will calculate, huh? No one will see whiteboard. $755. Can you see in this question one liability was taken over contingent liability at what fair value? Just try to understand. Now leave it. Leave it. Chalo. There is one point though I have understood. Question might be easy, but you are taking lot of time to identify the information. And believe me, right now though I am saying na, you will to forget in exam. And therefore, my one suggestion, if you want to follow, will you want to follow? Kasam khao pehle. Kasam khao. Because believe me, if I am also a student, I will also follow. And if I will not follow, I will also do something wrong. I used to follow. Correct? And same I inform to my student also. But every student will not follow. Even my student also don't follow. Because they think they are Paramatma. Correct? One thing you are finding that you are not able to identify the information. And first thing I am informing you, find out. Then also you are taking so much time. In exam, this question need to be done in 30 minutes. And if you are taking 1 hour, even though correct, worthless. Because you are leaving some questions. Got it? Always in exam, what you should do? When you are reading the question only, what you should do? You should prepare this timeline. You can see in my regular class too, I will prepare this timeline. Check karo. Everything I will write down in my regular class. Correct. Now, how to prepare timeline? Can I inform you with this question? How to prepare timeline? So the question number 21. In exam, write down question number 1 ka A. Okay. Achha, how to write down question number? Always I will say, don't write question number 1A here. I will say, if you want to write down here also. But write down here also. Question number 1A. Suppose it is 21 in this. but suppose 1A. Correct. First highlight this. Always start new question with new page. Normally students start, suppose this is the end of the page and 2 lines left. They will start from there. Why? You are paying fees now for paper. In exam, don't save tree. In exam, don't save tree. चलेगा? अरे बोलना रे. Please don't save, huh? In exam. Correct? Then after exam, don't use for 1 month tissue paper. चलेगा? अरे बोलना रे. So always start with the new page first. Always. Then you should write down first analysis of question. Understood? This is only for yours, not for examiner. But write down this is analysis of question. Correct? Then how to prepare? But what is the date of acquisition given? On 1st April 2006. The 2002. Is the date of acquisition? Correct. Then they have given many information. Correct. First they have given 70% acquired. You have written? Correct. What is the swap ratio? They have given 1/2. Then what is the fair value? They have given 40. Just write down everything. But you are not writing 70% of equity shares of Profess Dynamic Limited. That you don't write. 70% swap ratio 40. When you are reading, you can write down. This is point number A. Point number B is what? You have done point number 1, 35 lakh. Point number 2, 25% of excess. Whichever is higher. Written. The next point is what? Fair value of PP is given. Fair value of PP is how much? 350 lakh. You don't write down fair. PP write down. P 350. Then what? That is not required. You understood not. So there is no need to write down. Then they have given what? Equity settled SBP. You can calculate yahin par. Because you know the formula. You can say 5/4 into 2. And you can calculate yahin par 2.5. Then what? Contingent? Contingent payment to employee. That already you have said now. It will not come. It's a contingent liability. Write down contingent liability assumed fair value is 5 lakh. Then what? Then DTA. You need to DTA and DTL. At what rate? Just try to understand. You have written everything like this. Now you are not supposed to look into the question. Only this small, and you can now easily find out. Just try to understand. If you are not writing, so first you are taking lot of time to finding out the information again. And in my book, it is 2 pages given. In exam question, exam paper, the font size will be big and the space between 2 lines will be also much. Same question will come in 5 pages. घुमाते रहो. Page 1, page 2, page 3, confusion. Same question will come in 4 pages or 5 pages. Because font size is big. Paper size is also small. This is to A4. They will give small paper size. So can you see it is difficult to look into the question also? And that is irritating. Once we become irritated na, दिमाग नहीं चलता. And small mistake or you are taking more time. Both are dangerous. My suggestion, write down and get this much information only. Now you will see, you will not find any difficulty. Now you see, You will not find any difficulty. Chalo, let us come. Now, which point we were into? This. Now, all asset we have done. Balance sheet information can be understood because balance sheet is given properly. So there is no need to write down balance sheet information in the analysis. Correct now. And once analysis done now, just give one box on this. Correct now. Just write down not a part of solution. Just give a box on this and just write down not a part of solution. Then you start working note. So they will understand your emotions. And even though they want to cut now, we don't want marks on that. Even though they want to cut, they will cut and they will give 0. Give us 0 on that. Step marking now. On that we don't want marks also. They will give marks on working note. You can start any question with analysis of questions. Understood? Yes, sir. Now, can is 755. Now just see the timeline or whatever you have written. 755 plus 5 will come. What is the carrying amount of our liability? 755. What is the net? You can find out this is the net amount. This is the net amount. If the carrying amount is less than tax base, it is taxable or deductible. Carrying amount of net asset is less than tax base. So taxable, deductible, deductible. It become deductible temporary difference. On deductible will calculate what? DTA. DTA at what rate? Rate C. Don't see the question now. Everything is written. DTA at what rate? 30%. 46.5 will come. It means what is the fair value of INA? 470 plus 46.5. That is 516.5. This become fair value of INA. Now can you say we can easily calculate goodwill? We can now easily calculate goodwill. So let us come to calculation of goodwill. What is the formula? Fair value of consideration paid transferred how much? We calculated how much? Fair value of consideration PC. You are not calculating now. 87.42. Then we write down value of NCI. Whether fair value method or Pasina method. Whether they have given fair value method. So we'll use which method? Pasina method. What is the fair value of INA? Already we calculated 516.5 into 30%. The same amount, this amount will come. Total will do from this fair value of INA will deducted. This is fair value of INA. This is gain on bargain purchase, which will be transferred to capital reserve. Then we can prepare balance sheet. Balance sheet we both will prepare together. Let's see how you are reacting in balance sheet. Can we prepare balance sheet? Huh? Let's see whether you are doing mistake or not. Let's see. Because one suggestion I have given when I was doing consolidation. Correct. One suggestion I have given. Let's see whether you are doing mistake or not. So can you give me first item is what? Badao. PPP. Same formula, book value plus minus adjustment. Badao how much? I don't have question. Please you need to inform me. 300 plus. Better we can take 300 plus 350. Directly now. So we can say book value plus fair value. Book value plus fair value. How much? Then what? Before that goodwill will come. Goodwill is nil. Because in this what? Gain on bargain purchase. Then what? Investment means financial asset. You know the format in exam format, huh? I am not doing any question with format. But in exam format, investment. So can investment book value plus fair value means book value plus book value only. 500 now. Then inventory. Then There is other financial asset. Correct. How much? Then what is 750? Then how much? Then 140 na? Then other equity. Under the reserve you are saying. Reserve how much? 730 plus? How much I should add? What it will be securities premium? Then capital reserve. It is 274.13. Then long term borrowing. Deferred tax? You are confusing. एक एक करके बोलो. Deferred consideration will come. How much? Payable after 2 years is long term, non current. Deferred liability how much? Deferred liability. हाँ तो बोलो. I know everything. I know the solution. I have done 1000 times this question. You know how many times I have done this question? 1000 times. I am asking you. You whatever you say, I will write down. You will say DTA, I will write on DTA. You will say DTL, I will write on DTL. You will say don't write, I will not write. I am just given one opportunity to you. Then also you are saying DTA, DTL. Just say me what I should write down. Live student, you are also doing now. Do by your own. This only we need to understand whether you can do prepare correct balance sheet or not. Format is your requirement. Format I am not doing. Huh? This is bakwas format. Huh? This is bakwas format. Now short term borrowing. Short term borrowing how much? 250. 550. There will be other liability. Don't write on contingent liability. Huh? Write on other liability. How much? Then the DTL is given na. Because how much given that you say na? Total. Dono. DTL of both you have given 75 minus DT how much? 46.5 we have created. This become what? DTL, net DTL is what? Then see whether balance sheet tell it. Check karo. All point done na. SBP reserve will also come. SBP reserve 2.5. Then NCA will also come. Wow, the findings so. NCA will also come. NCA you missed, huh? NCA will also come now. Lot of point missed. Means first thing to this is not the way of preparing balance sheet. If in this way you will prepare, first to you are not preparing as per format. Correct? What is this? What you are doing? First we are taking a lot of time. First thing just try to write now, so we are not preparing as per format, then also this much time we have taken. With format, you can see because we are writing properly now. If you are writing proper, it will take much time now. Correct? This is not the way. First thing, I have already said that whenever there is some journal entry you have done, first incorporate in this balance sheet. That was my suggestion where? In consolidation chapter. Always do that. Look at what journal entry we have done. Once you have done journal entry, incorporate in professional limited. So there will be some investment. Investment will increase by how much? 87.2. 87.4. Then your equity share capital will increase by 140. Then your securities premium will increase by an SBP reserve 2.5. Then there is a deferred liability. Deferred liability means your non-current liability will increase by 93. All done. So one thing is clear that now you will never do mistake in this. You will never do mistake in this first thing. Okay. Second point, when you are doing consolidation, when you are saying equity, so first you should complete equity only now. The format is what? When you are saying equity share capital, other equity, then NCI will come. Why you are forgetting that? Always think about NCI. So equity share capital, then we write on other equity, then we write on NCI. So you should not forget it. Correct? So when you are doing in format, just do as per format, not as per this item. Not as per this item. But I think most of the point you have done correct. I think balance sheet should tally. Check karo balance sheet tallied or not. एक बार check करो. What is the total? I think balance sheet will tally. So I am happy that you have given me correct amount. 3230. And this is how much? NCI I have not written. What is NCI? 154 point. This you need to be also added. I think balance sheet will tally. Tallied. Not tallied. How much total? 3271. What is the total of these? Difference is what? What we missed? Let's see where this is correct. Check karo. EP you have taken 650. Investment 500. Inventory 400. Trade receivable 750. Asset is correct. Equity. Equity say capital 514. Acha. In this only we have this mistake. You have done 140. That is 14 lakh na. You see, journal entry also you have given me wrong. Journal entry you have given 14 or 140. Then why you have given 140 here? Only given. I have not taken. Whatever you have said, I have written. Why you have given 140? In journal entry, what I have taken? $14 I have taken now. So why you have taken 140? We have done journal entry. So why again you are calculating it? Already we have done journal entry now. Isliye please one suggestion after doing journal entry, first to be student. Don't do everything in your mind. Write into. We have done journal entry. Incorporate in the balance sheet. You will never do mistake. Only because of this mistake, your balance sheet not tell it, and you will not be able to identify also. In exam, it is not possible to identify. Got it? I think others are correct only. I think others are correct. Check kar lo fir bhi if you want to check it. Others are correct. But you can see this is the format. In regular class, I give entire format. Write down properly each and every point. Understood? Correct? Yes, sir. So one question I have done. One more question I would like to take before going to reverse acquisition and business combination under common control. Whether I have taken that question? I think yes. Yes. Question number 23. Now from this chapter, all good questions have been asked. Only this question has not been asked. It means, can I say important? Now, you will write down all information in your paper. Correct? When I will ask you to give me without seeing the question, chalega, I am not writing. I am not writing. I will read, write with me. We should write while reading only. Chalega? Start. S Limited acquired equity shares of S Limited, a listed company, in two tranches as mentioned below table. First November 2016, 15% was acquired. Then 1st Jan 2017, 45%. Step acquisition. The shares were purchased based on quoted price on the stock exchange on relevant date. Both the above mentioned companies have INR as functional currency. Consequently, S Limited acquired control over S Limited on 1st Jan 2017. True only. Following is the balance sheet as on that date. Which date? 1st Jan. They have given carrying value and they have given fair value also. Fair value. Correct. Property, plant and equipment, intangible asset, financial asset, investment, inventories, financial asset, trade receivable, cash held in functional currency. Acha, 1 point. Cash and cash equivalent, everyone listen. Whether cash and cash equivalent will have any fair value. whether it will be taken at fair value or carrying amount. Always carrying amount. This is dhoka. Dhoka na means they want to check your presence of mind. Always carrying amount na. This is to kata laga. Yes sir. Then they have given other asset. Non-current asset held for sale. This point till now I have not done. I will do because some points are left. What Ind AS 103 says that non-current asset held for sale will be measured as per Ind AS 105. Means at carrying amount or fair value less cost of disposal, whichever is lower. Not at fair value. So they have given fair value, but can I say acquiry already applied which Ind AS? Ind AS 105 means this will be carrying amount or fair value less cost of disposal, whichever is lower only. We will take 4.5 ki 4. 4. So Ind AS 103 says it will be taken at, understood, as per Ind AS 105. Correct, yes sir. Then they have equity and liability, share capital, other equity, financial liability, borrowing, financial liability, trade payable, provision for warranty, current tax liability. Other information. PP in the above balance sheet include leasehold motor vehicle. This point you delete. Why delete? Because this point has been given as per Ind AS 17, which is now changed to Ind AS 116. So now this point is not relevant. So if they will ask, they will change this point as per the requirement of Ind AS 116. So till now I have not given you what to be done in case of lease. Once I will do that, automatically this point you will understand. So this point, when this question was asked now in RTP or MTP, that time Ind AS 17 was there, which is now changed to Ind AS 116. So please delete it. However, this point is not relevant for solution also. However, this point is not relevant for solution also as per Ind AS 17. They will delete it. Are you able to understand my emotions? Correct. Following is the statement of contingent liability of S Limited. Lawsuit filed by a customer for a claim of 2 crore. Pay value is given 0.5. It is not probable that outflow of resource embodying economic benefit will be required to settle the claim. So outflow is not probable. Will you recognize it? Yes. At what? 0.5. Any amount which would be paid in respect of lawsuit will be tax deductible. Is this point has been given for what? To find out tax base. So what is the tax base? Any amount which would be paid means it will be tax deductible when it is paid. What is tax base? It will means under Income Tax Act, it will be deductible when it is paid. So right now whether you will pass any journal entry? No. So tax base is what? 0 na. So tax base is 0. Write down in timeline everything. Write down in the timeline. I will ask from you. Okay? Income tax demand of rupees 7 crore raised by tax authority. S Limited has challenged the demand in the court. Pay value given to. It is not probable. Once again given not probable. Will you recognize it? Will you recognize it? Yes. At fair value. What will be tax base? Can you say income tax is always permanently disallowed? Therefore, tax base will be equal to what? Equal to carrying amount. If you remember Ind AS 12, I have said if it is permanently disallowed, no DT effect, then tax base will be always equal to what? Carrying amount. Say so that there is no difference. So in this case, tax base will be what? 2. Correct. In relation to above mentioned contingent liability, S Limited has given an indemnification undertaking to H Limited up to a maximum of 1 crore. One point is there about indemnification asset. Till now I have not done. I will do it. ठीक है ना? Means by mistake I have taken this question before that point. There are 2 points which I have not done. So what Ind AS 103 says that whenever you assume any contingent liability or the liability for which the payment amount is uncertain, correct, now means payment can be more than whatever you have taken. So for that purpose acquirer may indemnify you. So if acquirer will indemnify, so it become an asset, because that is reimbursable amount now. So that indemnification asset will be also recognized in the balance sheet of acquirer on the date of acquisition at fair value. Understood? But the amount to be recognized should not be more than what? The liability recognized. Correct now? So amount of indemnification asset should not be more than the fair value of liability assumed. Understood? So they have given 1 crore represent the acquisition date fair value. So 1 crore will come. Understood? Yes, sir. Any amount which would be received in respect of above undertaking shall not be taxable. So it is not taxable. It is not taxable means what? It is not taxable means what? It is not taxable means it is permanently disallowed. If it is permanently disallowed means think like this, huh? Not taxable means permanently disallowed. Means tax base will be equal to what? 1 crore. But have you understood indemnification asset? Have you understood indemnification asset? Yes, sir. Then the tax base of the asset and liability of S Limited is equal to their respective carrying value being recognized in the balance sheet. Well, for other asset and other liability, tax base will be equal to carrying amount, not fair value. Carrying value of non-current asset held for sale 4 crore represent fair value less cost of to sale. It is given also. Thank you very much. Even though not given, we'll assume this only. Even though not given, we'll assume this only. In consideration of additional stake purchased by H Limited on 1st Jan 2017, it has issued to the selling shareholders of H Limited 1 equity shares of H Limited for every 2 shares held in H Limited. Correct? Correct. Fair value of equity shares issued will be 10,000 per share. On 1st Jan 2017, H Limited has paid 50 crore in cash to selling shareholders. Additionally, on 31st March 2019, H Limited will pay 30 crore to selling shareholders of H Limited. If return on equity of H Limited is more than 25% per annum, H Limited has estimated fair value of this obligation on 1st Jan and on 31st March as 22 and 23 respectively. The changes in the fair value of obligation is attributable change in facts and circumstances after acquisition date. With this they have given about measurement period. Whatever changes happened in contingent consideration, that is for the fact after acquisition date. It should be considered for subsequent accounting, not for initial accounting. Correct? Yes, sir. Quoted market price of H Limited given on November 350, 1st Jan 395, 31st March 420. On 31st May 2017, H Limited learned that certain customer relationship existing as on 1st Jan 2017 which meet recognition criteria of an intangible asset on that date were not considered during the accounting of business combination for the year ended 31st March 2017. The fair value of such customer relationship as on 1st Jan 2017 was 3.5. Assume that there is no temporary difference associated with customer relation and consequently there is no impact of income tax on customer relation. Achha. Okay, this information they have given for measurement period. Means some information came after acquisition date during measurement period. Correct. So there was some customer relationship based on the facts existed on acquisition date. So whether we should consider it or not. But can you say for retrospective accounting? This will be taken but not on acquisition date. For retrospective accounting, one doubt will come, so whether customer relationship will be recognized. Correct. So as per Ind AS 103, any intangible asset, if it meets definition criteria, will be recognized. Correct now. Even though recognition criteria is not satisfied and there is a fair value, so it will be recognized because customer relationship is nothing but what? Of course, identifiable. Because can I say, suppose what is the meaning of customer relationship? For example, in my application, means Android app, there are many customers, students who have joined my app. Correct now. So that is my customer relationship. Whether I can sell that information to other person, yes. I may give that information about my student to SFM faculty. They will purchase it or not. Means it is identifiable, it is separable, and therefore it will meet what? Definition criteria, and therefore it will be recognized. Understood? Yes. On 31st May itself, H Limited further learned that due to additional customer relationship being developed during this date to this date, the fair value of such customer relationship has increased from 4 has been increased to 4 crore. Means initially it was how much? Then it become what? 4 crore. On 31st December 2017, H Limited has established that it has obtained all the information necessary for accounting for business combination and that more information is not obtainable. This is the end of what? Measurement period. H Limited and S Limited are not related party and follow India's income tax rate is what? 30%. You are required to provide detailed response to the following. What should be the goodwill or bargain purchase gain to be recognized by H Limited in his financial statement? For this purpose, measure NCI using Pasina method na? Pasina method. What will be the amount of NCI, goodwill or bargain gain purchase so recognized in point number A, above changes subsequent to 31st March. So there will be some measurement period accounting. Because of that reason it will change. What should be the accounting treatment of contingent consideration as on a reporting date? They have asked 3 questions. Good question or not? Good quality question. Same to same question come. If you done before exam, you can do it very easily or not. So must revise question. All these questions, whatever I have taken, all are MRQ. MRQ means must revise question. Now, only I will ask, you need to inform. I will ask you, let's see whether you are doing correctly or not. I will help you, you need to help me. Chalega? Chalo, batao. First we'll do what? Calculation of purchase consideration, correct? Calculation of PC. In this we'll do what? We'll do fair value of batao. Calculation of PC. You whatever you will say, I will write down. I will not see the answer. First you said calculation of PC. Calculation of PC. So first fair value of equity shares issued. But how much? How many shares acquired? How many shares acquired? One second, you are looking into question. No use. We'll look into the questions now. It will take more time. I've already asked you, write down all the facts. Believe me, you'll take more time or you'll take wrong information. How many shares? 45% rate. That is the previously held 15. 45%. 45%. We are calculating PC on which date? On the date of acquisition. So how many shares acquired? Of how many shares? 12 by 100. Very good. Is we are doing all figures in crore. Very good. Into what is the swap ratio? What is the price per share? Very good. Excellent. Can you give me the number of shares to be issued? Number of shares acquired. Number of shares issued, sorry. Coming how much? 0.027 coming na? Into 10,000. How much it is coming? 270. Now okay? Correct. Means we are doing rupees in crore. Then how much cash payment? 50 crore. Then what is fair value of contingent consideration? You're taking so much time. Once again, you have not written all the information. First thing, just try to understand everyone. Please say you are not able to understand. Please, please, please. Leave it. Leave it. First thing, just try to understand. 1 minute. You have not written information. First thing. This to I am saying. This I have said. This I am saying whether you will be able to recollect in exam after reading so big question. If there is a contingent consideration. Everyone just try to understand. You are not writing informations. I have given one opportunity. Better I will do only. चलो ठीक है छोड़ दो. अब I will not ask. You are not listening me. So it means you don't respect me. You don't respect me. I will not respect you. So ठीक है लो. Solution is there. I will not ask now. I have asked you. I have just given one opportunity to you. Write down information. You are not writing. Means you are insulting me. You are insulting me. Simple. चलो देखो बच्चों. I will teach in this way now. What is fair value of contingent consideration? Given 22. 22 is given now. But the point is that how much time you are taking to identify that. In class you will think it is very easy. But in exam hall it is very difficult. Correct. This already we have understood. 342 is PC. Now, can I say then we need to calculate fair value of INA and DT and DTL. So we need to find out fair value and tax base and temporary difference. So can I say one by one each asset we can take. PP, fair value is given how much? 90. Tax base will be carrying amount. Intangible asset, fair value 30. Tax base is given carrying amount 20. Investment, fair value is given how much? 350. Tax base carrying amount how much? 100. Inventory, fair value is given how much? Carrying amount is how much? 20. Trade receivable, fair value is how much? Carrying amount how much? Cash, fair value will be carrying amount only. And tax base will be also this. Correct now? Non-current asset held for sale. I said will take 4 only, and carrying amount is also 4. Indemnification asset. Fair value is given how much? And tax base will be equal to what? 1 crore already written. Total we can find out. Then coming to liability. Borrowing fair value is what? Carrying amount 20. Trade paper fair value how much? Carrying amount how much? Provision fair value how much? Carrying amount how much? Current tax liability fair value. Carrying amount how much? Provision for legal suit 0.5. Tax base how much? 0. Provision for income tax demand. Tax base how much? 2 only. 2. Already I mentioned 2. Correct? Understood why 2? Yes, sir. Now we can find out INA. So INA is coming 416.5 and 152. But if carrying amount is more than tax base, it is taxable, deductible? Taxable. It become taxable temporary difference. So on taxable temporary difference will create TTL. At what rate? 30%. That will come this. So we'll do this minus this. This will be INA. Understood? But lot of presence of mind chahiye. One mistake, wrong. Correct. Then can I say we can easily calculate goodwill now? We can agree. Fair value of consideration paid 45%. How much? We calculated. How much PC we calculated? 342. PC we calculated now. 342. Then we'll say fair value of previously held equity interest. That is 15% of 0.12 into what price? I don't know. 15% 0.12 multiplied by what? 350. But we are calculating fair value on which date? We are calculating fair value of previously held equity interest on which date? On acquisition date. So we'll take market price on which date? So why you are giving on November? I say write and do. Will take information from question. High chances दिमाग नहीं चलता एग्जाम में. You are not able to understand my viewpoint. No use. Just try to understand one thing. No use of if in exam you are not able to perform on that given day. All your past revision become null and void. No, Companies Act language. If on exam day you are not able to perform, all your past revision become null and void. You need to again start revision after result. फिर से with retrospective effect. Exam day is very important. How to react in exam, that we need to understand. How to solve the question, that we need to understand in exam hall. In class it is very easy. With self-study it is very easy if you are referring solution. But can you do it by your own in given time? That is what benchmark. That we don't practice. Solution we can understand, but can you do the same question in 30 minutes? Even though you have done 10 times, but after 10 times, can you do that question in 30 minutes? That is challenge, na? That's why I am saying write and do. चलो ठीक है. So it is fair value on acquisition date 395, always acquisition date. So it becomes 7.11. Then we'll take Pasina of fair value method of NCI. Pasina or fair value? Pasina. We will take value by NCA by using Pasina method. What is the fair value of INA? Already we calculated 368.465 multiplied by 40%. This will come. We can compare with fair value of INA. We'll calculate goodwill. Goodwill calculated. In this question, they have not asked consolidated balance sheet because they have not given the balance sheet of other company. Now they have asked one more question. Due to measurement period, whether any changes will be done? Yes, because there was one customer relationship that need to be recognized. So if customer relationship will be recognized, so your NCI will be affected and goodwill will be also affected. Because NCI is measured at Pasina method. If NCI is measured at fair value, then it will not be affected. If NCI is measured at fair value, then NCI will not be affected due to increase or decrease in INA. If NCI is measured at Pasina method, so due to increase or decrease in INA, NCI will be also affected. So what journal entry will do? Customer relationship account debit to NCI to goodwill. Correct. Now already I have given one example. So can you see this journal entry will do? This journal entry will do customer relationship account debit to NCI to goodwill. Now question arises, customer relationship will come at 3.5 ki 4. 3.5. 3.5 is subsequent increase related to subsequent period. For subsequent fact, it should not be recognized. And can you say it will never be recognized? Because that is due to self-generation. Self-generated intangible asset will never be recognized. Understood this point? Correct. So 3.5, NCI will be what? 40% of 3.5 and the difference will be goodwill. Difference will be goodwill. Correct. Then they have asked one more question, contingent consideration. What was the initial fair value? Contingent consideration, what was the initial fair value? What was the subsequent fair value? Whether it is a financial liability or equity? Is payable in cash? Is payable in cash or equity? Equity. Equity. Is payable in cash or equity? Contingent consideration settlement is in cash or equity? Cash. So it is financial liability. Will you do subsequent measurement? Yes. That subsequent measurement gain or loss will be transferred to PL. It means initially you recognize that what? 22. Now it become what? 23. You will increase your liability by what amount? So PL account debit to provision for contingent consideration, you can say 1. Understood? But you should give the reasoning also why we have done. So in class, so I have just given detailed answer. But I hope you have understood whatever I am saying. Correct? Solution is given, you can read. Have you understood? Good question can be asked in exam. Good question can be asked in exam. Only this question has not been asked. Correct? 2 questions I have done for acquisition which is not a reverse acquisition. Achha, one doubt came, sir, we can't write anything in question paper. We can't write anything in question paper. Of course, I understood you can't write in question paper, but if you write, nothing will happen. Write down with pencil. Correct now? So small information if you are writing, no one is going to come and see your question paper. Correct now? I have also given exam. Correct now? So if you are not discussing with anyone, no one is coming and cross-checking your question paper. And if you are discussing with someone, they will come and cross-check your question paper. Correct? So I will say that is a good idea. Correct? Or if you can't write in question paper, so you don't want to write in question paper, write down in your answer paper as an analysis. Understood now? But you need to keep everything in your mind. You keep everything in your mind. Okay, understood? Can we follow? Just try to understand. I have also given exam. If you are only concentrating on your exam paper, no one is going to come and disturb you. No invigilator will come and cross check your question paper. Whether you have seen anyone is coming and cross checking your question paper in your inter exam, no one will come. If you are discussing with someone, they may come and check you. Understood? Yes, sir. Understood. Thank you, sir. So at CA final level A, you know what happened in exam hall? Can I come to reverse acquisition? I need to complete this chapter before break. Any case, let's see. Now, reverse acquisition means what? Reverse acquisition means legal acquirer and accounting acquirer are not same. Means, just try to understand. One good point is what? Suppose A Limited absorb B Limited. Correct? Understood? So this is what? Legal acquirer, legal acquiring. And this company is liquidated. But now this company become what? Accounting acquirer, and this is accounting acquiring. So now the question is that we need to apply Ind AS 103 in whose books? A or B? B, but B to liquidated. Means what they want to say? We need to maintain the books of account of A only. Means you can't challenge legal. Means who will prepare balance sheet? Means in the books of A. In the books of A, to journal entry from the point of view of what? B. This is reverse acquisition. Can I say legally also maintained? As per substance also we have done. So books of legal acquirer, but journal entry from the point of view of accounting acquirer. Just try to understand. Now, everyone, can I say in the books of A, already asset and liability is coming at carrying amount, equity is coming at carrying amount. But if suppose B is the accounting acquirer, so in the books of A, can I say asset, liability and equity of B should come at carrying amount? And this asset, liability and equity should not come. So what we should do? First we'll incorporate asset, liability and equity of B in the books of A at carrying amount. Understood? Then eliminate asset, liability, equity of A from the books of A at carrying amount. Then recognize asset, liability of A in the books of A at what? Fair value. So this is acquired now. And the difference with PC will be adjusted where? In goodwill or gain on bargain purchase. This is the concept. Means concept remains same. If you understood how to calculate PC, so goodwill should be calculated from A's point of view. Sorry. Goodwill should be calculated from accounting acquirer point of view. Correct? Understood? Correct. So what we'll do, we'll eliminate asset, liability, equity of what? Legal acquirer from the books of legal acquirer. Then we'll incorporate asset, liability and equity of accounting acquirer in the books of legal acquirer, and then recognize assets and liability of legal acquirer at fair value, and the difference will be PC will be adjusted in goodwill or gain on bargain purchase. This is the concept. Only I need to explain you thoda sa PC point of view and thoda sa concept in this. Correct? Yes sir. Can we come to one question? Can we come to one question? On September 30, NTDA issued 2.5 shares in exchange for each ordinary shares of entity B. All of the entities B's shareholders exchange their shares in entity B. Means they have given swap ratio. Entity A issued 2.5 shares in exchange for each ordinary shares of entity B. Therefore, entity A issued 150 ordinary shares in exchange of 60 ordinary shares of entity B. You can see in the books of entity B, there were how many shares? 60. What is the swap ratio? 60 into 2.5 divided by 1. How much? 150. That is only given. Even though not given, we could have calculated. The fair value of each ordinary shares of entity B is 40. The quoted market price of entity A is 16. The fair value of entities A, identifiable assets and liability, are same as the carrying amount, except that fair value of entities A, non-current asset, is how much? 1500. Now you can see A acquired B, but they have given fair value of INA of what? A. It means from the question it is understood it is what? Reverse acquisition. But you need to prove it that it is a reverse acquisition. Huh? Are you getting what I am saying? But if they have given fair value of legal acquirer, it means what? Reverse acquisition. Means can I say to confuse you, they should give both fair value. Are you able to understand what I am saying? Yes, sir. Then they given balance sheet. You can see given also entity A, entity B, legal parent, legal subsidiary, accounting acquirer, accounting acquirer. But this will not be given the question, don't worry. So in exam they will not give this. Otherwise you will understand this reverse acquisition. This question taken from international book, same to same. Same to same question has been taken from international book. Then they have previous CVS. Then they have also asked earning per share. Earning per share will do at the end. Like now in this. Can you say first we need to what? First we need to do what? Identify accounting acquirer. First step is what? Identify accounting acquirer. Correct? So let us identify accounting acquirer. How to identify accounting acquirer? First we'll do number of shares issued to the owner of B. How much? 150. Number of shares already held by the owner of A, 100. Right now, number of shares already held by owner of A in A, because entity A absorb entity B na, 250. It becomes 60% and 40%. Who is getting largest voting power? Entity B. So even though entity A is legal acquirer, it is understood entity B is what? Accounting acquirer. Therefore it is a case of what? Reverse acquisition. So first you need to prove this. Understood? First you need to prove this. Now whenever there is a reverse acquisition. We need to calculate effective consideration. What is the meaning of effective consideration? How many shares entity B would have been issued if entity B would have acquired entity A. That is known as effective consideration. Understood? Means we need to calculate how many shares would have been issued by entity B, means accounting acquirer, if accounting acquirer would have acquired accounting acquiree. Correct? So number of shares effectively issued to the owner of entity A if entity B would have legally acquired entity A. Correct now. But the how many shares of entity A? 100. What is the fair value of shares of entity A? Fair value of shares of entity A 16 divided by number of shares of, divided by fair value of shares of entity B. Can you say this will only come? So can you say how many shares would have been issued? 40 equity shares. So what will be the fair value of this 40 equity shares? 40 into 40 means this become effective consideration. 40 into 40, 40 is the equity shares of entity B multiplied by the fair value of equity shares of entity B. Understood? This becomes 1600. So this become effective consideration. Effective consideration. Understood? Now once you have calculated effective consideration, now we can calculate what? Goodwill or gain or bargain purchase. Taking means from the point of view of entity P. Correct. Now calculate goodwill or gain or bargain purchase. What is the fair value of effective consideration? 1600. Now minus fair value of INA of which company? Entity A. So all asset, all liability at book value. Only they have given non-current asset at fair value. Non-current asset how much given? So you can see non-current asset I have taken 1500. Current asset how much? Book value 500. Non-current liability how much? Current liability how much? So what is the total fair value of INA? 1600 minus 1300 how much? Goodwill. Goodwill is equal to 300. Understood? Means now if I prepare balance sheet, let us say, I will not see, otherwise you will not able to understand. Let us prepare balance sheet. Now we are preparing balance sheet of which company? Entity A only. But from the point of view of, don't write from the point of view of entity B. In exam, to understand I can write down, but in exam don't write down. Entity A. But now think from B. Means can you say asset of B will come at book value, asset of A will come at fair value. Formula remains same, book value plus fair value. So can you start with PP? PP how much? Batao. Non-current asset. Means you are giving book value plus fair value or fair value plus book value? Give me book value plus fair value. ज़्यादा मजा आएगा. Book value of accounting acquirer, fair value of accounting acquiree. बताओ. How much? Then goodwill will come how much? Then book value. $1,000. Total. Then equity share capital बताओ. Book value P. 600. And how much PC? 1600. It become how much? Equity share capital of B. Equity share capital of B will come now. And then PC. That is the reverse acquisition. Think reverse. Reverse. In the books of A only, huh? Correct? So book value, whenever I am saying book value means entity T. Fair value means entity A. Correct? Then other equity batao. 1400 plus nil ray. We never acquire reserve and surplus. This though I have seen lot of student mistake. Danger, super danger. Reserve मजा आ रहा है. Then non-current liability how much? Current liability how much? Balance will tell you, check करो. Balance will tell you. Only one doubt will come. बताओ. This is 2200. But again, legally, how many shares? Legally, what is the number of shares? Legally, means as per Companies Act, we need to give number of equity shares issued. बताओ. 100 was the number of shares. And how many shares issued to the owner of B Limited? 150 na? It become 250. 250 into what? What is the nominal value? Nominal value. 10 na? 8 to 10. You can say it should come 2500. It will not match. It will not never match. It will never match. Just try to understand everyone. As per Ind AS, there is no concept of nominal value. Means if you are preparing balance sheet as per Ind AS, no doubt will come. This is correct. But if you apply the requirement of Companies Act, doubt will come. Because as per Companies Act, you need to also disclose nominal value and number of shares. So legally number of shares will be disclosed. You can't say now effective number of shares. You can disclose effective number of shares. अरे बोलना रे. Is as per Companies Act, legal number of shares to be issued, that will be disclosed now. If you write down 2050 shares at nominal value, it will come 2500. Mismatch. Mismatch. Correct now. Till now, no clarification has been given regarding this. Till now, clarification has not been given regarding this. Are you able to understand what I am saying? Correct. But suppose you want to present a balance sheet with notes to account in exam. So two suggestions are there from my point of view. I can give two suggestions. Because in this question, though, they have not given notes to account. But if you give notes to account, so you will be you will stuck here. Correct? So in notes to account, write down legal number of shares. Don't write down effective number of shares. Even though you are writing effective number of shares, the effective number of shares will come at what? Nominal value only, na? But that will be wrong. You should write down legal number of shares. Two suggestions. First suggestion is what? Change the fair value. Change the face value. Can we change the face value? Can we change the face value as per Companies Act? So, bolu, yes or no? You say something. I'm asking you. You remain silent. Can we change the face value? Can't change the face value. Yes, we can change the face value. We can amend face value. Read Companies Act. We can amend face value. Huh? We can amend. Why we can't amend? By passing some resolution, huh? We can amend. I don't know ordinary or special, but yes, we can amend. Correct? Understood what is happening? Yes, we can change. Sorry, 1 minute. Some trouble I'm facing. So either we'll do 2000, what was the 2200, na? 2000 divided by what? 250 you do. How much? And this will be your face value. First suggestion. We can amend. Correct. So can you say now we can add on 250 into 8.8. Can a Companies Act is not violated? This we are doing because of Companies Act. I said as per India's no issue. Only issue is coming when we are fulfilling the requirement of Companies Act. Second suggestion is what? What you should do? You should write on what? 250 into 10 only. 2500. But how much difference in the balance sheet? Reserve and surplus decrease by what? 300. Reduce reserve and surplus by 300. This is the second suggestion. But this is my suggestion, not ICAI suggestion. Are you able to understand what I am saying? Two suggestions from my point of view. Both are okay till there is any amendment in Companies Act. But I will say an exam, don't give what? Notes to account. Or don't disclose number of shares. That on equity share capital 2200. Are you getting what I am saying? Correct? So in solution they have also mentioned this only. When you read the solution, ICAI solution, they have given what? 2200 only. But they have not given notes to account because they understood difficulty there. What chalu hai ICAI? ICAI is very smart. Why they have not given notes to account in this balance sheet? In every balance sheet they are giving. In this balance sheet they have not given. Understood what I am saying? Have you understood my point? So reverse acquisition done. Reverse acquisition done. Understood. Now just try to understand. In one question now, one question reverse acquisition. They have asked you to calculate number of shares to be issued. Suppose if they ask you to calculate number of shares to be issued, are you able to understand what I am saying? Or better, I will take that question if you permit me. Because right now time will not permit. There is one more question, but that question is already asked in exam. Correct? But that was also a very good question. Therefore, I am not taken in this list. But concept you understood? Concept you understood. Now let us come to the last concept of this chapter. Reverse acquisition you understood. Reverse acquisition, you know, reverse acquisition can be in the following form. You can read. You can see I have given accounting treatment for reverse acquisition. If it is amalgamation, if it is absorption. Amalgamation means what? When A, B become AB. Absorption means what? When A absorb B. So right now I have taken one question of absorption. If suppose AB become AB means new company. So can a journal entry will be done in the books of AB. And suppose A is accounting acquirer and B is accounting acquiree. So all asset of A, all liability of B, all asset of accounting acquirer, all liability of accounting acquirer, and all equity of accounting acquirer will come at carrying amount. And assets and liability of accounting acquirer will come at fair value. Difference should be considered as goodwill or gain on bargain purchase. But they have not given any question of amalgamation. Correct now. You can read it. You can read it. Correct now. This you want to delete because you will be confused with this. If you want to delete. Have you understood this point? Correct. Now coming to business combination under common control. Now whenever there is a business combination under common control means what? They want to say that suppose A A Limited control B and C. So B and C are under common control. Now BC amalgamated or B absorbs C. So this is business combination under common control. Or if I say parent company absorbs subsidiary company, is business combination under common control. Are you able to understand? So what they want to say, any business combination involving entities of business in which all combining entities of business are ultimately controlled by same parties before and after business combination. Ultimately controlled by same party before and after business combination. Just try to understand what they want to say. If suppose there is one father, there is one son. Father controls both sons. Son is doing business 1 and business 2. And this father control both. This is joint family. Now, if they suppose join together, my question to you all, whether there is an intention of purchase. Business 1 join with business 2 under the control of father, whether there is an intention of purchase. There is no intention of purchase. Means sometime, because I am also joint family, even though I am independent, my business is totally separate, but I am from joint family. Means whatever I earn, I forward to my parents only. They take all the decision because I am younger son. Correct now? Means all decision of my investment will be taken by my father or my big brother. I am from joint family, so I am not separated. Even though my business is separate. Understood now? Now suppose my father is always calling me, come to my business, we require hand. Suppose I went there and we joined together. Whether any purchase intention? There is no purchase intention. It means, can I say, we should not apply acquisition method. And therefore they said we should not calculate any goodwill or gain on bargain purchase. And we'll apply pooling of interest method. You remember pooling of interest method? Pooling of interest method under AS 14. But AS 14 used to say amalgamation in the nature of merger. That was Bakwas concept. In this they are saying, whenever business combination is under common control, there is no intention of purchase only. If there is no intention of purchase, we should not apply acquisition method. We should apply pooling of interest method. Pooling of interest method means what? All asset, all liability will come at book value. Will be incorporated at book value. So there is no intention of purchase. Correct. And reserve and surplus of that entity should be also maintained. Reserve and surplus of that entity should be also maintained. Means reserve and surplus of transfer company should be maintained in the books of transferee company. Correct. And any difference between PC and the share capital of transfer company will be adjusted in capital reserve. Only these 3 points. First, all asset, all liability will be incorporated at reserve and surplus of transfer company should be also maintained, and the difference between PC and share capital of transfer company will be adjusted in capital reserve. Understood? So simple. Whenever there is a business combination under common control, what they said, apply pooling of interest method. Assets and liability of transfer company are incorporated at book value. No adjustment is made at book value of assets and liability of transfer company, and no new asset will be recognized. Correct. Identity of reserve of transfer company should be preserved, means it should be also maintained. Correct. And the difference between consideration transferred and share capital of transfer company will be transferred to capital reserve. But this is not gain on bargain purchase. Huh? Any difference we are transferring it to capital reserve. It can be negative difference, it can be positive difference. Understood? Correct. Have you understood? Simple. Now, this much you understood? Correct. This much you understood? Business combination under common control you understood? Now let me first complete all the theoretical point, then I'll come to the last question. Now, they have given one concept of demerger. What is demerger? Demerger means there is one entity which require demerger. Suppose it has two business, business 1, business 2. So this business 2 will be transferred to a newly incorporated company, a new company will be formed. So this business 2 will be transferred to a newly formed company, and newly formed company will pay PC, but PC will be paid to whom? To the shareholders of demerged company. This concept is known as demerger. Normally, PC is paid to whom? Directly to the company from whom we are purchasing business. But in case of demerger, PC is paid to whom? To the members of demerged company. In this concept, this entity is known as demerged company. Means can I say it is acquiree, and this company is known as resultant company. This is known as acquirer. So to understand whether this is a question of demerger, it is not a question of demerger. There are 3 points. First, a new company is formed. Second, a business or one business or more than one business is transferred to resultant company, and demerged company is not liquidated. Demerged company is not liquidated. Third, PC is paid to whom? Shareholders of demerged company. In this case, after demerger, shareholders of demerged company will also become shareholders of resultant company without any investment. This concept is known as demerger. Now what they want to say? Suppose this is demerger, and before demerger, this parent company were controlling what? Demerged company. Why? Because they were holding 60% shares. Now after demerger, this company will also allot equity shares to them, because parent company is the shareholders of demerged company. Bolna. So how many proportionate shares will be given? Means can I say this P is also able to control resultant company after business combination? Can I say this become demerger under common control? Are bolna re. This become demerger under common control. Means if demerged company is controlled by some party, so ultimately that party will also control what? Resultant company after business combination. This become business combination under common control, not? Understood? Yes, there may be one situation. Suppose this is one demerged company, but it is not under any control. Means there were many shareholders who were not controlling, no control. Are we able to understand? So resultant company will pay shareholder proportionate shares to them. So here also no control. Here also no control. So can you see this become demerger not under common control? So in this case, which Ind AS will be applicable? Whenever business combination is not under common control, which Ind AS is applicable? Bolo Ind AS 103. Ind AS 103 na? Means whenever this demerger is not under common control, so in the books of resultant company, which Ind AS is applicable? Ind AS 103. But whenever demerger is under common control, we will not apply what? Ind AS 103. We will apply Appendix C to Ind AS 103. Are we able to understand? One second. First, have you understood demerger? So there is one question on demerger. Same to same question maybe. Very simple is very simple question. Correct? Very simple question. Even though I don't discuss, you will understand. But concept I need to give now. Why? Because thoda sa alteration, you will be in difficult situation. Are you able to understand what I am saying? Demerger, have you understood? Can is demerger may be under common control or maybe not under common control? My question to you all, if it is demerger not under common control in the books of resultant company, because that is acquirer, which Ind AS will be applicable? Ind AS 103. Can you see if that question come, you can do by your own, because you know Ind AS 103. Journal entry will be INA account debit to PC. Difference will be goodwill or, but be careful here. PC is paid to the members. Correct. Now, if demerger is what? Under common control, then which Ind AS is applicable in the books of resultant company? Appendix C to Ind AS 103. Which method? Pooling of interest method. Understood? There is no question of this nature. They have not given any question of demerger not under common control. They have given two questions in ICAI study material in which solution has been done based on Appendix C to Ind AS 103. So I will take only this into concept. I will not do detailed discussion of this. But then also, can I say in the books of acquirer, so you can do? Correct? Have you understood? Means, if I want to say demerger, understood? So demerger can be business combination not under common control and business combination under common control. So this I am not discussing because there is no such question. This I am only discussing because there are two questions based on this. Have you understood? Correct? Let us take first one question based on this. Can I take that question? Solution is very easy. Yeah. Question is this. E Limited has two divisions, laptop and mobile. Two division means two business. Division laptop has been making a constant profit while division mobile has been suffering from losses. On 31st March 2002, the division wise draft balance sheet is given. You can see laptop division, mobile division, and total they have given. Fixed asset, depreciation, net asset, current liability, total financed by loan fund capital. Correct? Understood? And surplus. Just try to understand. This equity cannot be division wise. This equity cannot be division wise. They have given only to confuse you. Equity cannot be division wise. You only say whether reserve and surplus can be division wise. Whether equity share capital can be division wise. No. So this equity cannot be division wise. Equity is always total wise. So this I will say, even though they have given equity division wise, I will say delete it. Are you able to understand what I am saying? Equity, can you please repeat? Equity cannot be division wise, because I know you will do mistake here, but same question will come, you will do mistake here. Equity cannot be, therefore delete it. If given in the question, delete it. Delete now. You don't delete, just write one note. Equity is cannot be division wise. Equity is always total wise. They have given only to confuse us. Got this point? Have you understood this point? Now, division mobile along with assets and liability were sold for rupees 25 crore to Turnaround Limited, a new company. Demerger first condition. who allotted 1 crore equity shares of rupees 10 each at a premium of 15 per share to the members of E Limited. Second condition, in full settlement of the consideration in proportion of their shareholding, one of the member of E Limited was holding 52% shareholding of the company. Means there was one person who was controlling what? E Limited. So after demerger, that person will be able to control T Limited. Therefore, it become demerger under common control. Have you understood? Past journal entry in the books of E Limited, prepare balance sheet, prepare balance sheet of both company. Why both company? Because in this E Limited is not liquidated. Correct. In demerger, demerged company is not liquidated. In absorption, they will never ask. Are you getting what I am saying? Are we able to understand? Yes, sir. Can I take the solution? Follow. Solution is very easy. Huh? Solution is not at all difficult. First, you should add on in this way like this. In the given case, mobile division was transferred by E Limited to a newly formed company T Limited, and consideration was discharged by T Limited to the members of E Limited. Therefore, given restructuring of business is demerger. Correct? In the given case, one of the member of E Limited is holding 52% share of E Limited, which indicates such member control E Limited. After demerger of E Limited, members of E Limited will receive proportionate number of equity shares of T Limited. Therefore, members of E Limited who is controlling E Limited will also control T Limited after demerger. Hence, demerger will meet the definition of business combination under common control, and Appendix C to Ind AS 103 will be applied for accounting treatment in the books of Turnaround Limited. However, they have asked only journal entry in the books of E Limited, but we'll do journal entry in both books to understand. Now just try to understand. In the books of E Limited, asset liability of mobile division is transferred. It will be de-recognized at what? Carrying amount. But nothing is receivable. So there is no PC. The difference between carrying amount of asset and carrying amount liability will be gain or loss on restructuring, which will be transferred to capital reserve. Only two journal entry. So what journal entry? For transfer of mobile division, current liability account debit will decrease liability. Loan fund account debit, accumulated depreciation account debit, to PP 500 gross amount, to current asset 500, and the difference will be gain 100, and this gain will be transferred to what? Capital reserve. Very simple journal entry now. So all asset, all liability of mobile division will be de-recognized at carrying amount, and difference will be gain or loss on restructuring, which will be transferred to capital reserve. Done. Now in the books of T Limited, we need to recognize all asset, all liability taken over at which value? At which value? We recognize all asset, all liability taken over at which value? Book value only, because it is which method? Pooling of interest method. So PP will come at what? Book value, but can I say WDV? They will not recognize their depreciation. So PP account debit to 100, current asset 500, to current liability 400, to loan fund 300, and PC is payable to members. So to members of E Limited, what is PC? How many equity shares they have given? And what is the issue price? At premium. Premium is 10 plus 15, 25. So 25 crore. Difference will be what? Any difference will be what? No gain, no goodwill. The difference will be adjusted with what? Capital reserve. Understood? Have you understood this? Correct. Any doubt? And then we'll allot equity shares members to E Limited to equity share capital to securities premium. Only these two journal entry. Now can you say with this two journal entry you can prepare this balance sheet? Correct. In exam always prepare two balance sheet. Don't prepare in one balance sheet for E and T, they will not give marks. Don't prepare one balance sheet. In class for saving time I have done in this way. Correct? Hello. But can you say now it is very easy? Batao. Can you give me the balance sheet of E Limited? PP will come at what? Only laptop division? So PP of E Limited will be how much? You will say the amount. PP of E Limited. Amount give me. Laptop division. In the books of E Limited now there is only laptop division now. So PP will be how much? 25. Current asset. Yes, not amount. Yes. Current asset how much? 200. Equity share capital how much? Don't see whiteboard, huh? Don't see. I am saying E Limited, not T Limited. E Limited. 25. Other equity. How much was other equity? देखो once again तो कितना बड़ा मिस्टेक करते हो. I have deleted this. Then also you are taking 175. Just try it. इतना चिल्ला के बोला. Class I have said चिल्ला के. Just try. In class only you are doing mistake. I have said 2 not 5 times. This has been given to confuse you. This has been given to confuse you. You will do mistake pakka. And you are doing mistake. You are saying 175. First thing I know where you will do mistake. I have already said now. This is not division wise. It's always total wise. This is total wise na. बोलना रे. In exam also same question will come, you will do mistake. बताओ. We'll take 75 na. 75. 75 plus gain on restructuring was there. How much gain on restructuring? 100. So 100 plus 75 is what? 175. So 175 will come. बोलो yes or no? Then non-current liability. Zero. Current liability. 25. Balance will tally. Now come to what? T Limited. We will say only mobile division. But the PP, current asset, equity share capital PC, whatever we have issued at nominal value. So PC is 10. Other equity will be securities premium plus capital reserve. So let us see. Securities premium was 15 and capital reserve was how much? 125. But 125 debit balance. So 125 minus 15 how much? 110 negative. You can see we have written negative only. Understood? Non-current liability. Mobile division ray. Loan fund is there. Current liability how much? And balance sheet will tally. The question cannot be simple than this if you practice first though. First practice. But can you say? Always I say in class. ये क्वेश्चन में दम नहीं, हम किसी से कम नहीं. This question is very easy, but then also if you don't revise, then you will do mistake. Revision is required, but this question already asked in exam. Already asked in exam. Same to same question was asked. What do you think? Question is difficult or complicated? If you revise, then it is not difficult. Understood? Correct. This also you have understood. I have taken all the questions. So first let me complete the balance part. Then if time permit, I will like to take one more question. Demerger done. Now there are some miscellaneous concepts. Let's read it. Business combination with no consideration. Business combination with no consideration. Correct. Already I have explained in consolidation that in this case, what will be the how to calculate goodwill? Fair value of previously held equity interest will come because no consideration. I said now if suppose they repurchase equity shares from other shareholders, so it might happen eventually the investor is getting control. Correct. So that is business combination without consideration. So fair value consideration paid will be nil. Fair value of previously held equity interest will come. Fair value of NCA will come. Minus what? Fair value by NA. This will be goodwill or gain or bargain purchase. Non-current asset held for sale of acquiry. Already I have discussed. It will be recognized at what? As per Ind AS 105. Means lower of these two. Not at fair value. At fair value less cost of disposal. Indemnification asset also I have said. I think I have said you have understood also. Can I leave? Yes. Then lease. This is, I think, they may give a question on this. I think. No question till now. Why? Because Ind AS 116 is new Ind AS. So till now they have not given any question in business combination related to what lease. So what they want to say? Because Ind AS 116 came, so Ind AS 103 was amended related to this part. So can you see the acquiry can be lessee or acquiry can be lesser? If acquiry is a lessee, so ROU asset and lease liability will come. Correct? ROU asset and lease liability will come. So what they have said, lease liability will be equal to present value of remaining lease payment discounted by using means as per Ind AS 116. As per Ind AS 116. And can I say ROU asset will be equal to lease liability only? It should be equal to lease liability. So what they want to say? Acquirers they recognize ROU asset and lease liability as per what? Ind AS 116. Correct. Now we know one thing, that in the books of lessee there is some recognition exemption. If the lease is short-term lease or lease is of low value asset, so it means the acquirer is not required to recognize ROU asset and lease liability for lease for which lease term and within 12 months from the date of acquisition. Means now just find out on the date of acquisition if lease term and within 12 months from date of acquisition becomes short-term lease. So there is no need to recognize lease liability and ROU asset, even though it was not a short-term lease in the books of acquiry. Because you need to calculate 12 months from which date? From acquisition date. Or lease is of which asset? Of low value asset. In this case, we will not recognize what? ROU asset and lease liability in balance sheet. In other case, we recognize ROU asset and lease liability. But at what amount? Amount will be the acquirer shall measure the lease liability at present value of remaining lease payment as if the acquired lease was a new lease on acquisition date. Means on acquisition date we'll assume it is a new lease. And can I say we need to discount it either at interest rate implicit on lease or incremental borrowing rate. Remember, same thing is as per Ind AS 116. And can I say acquirer shall measure ROU asset at the same amount as the lease liability? At the same amount as the lease liability. Means ROU asset will be equal to lease liability. Simple. Can I say if questions come, you can do it by your own? Bole yes or no? You can do it or not. There is no question, but you can apply now. They have given one lease. They will say in the books of acquiry, ROU asset and lease liability is coming. Understood? Now they will give you remaining lease payment. They will give you discount rate. Can't you find out present value lease payment? Yes, that will be lease liability recognized in the books of acquirer. And same will be ROU asset. So ROU asset will be debited and lease liability will be created. No impact in goodwill. But it will come or not? You can do it or not? Yes. But if acquiry is a lesser, you can lesser means either operating lease or finance lease. Operating lease means underlying asset is coming. Finance lease means lease receivable is coming. Are you able to understand? So what they want to say, in measuring the acquisition date fair value of an asset, the acquirer shall take into account the terms of lease. Correct? Means simple word. Can you see if it is a lease receivable, it will be accounted at present value of remaining lease payment. Underlying asset will recognize a fair value only. Underlying asset will be as it is the other asset. Lease receivable will be accounted at present value of remaining lease payment. If lessee is what? If acquiry is a lesser. Acquiry is a lesser. Understood? I hope. They can ask, but from my point of view, they will ask this only. Acquiry is a lessee. But it is important from my point of view. Now, assembled workforce. One doubt will come, sir, when we are acquiring assembled workforce, skilled workforce, whether that workforce will be recognized as an asset. Well, no. That workforce cannot be recognized as an asset because it will not meet the definition of asset, because we do not have control over such workforce, and therefore it will never be recognized as an asset. Customer and subscription is already I have discussed. Customer relationship, it will be recognized if we meet the definition criteria. Correct? Yes, sir. In process research and development project, this already I have discussed under Ind AS 38. Any research project of acquiry will be recognized if it meet the definition of intangible asset. Even though it does not meet the recognition criteria, it will recognize a fair value. Even though development phase not started, then also recognize. Even though it was not recognized in the balance sheet of acquiry. Same thing we have discussed. This is also important. Can be asked in exam. Reacquired right. No question till now, but they have given one illustration in this. Reacquired right. What is reacquired right? Suppose I have given one right to you. What right I can give? That you can run my virtual classes. So one right has been given now. Means you have taken my franchisee. Franchisee means I have given right to you that you can play my recorded classes in your remote place, remote area, any area. Then it means I have given some right. So I will charge some fees from you, and this right will be for a certain period. Suppose 10 years I have given. Now, in your books it is an intangible asset. Correct?
In your books, it is an intangible asset. And you will amortize it for what? 10 years? But what happened? You started playing my recorded classes and you are getting more student than me in face-to-face class. In face-to-face class, so no one is coming now. But in recorded class, everyone is coming. So I found, अरे ये क्या हुआ? Means I am not getting student and he is playing my class. You are getting student. So you are earning more. So I will become greedy. So I will acquire you. I will acquire entire your company. And I will offer you some good amount. But I will acquire now. But in this what happened? You become acquiree, business combination. In this what happened? I am reacquiring my right also. My right is whatever right I have given, that I am reacquiring. The concept reacquired right. Understood? Reacquired right. Topic understood? Reacquired right. Now the question is that whether reacquired right will come in my balance sheet. Yes. So this reacquired right will be also recognized at fair value on the date of acquisition. Correct? Understood? And can I say it will be subsequently amortized in the remaining period of the right. Suppose I have given the right for 10 years, 4 years expired and date of acquisition came. So I will recognize at fair value and subsequently amortize at 6 years, during 6 years. Understood? But this one point will come. Because I have reacquired your right, I need to pay some compensation to you as per my previous contract. What was my previous contract? That if I reacquire it, then of course I need to pay compensation. So can you see there is some settlement for a transaction which is not a business combination transaction? That should be separately accounted or not. So what Ind AS 103 says that we need to find out any gain or loss on settlement. This gain or loss on settlement will be separately accounted and should be transferred to PL. Are you able to understand? So how to calculate that gain or loss, that we need to understand. Have you understood this much? Till now this point has not been asked, not given in the full question, but one illustration has been given. I feel it is important, but I don't know whether it will come or it will not come. But have you understood the concept? So what they want to say? An acquirer may reacquire right that it had previously granted to acquire to use acquirer recognized and unrecognized asset. For example, trade name, brand, etc. I transfer my, when I give my right, so I will say you can use my brand also. Chiranjeev Jain classes you can use, and you can use it to attract students. Correct now? I can say in this way. So we have also given franchisee to many virtual classes. So they will do promotion on my behalf and they will use my pic, my logo, everything they will use. Means it seems that actually that is my venture only. For example, you have taken Haldiram franchisee. So you can use Haldiram logo, Haldiram trade name. You can promote, will do promotion also with the name of Haldiram. Then only the customer will come now. If you change the name of Haldiram to Sadiram, no one will come. Are you getting what I am saying? Correct. A reacquired right is an identifiable intangible asset which should be recognized at what? On the date of acquisition. Reacquired rights should be amortized during post-combination period. During what? Remaining contractual period of right. Any settlement gain and loss is recognized as a separate transaction which is not a part of business combination. As if now whatever I say that is only written, because this is a book written by me only. Correct now? I know what to word in this book. Book is written by me only. Whatever I am saying that is only written. Correct? Then how to calculate gain and loss? This is important. The gain or loss in settlement of the contract is lower of what? A and B. B is very easy, settlement price paid. So whatever settlement price paid as per the contract will be what? Point number B. Correct. So settlement price that acquirer would have to pay to terminate right on acquisition date.
that will be given a question. A will what? A will what? The difference between amount that acquirer could receive for granting a similar right on the date of acquisition. This is nothing but fair value. Fair value on acquisition date. That will be also given. Minus carrying value of the right that was granted. Is what was the carrying value in your books? Means book value. Means in the books of acquiry. So fair value minus book value will be A. So A is equal to what? Fair value minus book value. B will be what? Settlement price paid. Lower of this will be taken. Lower of this will be taken. Understood? So this will be gain or loss. This should be separately accounted. Are bolna rahi? This should be separately accounted now. You only say. Now suppose loss amount is what? 10 lakh. And you calculated PC 100 lakh. My question to you all, your PC, because this PC is the total PC whatever you have calculated. Now you need to do some adjustment for a transaction which is not a business combination transaction. So this loss should be added or deducted from PC to find out PC for business combination. Understand what I am saying? You calculate PC, whatever, suppose cash paid 100 lakh. But you need to find out PC for business combination. So this loss should be added or deducted. I did not. This loss means you have paid extra for settlement. So this 100 include 10 now, which is not a part of business combination transaction. You will deduct now. And this 90 will be what? PC for business combination. Understood? So any settlement gain will be added and settlement loss will be deducted to find out PC for business combination. So you can see total consideration we calculated minus settlement loss and add settlement gain. This will be done. This will be PC for what? Business combination. Understood? Have you understood? Reacquired right understood? Correct. Not important. Last point. Accounting for acquisition of interest in joint operation in separate and consolidated financial statement of joint operators. Initially, there was no question based on this, but in the not in your RTP, in previous RTP, they have given one question based on this. So now it become an important topic. But that question have some error. I don't know whether the question will be asked or will not be asked. They will ask, so they may rectify the error or they may give the same question. One will take that question. This topic, this topic ko I'll just keep in pending. ठीक है ना? Understood? Keep in pending. But there is one important question. Means apart from this all concept done, only one concept is left in business combination. We have done 4 questions, all concept done. Only one concept, one question is left from this point of view. I will take this question. I think because this is also important. Can be asked. But I forgot to take in what? This question booklet. But let me take one more question which is also very important. This question can be asked, but very easy. Can we take this question? 4 I have done. 5. 11. Question 11. On 1st April 2006, company PQR acquired 30% of voting ordinary shares of company XYZ for rupees 8,000 crore. So can it significant influence? Means associate is equity method. PQR account the investment under equity method. Thank you very much. As per Ind AS 28. Thank you very much. As on 31st March 2017, PQR recognized its share of net asset changes by using equity method. So any share of profit or loss will be recognized as per equity method. Any share of exchange difference will be recognized. Any share of revaluation reserve will be recognized. But what journal entry will do? Investment will increase. Okay, this PL will be transfer retained earning. This exchange difference will be transferred to FCTR. And this will be transferred revaluation surplus. 700, 100 and 50. And this is total is what? 850. What is the total value of investment? Initially we purchased at rupees 8,000. It become 8,000. So the carrying amount is given 8850. This solution is given in question only. Correct. Now on 1st April, they acquire remaining 70%. Can I say this become step acquisition? Correct. For rupees 25,000 crore. Fair value of 30% previously held is now 9,000. Fair value of INA is 30,000. How should such business combination be accounted? So I will give you the journal entry. But have you understood the question? So batao. On the date of acquisition, we'll pass one journal entry. INA account debit. How much? What is the fair value? Two. What is the consideration paid? 25,000 crore. So to cash how much? For 70% how much I paid? 25,000. To investment, can you say investment de-recognize? Investment de-recognize? Right. Means first to investment should come at fair value. Means first we should increase and then de-recognize. So better pass separate journal entry. So first if you increase, investment will increase by what amount? 150. To gain, and I have said if nothing is given, this gain will be transferred to what? PL. Remember? And now investment will become for 30% how much? 9,000. Understood. Difference will be goodwill. Goodwill is how much? NCI is 0, huh? NCI is 0. So goodwill is what? 4,000. Understood. But can this is discontinuation of the equity method? Whenever there is discontinuation of equity method, so can you say any OCI component should be also de-recognized as per respective Indias? So we have FCTR and revaluation surplus. But the FCTR will be reclassified to PL. He will be transferred retained earning. Very good. So will be transferred to PL. How much? FCTR 100. And revaluation surplus will be transferred to what? Revaluation surplus will be transferred to what? Retained earning. Have you understood this journal entry? Correct. Let's see what the answer has been given. They have given compound journal entry. INA how much? Goodwill how much? FCTR how much? Revaluation surplus Cash how much? But cash is credited now. Oh, cash is credited. Correct? Investment how much? Is they have done compound journal entry 8850. Then retain earning how much? 50. So PL will be both. How much gain on investment? Gain on remeasurement of investment. You have done first journal entry. 150. And this gain is what? This is also gain 100. So what is gain transfer to PL? 250. They have given one compound journal entry. Understood this compound journal entry? But I will always say, if when you do separate journal entry, it is more understood. Or you can, if you are expert enough, you can do what? Compound journal entry also. Have you understood this compound journal entry? But very good question, expected question from my point of view. Super expected, I will say. Because this question only those students can do who have understood a chapter. Even though you have done previously, but you will do mistake if you are not conceptually strong in this question. Correct now? Their small questions sometimes become difficult. Why? We require more conceptual understanding. Correct? With this we completed all questions of business combination. Only one point is left. Only one point and one question is left. I will take that question as well as that point, but not now. Okay, I will first start some other Ind AS. So can we take break? Follow. Ind AS 103 is over from my point of view. Only one point is pending. Have you understood Ind AS 103? What do you feel? Revision done. Have you understood? Live student, please respond. Have you understood? Chalo, we'll take break. Can we once again start? Now, so we'll now take Ind AS 21. Ind AS 21, the effect of changes in foreign exchange rate. Now, as per Ind AS 1, there are three types of currency. One is known as what? Functional currency. Functional currency. Second is known as what? Presentation currency. Presentation currency. And third is known as what? Foreign currency. So functional currency are those currency in which books of accounts are prepared. Means all the transactions are recorded in functional currency. Foreign currency are those currency in which the means foreign currency are any currency other than functional currency. Means if this is rupees, so it can be dollar, and if it's dollar, so it can be rupees also. Now, as per Ind AS 21, functional currency may be local currency, or it can be any other currency also. Means even though any entity is incorporated in India, may have its functional currency as dollar. Correct? Understood? And therefore, they have given one currency known as what? Presentation currency. Presentation currency in India will be always rupees. Will be always rupees. Presentation currency is the currency in which the financial statement are presented. So of course in India financial statement are presented in rupees. Correct? Means can I say normally functional currency and presentation currency will be same? Normally functional currency and presentation currency will be same, but if functional currency is not rupees, then functional currency and presentation currency may be different also. So it means first we need to understand what is functional currency. So functional currency, what Ind AS 21 says that is the currency of what? Primary economic environment in which entity operate. So what is the meaning of primary economic environment now? So what is the meaning of functional currency? Functional currency is the currency of primary economic environment in which entity operate. What is the meaning of primary economic environment? Is the country in which the entity normally generate and expend cash. Normally generate and expend cash. Correct. So sir, how to determine functional currency? For determination of functional currency, India 21 has given primary factor and secondary factor. How many primary factor they have given? 2 primary factor. And how many secondary factor they have given? 2 secondary factor they have given. Understood this point? What India 21 says that first importance should be given to primary factor. If suppose there is any doubt in functional currency by considering primary factor, then we'll use what? Secondary factor, but not in isolation of what? Primary factor. Whenever you are using secondary factor, so it should be used only in connection with what? Primary factor. What is the primary factor? The primary factor means the currency that mainly influence what? The sale price of goods and services. The currency that mainly influence sale price of goods and services. So can I say our sale price will be denominated only in that currency in which we are generating cash. Correct. Similarly, the currency that mainly influence the cost of production, the currency that mainly influence the labor cost, material cost and other cost of providing goods and services. Just try to understand, if your operation is in India, so it will be rupees, then your functional currency will be what? Rupees. But suppose your operation, your company is in India, but your operation is outside India, suppose US, so it might happen it is also dollar, then your functional currency will be dollar. But suppose your sales activity is in dollar, suppose your sales is in US and your cost of production means your factory is in India, quite possible, then can you say it might be dollar, it might be rupees, or it might be rupees, it might be dollar. So in this case, no doubt the functional currency will be rupees. In this case, there is no doubt the functional currency will be dollar, but in this case doubt will come whether functional currency is rupees or dollar. For this purpose, what they have given? They have given secondary factor. So what are the 2 secondary factor they have given? Currency in which funds from financing activities are generated. So can you say normally we will generate the capital or any loan in the currency in which we are operating. So normally we'll take a loan from Indian bank only, or if you are operating in foreign country, so we may take loan in from foreign bank. I hope you are understanding. So currency in which funds from financing activities are generated, or we can say currency in which received from operating activities are retained, not collected. Generally we will retain in the currency in which we are dealing. So even though we may collect in dollar, but in which form you are retaining? If you are retaining in rupees, so your functional currency will be rupees. Understood? So these are secondary factor, but can you see from examination point of view, they will give functional currency. If they want to ask, then they will ask a case study based on this. From the information given the question, if you apply this factor, you will be able to identify what is the functional currency. Now sir, how to identify the functional currency of foreign operation? So what India's 21 says, that foreign operation are foreign subsidiaries, foreign associate, foreign joint venture or foreign branch. Correct? So foreign operation means what? Either foreign subsidiary, foreign associate, foreign joint venture or foreign branch. Correct? So what will be the functional currency of that? So they have given a simple point. If the foreign operations are dependent on reporting entity, if the foreign operations are dependent on Indian reporting entity, then the functional currency of foreign operation and reporting entity will be same. Are you getting what I am saying? Then the functional currency of foreign operation and reporting entity will be same if the foreign operations are dependent. Now, so how we'll understand they are dependent? For that, they have given many factors. If all the factors satisfied, so they are dependent only. Are you able to understand? Means what they want to say in this case, if foreign operation will have functional currency as its reporting entity. Means if reporting entity, the functional currency rupees, so foreign operation will be also rupees. If reporting entity, the functional currency is dollar, then foreign operation will be also having dollar. But if foreign operations are independent from reporting entity, so what India says that they need to identify their own functional currency by applying primary factor and secondary factor, whatever we have discussed. Correct? So it means foreign operation will have to identify its own functional currency. Correct? Means in this case, it is quite possible if the reporting entity is having rupees. So foreign operation may have rupees or maybe dollar, depending upon primary factor and secondary factor. Understood? This point have you understood? Yes, sir. Then coming to what? Next point, foreign currency transaction. This is important. Correct? So can you see in this chapter we are here to understand how to record foreign currency transaction. So what are foreign currency transaction? Any transaction which is denominated in a currency other than foreign currency. Other than foreign currency. So how to record such transaction? So what India's 21 says that foreign currency transaction will be initially recognized by taking exchange rate on the date of transaction or average rate. Means simple word I will say transaction date exchange rate or average rate. So initial recognition is done at what? Transaction date exchange rate or average rate. Now coming to subsequent recognition. This subsequent recognition, when I say, so subsequent recognition means either on settlement date or on a reporting date. Means if settlement date is after reporting date, then we need to also recognize foreign currency transaction on reporting date also. So when I am saying subsequent recognition, it means either on settlement date or on reporting date. Understood? Yes, sir. So what India's 21 says that for the purpose of subsequent recognition, all assets and liability are of two types. One is monetary item, one is non-monetary item. So of course we are only considering those items which are denominated in foreign currency, and therefore we'll call it foreign currency monetary item and foreign currency non-monetary item. Understood? Have you understood this point? So what India's 21 says that foreign currency monetary item will be translated by using closing exchange rate. By using closing. What do you mean by closing exchange rate? No. Closing exchange rate does not mean balance sheet date rate, because I said on settlement date also na. So closing exchange rate means of that day closing rate. Every means stock market is one opening rate and then closing rate. So on that day closing rate will be taken. So closing exchange rate will be taken. So all foreign currency monetary item will be translated by using closing exchange rate of that particular day. Correct. Now foreign currency non-monetary item. I hope you know monetary item, non-monetary item. Correct. So all foreign currency non-monetary item, if they are carried at cost, then there is no need to translate. There is no need to translate it. It means they will be recognized at initial recognition rate only. They will be recognized at initial recognition rate only. Means there is no need to translate on reporting date or settlement date. If they are foreign currency monetary item, foreign currency non-monetary item carried at cost. But if foreign currency monetary item are carried at fair value, for example PP we have opted revaluation model, inventory is carried at what? NRV, then we'll take what? The exchange rate on the date when the fair value is determined. Is the exchange rate of the date when the fair value was determined. Understood this point? Have you understood? Any doubt? It is very simple. Very simple. Now, whenever we do subsequent recognition, so there will be some exchange difference. So that exchange difference will be transferred to PL or OCI, that we need to understand. So what they want to say, that any exchange difference on settlement of monetary item will be always transferred to what? PL. Means foreign currency monetary item, if you are doing any subsequent recognition, exchange difference will be always transferred to PL. Correct. But for foreign currency non-monetary item, can I say, when foreign currency non-monetary item, if they are carried at fair value, then of course there will be some exchange difference. So that exchange difference will be transferred to what? So what they want to say, if the gain or loss on revaluation is transferred to PL, then exchange difference will be also transferred to PL. If the gain or loss on revaluation is transferred to OCI, then exchange difference will be also transferred to OCI. For example, if I say investment measured at FBTPL, so in this case the revaluation gain or loss is transferred to PL. Therefore, exchange gain or loss will be also transferred to PL. But if I say FBTOCI, then exchange gain or loss will be transferred to what? OCI. For example, if I say PP, revaluation gain or loss is transferred to OCI. Therefore, exchange gain or loss will be also transferred to OCI. Understood? Yes, sir. Rule is very simple. Rule is very simple. This much, any doubt? Now, what is the meaning of foreign currency monetary item? Foreign currency monetary item are those assets and liability which have fixed or determinable number of units of currency and which are realizable and payable in terms of money. Money here means what? Means foreign currency, which are realizable or payable in terms of foreign currency. Means in simple word I will say, any receivable or payable which are realizable in terms of foreign currency will be foreign currency monetary item. Means any receivable, any payable which are settled in foreign currency are known as, which are settled by payment of what? Foreign currency, are known as what? Foreign currency monetary item. Can you identify, बताओ, whether it is MI or NMI, monetary item or non-monetary item? But the cash at bank, monetary. Cash in hand, bank loan, fixed deposit, debentures, payable in what? Currency only. If it is debenture issued in dollar, it is payable in dollar only. Correct. Convertible debentures, now it has two components. Now it has two components now. One is liability component, one is equity component. Liability component will be what? Monetary item. Equity component will be non-monetary item. Correct. Expense payable, monetary item. Prepaid expense, prepaid expense, what you are saying? Non-monetary. It is non-monetary. Why? Because prepaid expense means what? It is realizable by what? Receiving goods and services, not currency. Redeemable preference share capital, monetary item. Payable in currency only. Equity share capital, non-monetary item. Investment debenture, monetary item. Investment in equity shares, non-monetary item. Inventory, non-monetary item. Property, plant and equipment, non-monetary item. Provision for warranty, because warranty means what? Providing services. That is non-monetary item. Provision for legal damages. It is payable in cash only, so monetary item. CFI liability component. CFI means compound financial instrument. CFI equity instrument, non-monetary. Advance from customer, non-monetary. Advance to supplier, non-monetary. Advance to customer. So advance, we have a receive advance from customer. Advance from customer means we'll provide goods and services. Correct. Advance to supply means we receive goods and services. Understood. I hope all these examples are now clear. Any doubt? No doubt. I'd like to take some question based on this, then we'll go to some other topic. Come to Ind AS 21. Question 13. On 30th Jan 2021, 2001, A Limited purchased a machinery for rupees $5,000 from USA supplier on credit basis. A Limited functional currency is rupees. The exchange rate on the date of transaction is $1 is equal to rupees 60. The fair value of machinery is determined on 31st March 2001 is $5,500. Are you getting what I am saying? Correct. The exchange rate on this date was $1 is equal to 65. The payment to overseas supplier done on 31st March 2002, the exchange rate on 31st March 2002 is 67. The fair value of machinery remain unchanged for the year ended 31st March 2002. Prepare the journal entry for the year ended this and this according to Ind AS 21. Tax rate is 30%. Can we do it? Now, first journal entry will do on which date? Purchase on 38 Jan. Journal entry will machinery. Account debit to payable. The 5,000 into what? Transaction date exchange rate. It will be what? 3 lakh. Then 31st March 2021. Now in this question they have not given what? Rate of depreciation. So we need to also calculate depreciation, but they have not given, ignore it. Solution also they have ignored. But of course, can I say it will be depreciated or not? Correct? Understood? Understood what I am saying? But the first you will do depreciation or revaluation? First depreciation, the first week, if suppose in your exam, they have given rate of depreciation. So first calculate carrying amount after depreciation, then revaluation. But not given. Batao. What is the fair value on this date? So can you say it will be translated by using the rate when the fair value has been determined. So we will take 65. It become what? 3,57,500. What is the carrying amount? 3 lakh. So what is the increase? 57,500. Can you say both will be transferred to OCI? Sorry, this will be transferred to OCI as revaluation surplus. However, it has two components. One is revaluation gain, one is exchange gain. How much revaluation gain? Batao. Here is revaluation gain is 500 into 60 into 60 na? Bolo. So 30,000 is what? Revaluation gain. And what is the exchange gain? Exchange gain is what? 5,000 into what? 5. That is how much? Five hundred into sorry 5,000. 5,500 na. So exchange gain will be what? First we have done revaluation. So it is already increased now. Now I will calculate exchange gain. So it is 5,500 now. 5,500 into what? 5. That is 27,500. Understood. So what Ind AS 16 says that this will be transferred to OCI. And now what Ind AS 21 says that if revaluation gain is transferred to OCI, therefore exchange gain will be also transferred to OCI. Can you say we can pass one journal entry? But ICAI has given two journal entry. If you want to pass, you can also pass two journal entry. But can I do one journal entry? A journal entry will what? Machinery account debit to what? OCI revaluation surplus. How much? 57,500. You want to do, you can do two journal entry also. Can you say on this revaluation gain, we need to also calculate DTL? Because they have given what? Tax. So what journal entry will do for creation of DTL? OCI revaluation surplus account debit to deferred tax liability. It is 57,500 into what? 30%. How much? How much? 17,250. 17,250. Understood. Correct. Can we come to the next reporting date? 31st March 2. Can I say payable is paid? So payable account debit how much? 3 lakh. Now the payment has been done to the supplier to bank. So it will be 5,000. What is the date on this date? 67. So 5,000 into 67 is equal to 3,35,000. Difference will be what? How much? 35,000. And because can I say it is a foreign currency monetary item, it will be transferred to PL. So this will be exchange loss transfer to PL. Transfer to PL. Understood? Correct. Now, can I say once again there is a machinery. Once again we'll do for revaluation. Now just try to understand. For this 31st March, my viewpoint and ICAI viewpoint are different. From my viewpoint, there is no revaluation. If there is no revaluation, the question of exchange difference should not arise now. Means my viewpoint, CJ sir. From my viewpoint, can I say it is 5,000? Now 5,500 only into what? We should do 65 or 67. We should do 65 or 67. However, what India 21 says that whenever PP is method, foreign currency non-monetary item is carried at fair value, then translation should be done at the exchange rate when the fair value was determined. So this 5,500 was determined when? 31st March 2001 or 2? 1. So we should take 65. But ICAI has taken what? 67. So we'll go as per ICAI solution. From my point of view, it should be 65. ICAI is saying 67. We respect ICAI. Chalega? Understood? So 5,000 into 67, how much? 5,500, sorry. Into 67, how much? 3,68,500. Correct? Then what? Carrying amount is how much? 3 lakh. Last carrying amount. 3,57,000. 3,57,500. How much increase? 11,000. So once again it will be transferred to OCI, revaluation surplus. Once again will pass an entry, machinery, account debit to what? OCI, revaluation surplus. Have you understood this point? Understood? But my viewpoint is different on this. But we'll follow ICAI solution. Chalega? This is the solution given, na? Bolo. Solution given by ICAI is what? Again, deferred tax liability will come. That is okay. So once again, OCI, revaluation surplus, account debit to TTL. 11,000 into 30%. Understood? Correct? Any doubt? I have taken 60. No. I am saying my viewpoint is what? As per me, it should be 5,500 into 60. Then there will be no difference only. This is my viewpoint. There is no difference now. Still, they are taking what? 67. This is at 65 now. They have done what? 5,500 into 67 minus 65. But my answer is what? 60 minus 60. So there is no revaluation gain. The question of exchange difference should not arise now. Unnecessary we are inflating. Unnecessary na. अरे बोलना रे. Correct? Chalo, but my viewpoint will not work na. Whether you'll get marks, not get marks. Chalega. One more question. Come to question number 16. On 1st April 2001, Maker Limited raised a long-term loan from foreign investor. The investor subscribed for 6 million foreign currency loan at par. It incurred incremental issue cost of 2 lakh. Interest cost of FCY means foreign currency 6 lakh is payable annually starting from 31st March 2002. The loan is repayable in FCY on 31st March 2007 at a premium, and the effective annual rate of interest is what? 12%. The appropriate measurement basis for this loan is amortized cost. Relevant exchange rate is given opening 2.5, closing 2.75, average rate they have given 2.42. The functional currency of group is Indian rupee. What would be the appropriate accounting treatment for foreign currency loan? In the books of Maker Limited, calculate the initial measurement amount for the loan, finance cost and closing balance and exchange gain or loss. Can we do it? Batao. We are doing question number 16. You can say we will first write down foreign currency. Correct. Exchange rate and INR. चलेगा? बताओ. First on 1/4/2001, we'll do initial recognition. Initial recognition will be done at fair value. This is what? Loan given or loan taken? So loan is loan received na. It is liability. Correct? It will be 6 million minus 2 lakh. 2 lakh is a transaction cost. So 60 minus 2 is what? 58 lakh na. So it will be 58 lakh. Correct. Now 1 FCY is 2.5. We will multiply by what? 2.5. How much? One crore 45 lakh. Correct. Then on 31st March 2002, we'll calculate interest expense. For the interest expense, how much? Interest expense, how much? 6 lakh. 1 second, everyone done mistake. At EIR. Dekho. That is the contractual cash outflow. I have given you custom also. Interest expense, interest income, always by applying EIR. Correct na? अरे बोलना रे. Correct na? बताओ. EIR is what? EIR is what? How much? 12%. Can you give me? 58 lakh ka. Now, whenever income expense is given, correct now, always will use average rate if average rate is given from exam point of view. For income and expense, whenever they have given average rate, we'll use average rate from exam point of view. Chalega? Understood? What is the average rate? 2.42. So 6 lakh into 2.42. How much? Sorry. 6 lakh 96,000 into 2.42. Can I say? On the same day, there will be contractual cash outflow. How much? Correct. So it was done on which date? 31st March. So we'll take closing rate. This is not income expense. Huh? So for other transaction, we'll take transaction date exchange rate only. So for this what? 2.75. How much? 16 lakh 50,000. Now can you give me the closing balance? Both. FCY and INR. Both. One crore. $58,96,000. You can see this is amortized cost, but this amortized cost closing balance is a foreign currency monetary item, and foreign currency monetary item should be translated by using closing exchange rate. So this will be also translated by using closing exchange rate 2.75. So how much it is coming? Look at there is an increase will be exchange loss. So how much exchange loss? 16 lakh. Have you understood? So this is exchange loss. Understood? Easy? Simple na? Understood? So this you have understood. Chalo. Now let us come to the next topic. Now, everyone. Next topic is what? Translation of foreign operation financial statement. Now just try to understand. Suppose there is one foreign operation. Correct? Look, just try to understand what I am saying. So there is some reporting entity and foreign operation. And the functional currency or reporting entity is rupees, and this is also rupees. So can you say for consolidation no translation required, and this will be consolidated. Both are rupees. Second case, if this is rupees, this is dollar, so it should be translated into what? Rupees, and then this will be consolidated. Correct? Then third case, FUC, this is dollar, this is rupees, then this will be translated by using dollar, and this will be consolidated. I hope you have understood. So can you say the translation of foreign operation financial statement in functional currency of reporting entity is done as per Ind AS 21, but consolidation is done as per Ind AS 110. This point you have understood? Correct. Means if they ask any question in this chapter, so they will ask only translation. They will not ask consolidation. For consolidation, we need to go to consolidation chapter, and they have not given any question of consolidation of foreign subsidiary. Therefore, that will not be asked in exam. If asked, then you have to blame ICAI, because they have not given any question now. Correct? Are you able to understand what I am saying? One second. In this chapter, we need to only understand translation part. Consolidation means consolidation chapter. Now, after translation, of course, we can consolidate. And can you say we can consolidate? Yes. If you know how to translate, so consolidation we have done or not. So even though they ask in exam, you can do it. But from my point of view, they will not ask, because they have not given any question of consolidation of foreign subsidiary. But even though they ask, we can do it, because if you know the translation, chalega? Yes, sir. This point have you understood? Then there is one more point. Suppose reporting entity, functional currency, reporting entity, functional currency is equal to dollar, but presentation currency is rupees. Quite possible. So guys, we need to understand how to translate this also. Are you able to understand how to translate financial statement prepared in functional currency to presentation currency? It means there are two translation. Translation of foreign operation and translation of functional currency to presentation currency. Rules is more or less same. Are you able to understand? Means either they will ask you translation of foreign operation into functional currency of reporting entity for consolidation purpose, or translation of functional currency into presentation currency for presentation purpose. Rule is same. What is the rule? Rule is very simple. Translation to presentation currency and translation of foreign operation. So all asset and all liability, all asset, all liability. All asset means whether monetary, non-monetary. All liability means whether monetary or non-monetary will be translated by using closing exchange rate. Closing exchange rate. Understood? Then all income and expense, all income, all expense will be translated by using transaction date exchange rate or average rate. However, in exam they will give what? Average rate. Understood? Then equity. If it is foreign operation, then equity of foreign operation we want on the date of acquisition. So can I say equity will be translated by using exchange rate on the date of acquisition. Correct? So for foreign operation, we'll take exchange rate on the date of acquisition. However, if we are doing for presentation purpose, if you are translating for presentation purpose, then equity will be translated by using what? Transaction date exchange rate only. Is when equity shares were issued on that date. Any difference due to this translation will be transferred to what? OCI and accumulated where? In FCTR, foreign currency translation reserve, which will be reclassified to PL on disposal of foreign operation, which will be reclassified to PL on disposal. Understood? Correct. So what they have given? Any difference will be transferred to FCTR, which will be shown as a part of OCI. It will be reclassified to PL on disposal. Correct now. And can I say in case of foreign operation, this FCTR will be attributable to both parent company and NCI. Have you understood this much? Correct. A very good question have been given in ICAI study material. I would like to take question, and that is super expected. Very good question has been given. Let's see whether you are doing mistake or not. If you are doing mistake, it means this is a very good question. And if you are not doing mistake, simple question. Let's see. Abhi we have done very fresh point now. We have done discussion right now. We are doing the question. Okay? Now, let us take one question. 19. First question given in question booklet. PQR Holding Limited is based in London and has a pound sterling as functional and presentation currency. Correct? On 1st April 2001, PQR Holding Limited incorporated PQR India Limited as its wholly owned subsidiary in India. PQR India will be engaged in trading of item purchase. The shares of PQR Limited having a face value of 10 each, amounting to total of rupees 500 crore, which were issued on which date? 1st April 2001. PQI India has adopted India's with effect from its incorporation only. In accordance with India's management of PQI Limited has concluded that its functional currency is INR. Following the summarized trial balance of PQI Limited on 31st March 2002, being the reporting date of PQR and India and PQR holding, all amounts are in rupees in crore. So they have given trial balance. Correct. Understood. Now, additional information relating to property, plant and equipment and computer software. Line item PP, date of acquisition is what? 30th April. Computer software, date of acquisition is what? 5th May. Share capital, to be translated using historical cost. Securities premium, to be translated by using historical cost, historical rate. Retained earning, to be translated using average exchange rate. So we'll follow the information. I have said for equity, it will be always transaction rate. Historical is when it was issued. When it was issued, means even though not given, we would have taken that only. Correct? Now, they have given closing spot rate of 1st April. They have given 1st April 2001. Closing rate, we will always take closing rate. So closing spot rate. Understand why they have given closing spot rate? Because we want closing exchange rate on that day. If suppose they have given opening, ignore it. Then they have a closing on 30th April. What is 30th April? Acha PP. Then closing spot rate on 5th May. What happened 5th May? Computer. Closing spot rate on 15th March. What happened in 15th March? Nothing, na? Pata nahi. Closing spot rate on 31st March. Okay. Average exchange rate is given what this? Understood? Correct. Now you will say me which rate will take. If you can identify, then very good. But the share capital. Rate, you need to give me rate. 0.0123. Then securities premium. Retained earning. One 6. Long term borrowing. Zero 0109 na. Zero 109. Then deferred tax liability. Same na. Income tax payable. Import duty payable. Same. Employee benefit payable. Same. Sundry trade payable. PP. Same. Computer software. Inventories. Actually, inventories purchased on 15th March. Therefore, they have given 15th March. Give me rate, Baba. Same or what? You are saying everything is closing only. Yep, everything is closing only. You are saying closing. How can I identify rate? Same or what? Every rate is closing rate only. Same ना? Same. अरे कैसा बात करते बताओ? Cash and bank balance. Same. Trade receivable. Allowance for doubtful trade receivable. Same. 100% correct. 100% correct. You have not done mistake. But अभी तो you have done ताजा ताजा. This is very beautiful question. Very beautiful question. Good or not? In exam, तो high chance. After 3 days, you will forget me. You'll forget whatever I have done in crash batch. Believe me, you'll only know my name, but you forget me. Normally, I have seen CA finance students don't remember teachers. Normally, they will remember only some what doubt will come. Correct? But you'll forget me. You'll forget me. You'll forget this crash batch. And suppose if you don't revise, high chances you can do mistake. High chances. I like this question personally. It has been designed to confuse you, the student. Very simple, but dangerous or not? Dangerous. This is CA exam. They will ask simple question only. But simple or complicated, you only say. This question will come for 10 marks. 10 out of 10 if you have calculator. If you don't have calculator, then the punishment. Correct. Any difference will be transferred to what? FCTR, OCR. Correct. That you can calculate. You can read the answer if you want to read. This newly inserted question till now not asked. Achha, in this question, they have also asked you to identify monetary and non. Achha, one thing I forgot. Actually, what was a good point? They have asked you to first identify monetary and non-monetary item. So, now they are just giving jhatka. Monetary item closing exchange rate, non-monetary item, no need to translate. Bolna yes or no? Means for foreign currency transaction, we have done non-monetary item. If it is carried at cost, no need to translate. Same thing will be, if you have done this classification, same thing will come in your mind. But what I said, for foreign operation, all asset, all liability at what? Closing exchange rate. So first they are giving jhatka by asking this. Achha, can you identify monetary, non-monetary? Share capital, securities premium, retained earning, long-term borrowing, TTL, monetary. TTL is not payable. TTL is only an imaginary amount. It is never realizable or payable in what? Cash. Income tax payable, import duty payable, EB payable, country trade payable, PP, inventory, computer, inventory, cash and bank, trade receivable, allowance for doubtful allowance. If debtor is monetary, so that allowance will be also monetary. Correct? Understood? Any doubt? But after this classification, so high chances you will do mistake. Bol yes or no? Correct? So I like this question personally, but you can lead the answer. Okay. So this also done. Correct. Now come to the next point. Now there are some special point for consolidation. Special point for consolidation. First special point is that, suppose there are some intra-group transaction. Correct? Intra-group transaction which is done in foreign currency. Correct? Are you able to understand what I am saying? Suppose this is parent, this is subsidiary. This is rupees, this is dollar. This is FUC. And the transaction is done Sale transaction is done in dollar. So this will become foreign currency transaction for whom? Transaction is done in dollar. So this become foreign currency transaction for whom? And FUC transaction for whom? Correct. So can you see, because it is foreign currency transaction, so there is one receivable. Receivable will be initially recorded what? At transaction rate. Subsequently recorded at what? Closing exchange rate. There will be some different. There will be some difference, and that difference will be transferred to PL as exchange gain or loss. This point have you understood? Correct. Have you understood? But can you see in CFS, receivable and this payable will be cancelled? Now the question arises whether the exchange gain which has been transferred to retained earning, whether that will be cancelled. Understood? Means this transaction will be eliminated in what? CFS. But in the separate financial statement, some gain has been transferred retained earning through PL, whether that should be eliminated. Understood what I am asking? So what do you think? Eliminated or should not be eliminated? That should not be eliminated. Why? Because the transaction is eliminated. But can you say actually subsidiary company will pay to parent, and parent company is exposed to such gain or loss, and therefore that gain or loss should not be eliminated in CFS even though that transaction is eliminated. Understood? This is the first point. Understood? Intra-group transaction. So what they said, in CFS intra-group transactions are eliminated, but related exchange difference will not be eliminated in CFS. चलेगा? Hello. Any doubt? No doubt. Next point. What they are saying. This point have you understood? Any doubt? No doubt. Next point is what? Net investment FO. Now, when I was doing India's 28, I said there are some receivable or payable which are long term for which settlement is not planned. Correct? Remember? So that will be part of net investment in FO. Means, can you suppose we have done some investment in FO. Correct? But there may be some receivable or there may be some payable for which settlement is not planned. So what India's 20 says that these are nothing but will be added and deducted from the investment, and this will become net investment in FO. So any receivable or payable, can I say monetary item? Monetary item. Understood? In this also there will be some difference in their separate financial statement or individual financial statement. That difference will be exchange gain and loss, which will be transferred to PL. Now in CFS, once again this receivable and payable will be eliminated. Correct. Understood? In CFS, this receivable will be payable in the books of what? The other entity, na? Means there is a parent company, subsidiary company. If I am saying investment in subsidiary, there is some receivable, there is payable. So this investment will become equity share capital. This receivable will become payable, and this will be what? Receivable. So this will be cancelled where? Everything will be cancelled where? In CFS? So once again cancelled. Now the question is that any exchange difference on this receivable payable should be eliminated or should not be eliminated. So what Ind AS 21 says that in this case settlement is not planned, therefore they are not exposed to gain or loss, and therefore it will be eliminated but transferred from PL to OCI. It will be transferred from PL to OCI and accumulated in FCTR. Accumulated in FCTR. Understood? Have you understood this point? What they want to say? It is the amount of reporting entities' interest in net asset of FO. An entity may have monetary item that is receivable or payable within group. An item or monetary item for which settlement is neither planned nor likely to occur in foreseeable future is treated as part of entity's net investment in FO. Such monetary item may include long-term receivable or payable. Exchange difference arising on monetary item that form part of net investment FO will be recognized in PL in separate or individual financial statement of a reporting entity. In CFS, such exchange difference is taken to OCI and accumulated in FCTR, which will be classified to PL on disposal. Understood? I don't know whether this type of question will be asked or not, but I am discussing. This is important. Goodwill and fair value adjustment. Now just try to understand, everyone. When in CFS we are calculating goodwill, so one doubt will come, this goodwill should be calculated in functional currency or foreign currency? In functional currency or foreign currency? Functional. But this is goodwill is of which company? Parent company or subsidiary company? This is galti. In consolidation chapter I have said is ultimately what? Ultimately what? What is ultimate? No. Not ultimately. Goodwill of subsidiary company attributable to what? Parent and NCI, huh? Then why you left NCI? It's parent company, na? But it should be also NCI. Now, just try to understand. This is subsidiary company. All asset, all liability in FC. So, goodwill should be also calculated in what? FC. And this is translated to FUC. So, this should be also translated to what? FUC. This difference is transferred to FCTR. So, this difference should be also transferred to what? FCTR. So, it means whenever there is a foreign operation having different functional currency, then goodwill will be calculated in first foreign currency, then translated by using closing exchange rate on the date of consolidation. Understood this point? Have you understood this point? Follow. Understood. Let me take one question. Come to one question. Where is that question? This question. Global Limited, an Indian company, acquired on 30th September 70% of share capital of Mark Limited, an entity registered as company in Germany. The functional currency of Global Limited is rupees and its financial year end on 31st March 2002. The fair value of net asset of Mark Limited is 23 million euro and PC is what? 17.5 million euro on 30th September. The exchange rate on 30th September is 82. 31st March is 84. What is the value at which goodwill has to be recognized in the financial statement of Global Limited on 31st March? First you will calculate goodwill in what? In euro. What is PC? For how much percentage? How much? 70 is what? 17.5. Then we'll take NCI. For the which method? Fair value method, Pasina method. Fair value is given. Fair value NCI given. So we'll take Pasina 30%. What is the fair value of INA? 23 into what? 30%? 6.9. Total 24.4. From this we'll deduct INA. INA is what? What is goodwill in euro? Correct. It means just try to understand. Goodwill on the date of acquisition 30th September. It is 1.4 into what? Into 82. How much? 11808. This is goodwill on the date of acquisition. Just try to understand what I want to say. This my calculator will never be wrong. Why your calculator is, you take my calculator, na? Exchange. Really, my calculator is good. Which calculator, Citizen or Casio? Orbit? Huh? Casio. Mine is also Casio. Then why you're wrong? Is from which bazaar? Chor bazaar or which bazaar? Huh? Footpath. Please. Calculation do. Any calculator will give correct answer. Huh? Whether purchase from anywhere. Understood? When we were a student, na, so we used to purchase calculator from what? In Delhi there is a chor market. So we used to purchase the calculator from that market. We used to purchase 5 to 6 calculator together. So I think in market it will be 350 or 3. There we will get from 50. We'll save how much? 300 na. Whatever you do, I also have done. Correct na. But my calculator, that calculator also gives correct answer. Huh? Correct. Then goodwill on what? 31st March to 1.4 into 80. 84. How much? 117.6. So this will come in balance sheet now. And this difference will be transferred to what? FCTR. Understood? Understood? One second, very simple question. But good question. Why good question? Because you might translate this only. And if you translate this, you will get this answer. If you translate this, you will get this answer now. Because you are calculating on the date of acquisition. That will be wrong. Are you getting what I am saying? Chalo. Then there is one more part in this question. This point number 2, will you do by your own? I want you do by your own. Let's see how you are reacting. Point number 2, just read and do by your own. I want you to do by your own. Let's see how you are reacting. Sometime what happens, just everyone. In exam, one situation will come. You will find one question. Either that question will be very new, or that question you have forgotten the concept. This situation will come. 100% will come. Correct? What situation I have said? You read the question. Either that is a totally new question, means you have never done that concept, or you have done that, but you have forgotten completely the concept, means not coming anything. Understood? So of course initially you will leave. Initially you will leave. But suppose some time left at then, you let him now. You leave it. You let him. Correct? So what I want to say that Whatever questions come, attempt it. Thinking that you are CA and then attempt. First, imagine yourself that you are chartered accountant. Correct? You think that you are CA and then attempt. Believe me, if that positive set of mind you will do now, you will give correct answer. 80% of time you will give correct answer. And there is one rule to pass in CA exam. Write 100 marks paper, get 50% or more than 50%. So attempt should be 100 marks. Whether you have done correctly or wrongly, that does not matter. But you should attempt what? 100 marks paper. What I am saying, just try to understand. Attempt 100 marks. It may be wrong also. It may be correct also. But attempt 100 marks. If you attempt 75, 80, average marks are given. Normally average marks. 80 higher probability of getting less than 50. 90 higher probability of getting less than 50. But 100 means you will get 50. Not be that everything is wrong, then how you will get. But if you are writing 100 marks paper, it means you have written correctly only. Otherwise, you can't attempt only, na? Correct? Chalo. Now, can you attempt point number 2? Let's see how you are reacting. Done? Done? The how much URP? They ask you to calculate URP, na? How much unrealized profit? 149.4. You are also getting this? Everyone getting this? Oh, Jadu. Correct. Correct only. Correct, na? You have done correctly only. Have you understood? Means what they want to say. In this case, it is downstream or upstream. Mark Limited sold goods costing rupees 2.4 million euro to Global Limited for 4.2 million euro. Who is parent? Who is subsidiary? Global is parent. Mark is subsidiary. Mark has sold good costing rupees 2.4 at a sale price of 4.2. Profit how much? How much? 1.8. Correct. So initially this become a foreign currency transaction for whom? Global Limited, because their functional currency is INR. So what journal entry they will do? Batao. Journal entry Mark Limited account debit 4.2 into what? 83. How much? Achha, they have done, sorry. It is purchase, na? So they will do inventory account debit. Inventory account debit, na? 4.2 into 83 is equal to 348.6. 2 Mark Limited 348.6. They will do sales journal entry. What journal entry they will do? Global Limited account debit 4.2 to sales 4.2, but they will pass one more journal entry, cost of sales account debit to inventory, that is 2.4. Understood? Correct? This are you able to understand? Now, can you say, because this is what? Foreign operation. So, foreign operation, all assets and liability will be converted by using closing rate. First, let us do that. This transaction was done on which date? 30th September. Correct. So can you say this become a foreign currency monetary item? This will be translated by using what? Closing exchange rate. So this will become how much? On balance sheet date, this will become Mark Limited how much? 4.2 into 84. How much? 352.8. Minus this how much? So there is an exchange gain. $4.2. This exchange gain will be transferred to PL. Correct. Similarly, this foreign operation will be also converted by using closing exchange rate. So this is a liability, this is a receivable. Sorry, there is a loss. The exchange loss na. Correct. Now this will be also translated by using what? Closing rate. So this will become 4.2 into what? 84. This will be 352.8. And the difference will be transferred to FCTR in their balance sheet. Now in CFS, this and this will be cancelled. This will not be eliminated as per special point number 1. I am just discussing like this. Not required for the solution. Solution they ask only what? QRP. I am just discussing like this. Because one question have been asked, similar question in exam, where they have asked the journal entry in what? Journal entry in separate financial statement as well as in consolidated financial statement. Similar question was there. I have not taken that question. So for that question I am discussing. So if they ask journal entry, you should do like this, but in CFS then you should say cancellation and then cancellation of URP in CFS na. So of course this is understood. This include this profit. Profit is what? 4.2 minus 2.4 and into what? 83. That is what? 149.4. So this include how much profit? 149.4. This should be eliminated because this is which transaction? Upstream transaction. This will affect both parent company and NCI. I mean, this will be attributable to parent company NCI. So what journal entry? I hope you have understood. Correct. So this is what 100% or how much percentage? They have acquired 70%. So 70% will be what? Attributable to parent company and 30% will be attributable to NCI. Understood this point? Correct. Have you understood this point? This is also done. So this topic is also done. I think more or less completed. Disposal of foreign operation. Already this we have discussed when I was doing loss of control, etc. What? In consolidation chapter. We have done in case of loss of control, any FCTR will be de-recognized. And now we have understood it will be reclassified to PL. So we have already understood this point. The FCTR will be de-recognized on loss of control and reclassified to what? PL. Already one question we have done. FCTR to PL. Both in this continuation of equity method also we have done and one loss of control also we have done. So similar point already we have done in consolidation chapter and in days 28 business combination. Today also I have taken one question. Correct now? Remember that question today? Now last point. This is also very important. Let us take question based on this. One guidance is there, means appendix is there. Let us take one question. I have already included that question. That is also super expected. This question. Supply A Limited enter into a contract with customer B Limited on 1st Jan 2018 to deliver goods in exchange for total consideration of 50 million and receive an upfront payment of 20 million on this date. This is advance received. The functional currency of supplier is INR. The goods are to be delivered and revenue is recognized on 31st March. US $30 million is received on 1st April. State the date of transaction for advance consideration and recognition of revenue. Correct. So of course advance consideration date of transaction is what? 1st Jan. Recognition of revenue date of transaction is what? 31st March. Also state the amount of revenue in INR to be recognized on the date of recognition of revenue. The exchange rate is 31st March 72 and 75. Batao. On 1st Jan what journal entry? Bank account debit to advance. How much advance we receive? 20 million. Advance is 20 million. 20 into what? 72. How much? 1440. Then on 31st March, we recognize revenue. So it will be receivable account debit. So how much receivable? 30 into what? 75. Correct now. 30 into 75. How much? 2250. My question to you, advance will be what? It will be 20 into 75 or 72. Means my revenue will be what? My revenue will be 50 into what? For these, there was a doubt in the industry. For this, they have given one appendix. Suppose you have not read the appendix. Can you say me what will be the answer? There was a doubt in the industry. Appendix means what? Doubt in the industry. Therefore, they add appendix. Correct now? So, doubt in the industry. So, who will give guidance? CA. You are CA. Give guidance. What you will do? Means how much revenue, how much advance? Suppose these questions comes in exam, you need to do it. You don't have any other options. You have two options, do or do. Do. What you will do? So you are saying this will be 72. Then what is the revenue? Revenue will be also 72. 50 into 72. अरे बाबा बताओ, this is monetary or non-monetary item? This is non-monetary item. So can you say we will not translate it? This will remain 1440 only, and revenue will be sum total of these two. Simple. What is received and what is receivable, that is only revenue na. अरे बोलना रे. This was the guidance. So it become 3380. This was the question. Same thing is given in under appendix to India's 21. But very important, till now not asked, will be asked in exam. But whenever these questions come, give reference to what? Appendix to India's 21. Correct? If you want to read appendix. Appendix B, read it, you will be able to understand. India's 21 is completed from my point of view. चलेगा? Have you understood? But I have seen students do one mistake. Suppose $1 is equal to what? 70. Bolo? $1 is equal to 70. So 1 rupee is equal to what? 1 by 70 means what? 0.014. Correct. Now, suppose this rate is only given. Correct. And they have given dollar, we need to convert rupees, then multiply. But suppose they have given rupees and we need to convert into dollar, then what will do? Divide now. But in exam, one question have been asked. Same question we have in ICAI study material. Most of the students have done multiply in this. But I will say be careful. Be careful. This I will not teach now. This to SFM you have already done. SFM one chapter is there now. What is the name of that chapter? Foreign exchange. हाँ. In that chapter teacher teach this only. देखो बच्चों 1 is equal to this. Correct na? This is the basic thing. I will say this is what? Mathematics, basic mathematics. Correct? If you are doing mistake in that, then no one can help you. Chalega? India's 21 completed from my point of view. We'll take 5-minute break. After break, we'll do one small India's. Means I like to complete 2 India's. One is India's 34, one is India's 108. 2 India's is my target. Chalega? Okay. We'll take break 5 minutes. Can we once again start? Everyone. Now, we'll take a revision of India's 34, interim financial reporting. Very simple. Normally they ask 2 types of questions from this topic. 2 types of questions. So what is the meaning of interim financial reporting? Interim financial reporting means a reporting for less than 12 months. Means whenever you are reporting for the interim period, for interim period means less than 12 months. So it is known as what? Interim financial report. Now, what India's 34 says that interim finance report may be a complete set of financial statement, may consist of complete set of financial statement or condensed set of financial statement. However, they do not encourage complete set of financial statement. They encourage what? Condensed set of financial statement. So when I say condensed, so condensed set of financial statement means condensed balance sheet, condensed SOPL, condensed statement of changes in equity, condensed statement of cash flow, and some selected explanatory notes. But when I say complete set, it will be complete financial statement as we present in our annual reporting. Correct? Understood? Now, from examination point of view, there are two topics which are relevant. One is what? Recognition and measurement of income tax in case of interim period, in case of interim financial report. Correct. Now, what they want to say that whenever we are calculating tax expense for interim period, for interim financial report, so it may be either quarter 1, quarter 2, quarter 3, quarter 4. It can be half year 1 and half year 2. Normally we don't prepare on monthly basis. Either we prepare on quarterly or half yearly basis. Correct. In that case, what they say, first estimate weighted average tax rate for the current interim period. We will to estimate what? Weighted average tax rate. Weighted average tax rate is also known as effective tax rate. So how to estimate? Well, first estimate total tax expense of the entire financial year for the current financial year. Estimate tax expense, then divided by estimated accounting income. Accounting income is what? PBT divided by estimated accounting income. This will be what? This will be considered as effective tax rate. Now when we say tax expense, so now we know tax expense is the aggregate of current tax and deferred tax. Understood? Correct. Now let me take one question to explain you how to calculate this. Okay, I will take one question. So in this example, you can see from the following information of A Limited, calculate tax expense of Q1 and Q2. You can see in Q1 is at the end of Q1, we know actual accounting income of Q1, but we need to estimate accounting income of Q2, Q3 and Q4. And in quarter 2 end, can I say we know actual accounting income of Q1 and Q2, but we need to estimate accounting income for Q3 and Q4. It may change also from previous estimation. Then they have given estimated deductible temporary difference. Means there was some deductible temporary difference. So for in quarter 1, they have estimated that total deductible temporary difference which will be originated during the year will be how much? 10,000. But the estimation was changed to what? 40,000 in quarter 2. Understood? Then they have given brought forward tax losses from previous year was how much? 20,000. Correct. For which DTA was not recognized during previous year subject to prudence limit. This last year it was carry forward. So last year on that carry forward tax losses, no DTA was created due to some prudence limit, because we know that DTA can be recognized only when entity, only to the extent of sufficient future taxable will be available. Correct. Now, so it might happen last year we were expecting that there will be no future taxable profit, and therefore we have not recognized DTA on that. Correct. Understood? Then they are given tax rate and education says 4%. Calculate tax expense. Okay, so let us do first for quarter 1. So can you say first we need to calculate total accounting income. So accounting income, it is already given. Q1 will take actual, Q2, Q3, Q4 will take estimation. It is 4,60,000. Then we'll do plus expense disallowed, because it is given that deductible temporary difference was originated due to disallowance of expense. So because some expense will disallowed, which will be allowed in future. So allowed in future means deductible in future. It will become deductible temporary difference, but will be disallowed in future. We'll add back. Means right now we are calculating current tax. So to calculate current tax, we'll do what? Expense disallowed. The expense disallowed how much? 4,70,000 become what? Taxable income. So this become taxable income before what? Setting of brought forward loss. Now we'll do minus brought forward loss. So this become what? Taxable income after set off. On this taxable income, can you say we'll calculate current tax? So current tax will be what? Current tax will be what? At the rate of what? 30% they have given what? Rate, and 4% they have given education sales. So it will become 31.2%. Correct. So can you say on this we can calculate 31.2%? Understood? Correct. Now on deductible temporary difference we'll create DTA. So on deductible temporary difference, because in quarter 1 it was 10,000 into 31.2%, we'll create DTA. DTA means what? DTA income. It means, can I say DTA will be 3120 minus, and current tax 1,40,400. So what is the tax expense? Tax expense will be how much? 1,37,280. This you have understood. Means when I am saying tax expense, it will be current tax plus minus deferred tax. So can you see it become estimated tax expense divided by estimated accounting income. What is the accounting income? 4,60,000. So if we divide this by accounting income we'll get effective tax rate. So we get effective tax rate for this period. Now this effective tax rate will be applied on accounting income of quarter 1. What is the accounting income of quarter 1? 1 lakh into 29.84. Can you see it become 29,840? Understood this much? Same thing we'll do for what? Quarter 2. Quarter 2, can you say we'll take actual for quarter 1 and quarter 2, estimated for quarter 3 and quarter 4. It will become 5,50,000. Now they have given disallowance is 40,000. We will add back 40,000. Then will become 5,90,000. Set off is 20,000. This become 5,70,000. Now on 5,70,000 again we'll calculate what? Current tax at 31.2% will come. Again on deductible temporary difference we'll calculate what? DTA. So now on 40,000 into 31.2% will come this. This will become what? Tax expense. Now once again we'll calculate effective tax rate by dividing tax expense with what? Accounting income. So this will be 30.06. So for quarter 2, what is the effective tax rate? 30.06%. Can you see now we'll first calculate cumulative tax for Q1 and Q2. What is Q1 income? What is Q2 income? So it become 2,50,000. 30.06. We will first calculate tax expense of Q1 and Q2. From this we will deduct what? Tax expense already recognized in prior period. So this become tax expense of quarter. Understood this point? Simple. Have you understood? So this is the tax expense calculation. Now just try to understand. In this question it was given that last year DTA on carry forward tax loss was not created, and we have used that in this year because last year we have not created. The question of reversal will not arise. Means suppose last year we would have created. So because we have used that tax losses in this year that DTA will be reversed. But because last year we have not created, the question of reversal of DTA will not arise. But suppose if I say in this way, suppose in the above question DTA was already recognized on carry forward tax losses of previous year, then what will be our answer? Are you able to understand what I am saying? Same thing, correct? So can I say we can start with taxable income 4,50,000. Taxable income remains same as per previous question.
4,50,000 up to that same. Then our current tax also remains same. Now we'll create DTA on deductible temporary difference. This also remains same. But last year we have created DTA on 20,000. This year we have used it. So that DTA will be reversed. Any reversal of DTA will be DTA expense. So can I say DTA expense will be 20,000 into 31.2. So can I say this become DTA expense? Means this total become what? Tax expense. Are you able to understand what I am saying? Have you understood this point? Once again. On deductible temporary difference which originated in current year will create DTA. So there was 10,000 deductible temporary difference which was originated in current year. On that 10,000 we created DTA. But last year there was some tax losses. That is also nothing but deductible temporary difference. So last year if we have created DTA, this year we have used it. So this year DTA will be reversed which was created last year. So can you say we need to reverse DTA on 20,000? Are you able to understand? In previous example we have not done that. Why? Because last year DTA was not created. But now in this question when you do it, it is what? DTA reversal 20,000 into this. So this is DTA reversal is nothing but expense. So we'll do 1,40,400 minus 3,120 plus 6,240. This will come 1,43,520. This become tax expense. Our accounting income is what? 4,60,000. Now we can create this by this 31.2%. This can I say whenever everyone whenever we are creating and reversing, so our applicable tax rate and effective tax rate will be always same. If there is no permanent disallowance, or there is no changes in tax rate in current year and previous year, then it will be always same. Therefore it will be 31.2% only. Can I say if quarter 2, let us check now. Quarter 2 also 5,70,000. Current tax remains same. DTA created remains same. But can I say DTA will be reversed? Now it will become 1,71,600 divided by 5,50,000. You can see it will come 31.2% only. Understood? Are you able to follow me? Means can you see whenever DTA created in reverse, then your applicable tax rate and effective tax rate will be same. And therefore normally they don't ask this in exam. Why? Why they don't ask this in exam? Because if suppose you have not done any calculation, you have taken 31.2%, your answer is correct. Applicable tax rate was 30 plus 4% now. Suppose you have not done this much calculation, you have taken 31.2%, then also your answer is correct now. Therefore they ask what? This question in exam, because here because of that point your applicable tax rate and effective tax rate will be different. Understood? This is one topic from which questions is asked. I have taken one question, I will do some question also. Second topic is what? Recognition of revenue and expense. What Ind AS 34 says that revenue may be seasonal in nature or maybe unevenly spread throughout the year, or maybe occasional income. For example, dividend income is occasional, correct? Or it may be sales is unevenly spread due to seasonal nature, correct now? So question arises, should we recognize revenue on some means can we anticipate any income or can we defer any income for preparing financial statement of interim period? So Ind AS 34 says no.
Means what they want to say? Revenue that are received seasonally or occasionally within a financial year should not be anticipated or deferred. Anticipated means we should anticipate it even though it is not yet earned. Means recognizing pre-received income. Agreeing? Correct? Anticipation. Or defer means what? Postponing the recognition. Correct? Well, we should not anticipate, we should not defer unless anticipation and deferral, sorry, again. Revenue that are received seasonally or occasionally within a financial year should not be anticipated deferral if anticipation and deferral would not be appropriate at the end of entity's financial year. Means if we do not anticipate, if we do not defer such revenue at the end of financial year, then you cannot anticipate or defer such revenue at the end of interim period. Means for example, can you defer, can you anticipate dividend income? Can you defer, can you anticipate dividend income? No. So therefore, dividend income, royalty income, uneven sales cannot be anticipated or deferred. But can you defer government grant? Yes. Therefore, government grant received can be deferred if treated as deferred income as per Ind AS 20. Understood. Similarly, they have given for expense also. What they said, expense or cost that are incurred unevenly during the financial year should be anticipated deferred if and only if it is appropriate to anticipate deferred at the end of financial year. Means you can anticipate or you can defer only if that can be anticipated or deferred at the end of financial year. Otherwise, don't defer, don't anticipate. For example, can we defer advertisement expense? Can you defer advertisement expense? No. Therefore, we cannot defer in the interim period also. Commission expense, bad debt should not be anticipated or deferred. But can you say provision for gratuity can be anticipated? So any provision for gratuity can be anticipated. This you delete. Because as per Ind AS 11, as per Ind AS 17, but now deleted. Correct. Understood. Then they say any cost which do not meet the definition of asset at the end of interim period should not be deferred. Should not be deferred. For example, suppose there is some development expenditure is going on, development phase, Ind AS 38. This is quarter 1 end. Until now, development phase started. Correct? Development phase started. But till now, 6 condition is not satisfied. But entity is expecting that 6 condition will be satisfied in quarter 2. In this quarter 1, 20 lakh was incurred. Badao, can we defer it? They are expecting that in Q2, technical feasibility will be achieved. Badao, can we capitalize it? Capitalization means deferring the expenditure now. Can we capitalize it? Are you able to understand what I am saying? In development expenditure, if 6 conditions not satisfied, it will be charged to PL. Otherwise, it will be capitalized. So, can we capitalize it? No, because 6 condition is not satisfied, because it will not meet the definition of a asset, because it will not meet recognition criteria. Therefore, charged to PL as an expense immediately. Correct? Understood? Understood. However, Ind AS 38 says that if 6 condition is satisfied here, so expenditure is capitalized from this date. Any past expenditure which is charged to PL will never be capitalized as per Ind AS 38. चलेगा? Yes, sir. Then any changes in accounting policy. What they want to say, any changes in accounting policy, correct, which the effect which is related to current period should be transferred to current year SOPL, and any effect related to prior year should be restated in prior year what comparative period. Means what they want to say, just try to understand. This is 1, 2, 3, 4. Suppose in Q2 there were changes in accounting policy. Due to changes in accounting policy, the effect is 200, and suppose here the effect is 200, here the effect is 200, 200 like this. Means there is the increase in expense. So what India's 34 say that this only relate to what current quarter. So this much should be charged to current year, current period SOPL. The prior year effect should be restated in comparative figure. But suppose this is changes in accounting estimate. In quarter 2 there is changes in accounting estimate. Entire effect should be given when? In the year in which change occur. Understood? This is the difference between changes in accounting policy and changes in accounting estimate. Understood? Right. I hope understood. Then reversal of impairment loss. So what India's 38 say that because reversal of impairment loss of goodwill is not permitted, so any reversal of impairment loss of goodwill in interim period will also be not reversed. Understood? Correct? Simple. I think these 2 points you have done. Let us take some question. India's 34 is completed. Question number 2. ABC Limited manufacture automobile part. ABC Limited has shown a net profit of 20 lakh for the third quarter. How much profit shown? 20 lakh. Following adjustment are made while computing the net profit. Bad debt of 1 lakh incurred during the quarter. 50% of bad debt have been deferred to next quarter. Can we defer? Can we defer? Can we defer bad debt? What they are saying? In quarter 3, 1 lakh bad debt occur, but 50% was deferred in quarter 4. Can we defer it? No. So it means we should deduct 50,000 from this. Means we need to find out correct profit. Yes, sir. Additional depreciation of rupees 4,50,000 resulting from changes in the method of depreciation has been charged. Since it changes in depreciation method is accounting estimate, so it should be charged in the quarter in which changes occurred. It is correct only. Then exceptional loss of 28,000 incurred during the third quarter. 50% have been deferred in next quarter. Can we do that? No. So 14,000 will be deducted. 5 lakh expenditure on account of admin expense pertaining to third quarter is deferred on the argument that fourth quarter will have more sales, therefore fourth quarter should be debited. Can we defer? It means 5 lakh will be deducted. What is the correct profit? $14 lakh? 14 lakh 36. But you can see how they have given the answer. They have just given the reason why we should not defer or why we should defer. So you should write down in this way only. I will write down in your own words. I will say give that para whatever is given under Ind AS 34 for revenue and expense, and then give what explanation. But you can't only calculate. You only calculate, they will give anda. Okay? Then one question for what tax? ABC Limited present interim financial report quarterly. On 1/4/2001, ABC Limited has carried forward losses of 600 lakh for income tax purpose, for which DTA has not been recognized. Understood this point? For which DTA has not been recognized. Similar question we have done now. ABC Limited earned 900 lakh in quarter ending 30th June 2001, 30th 9 2001, and 31st 12 2001, and 31st March, excluding the carry forward loss. Income tax rate is 40%. Calculate the amount of tax expense to be reported in each quarter. Correct? Can we do? They are saying they have earned 9 lakh in each quarter. Huh? Means what is the total accounting income? Can I say 900 into 4? Right. First we'll calculate current tax. So can I say they have given tax losses how much? 600. So your taxable income is what? So current tax at what rate? 40%. Sorry, 3000. It will become how much? 1200. Can you see in this question deferred tax is nil? Why deferred tax is nil? Because last year DTA was not created. Understood? Are you able to understand? Let me say, if suppose created, then what? Suppose created, then what? Then DTA created will be reversed, and that will be what? DTA expense. So on 600 into 30%, how much? 180 we would have done. This is case 1, case 2. Huh? And can you see in this question they have not given any taxable and deductible temporary difference? If given, so we should calculate DTA effect on that also. So this become what? Can you say tax expense 1200 and 1380? Correct na? Batao. What will be the effective tax rate for case 1? Bolo. 33.33. And for case 2? What we have done? We have calculated wrong now. With 240. I am also doing, you are also doing wrong. Ah, good, good, good. This is what? 1440. So 1440 divided by 3600, how much? You can see it is coming 40% only. Can you say always it will be same only? But they have not asked this, huh? I'm just informing you. See, you should also think about what? Deferred tax. Normally students do mistake. They ignore deferred tax to calculate what effective tax rate. First mistake what they do? They do not consider deferred tax. First mistake. Second mistake what they do? While calculating this, they divide 1200 with taxable income. But it should be divided by what? Accounting income. This is second mistake what I have seen students do. Be careful. First think about tax expense. Tax expense means current tax minus plus minus deferred tax. Okay. then divide by accounting income. Then it become very easy. Can you say quarter one 900, 900, 900, 900? We can multiply with what? This rate, and we'll get what? Tax of each quarter. That is only given. However, there are some few questions given. Is some capital gain having different tax rate that you can do by your own? I will take one question of that nature also. Huh? Follow. Head on this question. I'm giving. Means I have given slab rate. Understood? Wait. Question have been asked in exam. Similar question. Correct? Now, will we do? Solution. So the first, we'll calculate current tax. Whether this total is what? 6,50,000. Can you give me tax on this? So first 1,50,000 how much? 20% how much? 30,000. Then balance is what? 5 lakh into 35% how much? 1,75,000. Total 2 lakh. Then on capital gain is what? 1 lakh na? 2 lakh into what? How much? This is how much? Okay, this is current tax. Can I deferred tax nil? This become 2 lakh. Now, in this case, we'll calculate effective tax rate. So effective tax rate will be calculated for other income only. Bolo yes or no? Therefore, you can't say 2,45,000 divided by accounting income. Because for capital gain, so it is 20%. Are we able to understand? You will do 2,05,000 divided by what? Divided by 6,50,000 into 100. How much? 31.5%. Correct. Now we can do quarter 1, quarter 2, quarter 3, quarter 4. Quarter 1 how much? Means now this 31.5 will be applied on this 1 lakh, 50,000, 2 lakh and this, and on 2 lakh what will be applied? 20%. And you can calculate for each quarter. This question have been asked in exam. Similar question, not this question. Understood? Correct? Simple. India has 34 completed. India has 34 completed. Can we come to one more India's? बोलना रही. We'll take India's 108. चलेगा? India's 108 operating segments. Can we take India's 108? You're not saying only. Tired? Hello. You're tired? You're not tired. I am tired, but. So let us take what? India's 108. Today live class, no one is asking doubt. What happened? You are there or you are not there? Today you are silent only from business combination chapter. No one is asking any doubt. Are you able to understand or not? Are you following me? Or you slept? Yes, sir, understood. They are saying. Can we start 108? 108 means what? Operating segment. Very simple. Once again, there are two type of questions which they ask from this topic. We'll concentrate on that. In that also, they have only some specific question. They don't have varieties of questions. Correct? Understood? So first, operating segment. What is the meaning of operating segment? Operating segment means what? Any component of the entity. It is a component, means a part of the entity. It is a part of the entity. Correct? That is engaged in a business activity for which it may earn revenue or incur expenses. That is incurred in a business activity. So now you know the meaning of business. As per India's 103, that is engaged in a business activity for which it may means what? It is capable of generating revenue. Capable of generating revenue. Whose operating results are reviewed by CODM. CODM full form is what? Chief Operating Decision Maker. Means their results are reviewed by some person. Correct? And for which discrete financial informations are available. Means can I say if discrete financial information are not available, then review is not possible only. So for which separate financial informations are available. For example, you have done departmental account. So you can prepare PL of department only when we have separate information of income and expense for each department. Otherwise, so we can't prepare only now. So what they are saying, for which discrete financial information are also available. Then it become operating segments. Means, for becoming operating segments, there are three questions need to be asked. First question is what? Is the component is able to generate revenue? If yes, is the operating results are reviewed by CODM? If yes, is discrete information for that component available? If yes, it become operating segment. Understood? For example, just try to understand. Suppose we are dealing with product 1 and product 2. Right? Now, Mr. X is appointed as a CODM to review the result of product 1 and product 2. Understood? So, of course, first condition is deemed to be satisfied. Second condition, CODM is there. But suppose we don't have discrete information. It means this together will become what? One operating segment. Are you able to understand? So this P1 and P2 together will become what? One operating segment. This point have you understood? Correct. Now what India's 108 says that operating segment can be based on either product or based on location or based on customer. For example, if you take my business, so can you say my product is what? CA final FR, CA inter accounts, CA inter advance accounts. These are product, my product. So I can divide my business into different segments based on product. Or can you say it can be based on location? Means initially I used to teach in what? Bangalore, Kolkata and Hyderabad. At one point of time I used to teach in all three places. Correct na? At one point of time. Now to only in Hyderabad. So now, हो गया. ठीक है. So Bangalore, Kolkata, Hyderabad. So can this I can do based on location. Now my segment is actually based on class of customer. Class of customer is class of student. I should not say customer, but class of student. For example, someone want face-to-face only. Someone want what? Live online only. And someone want recorded class only. So can you say my segment is actually based on this? Means my face-to-face, I have a separate person who look into face-to-face. My live classes will be taken care by some separate person. Recorded classes, also there is a separate department. Means the marketing of all will be different. Marketing, however, face to face and live we do together. Because one batch announced, we announce what? Promotion is done together only. But recorded class is totally separate. Totally separate. Are you getting what I am saying? So recorded classes will be totally separate. Price will be also vary. Recorded classes and the price of face-to-face classes will be different. Correct now. Sometimes student ask that why you are charging more in recorded classes. Because recorded classes we need to incur many expenses. Many expenses. There are many expenses which are hidden expenses you don't know. For example, recorded classes normally student purchase from what? Some other website. They will not purchase from our website. They will purchase from e-commerce website. Now e-commerce we need to pay 30% commission to them. So we recover from whom? We recover from whom? For also business में बताओ. अरे बोल. Correct ना रे. So normally students should purchase directly from our website, but they will not purchase. So because of that reason we need to what? Increase the price of recorded classes. Are you getting what I am saying? I just saying my prices are normally same. But what I want to say is recorded classes we need to incur more expensive. Face to face no commission. We don't pay commission to anyone. Student will directly will come now. So we will not pay any commission to anyone. So will directly come. Live classes will also directly come. But in recorded classes there are many hidden expenses. We need to do a lot of marketings. For face to face less marketing. Correct now. So what I want to say is that this is I can create my operating segment based on product, based on location, based on customer. Which depends upon what? Choice of management. Correct. This you understood. However, when I say business activity, so what India's 108 says that here business will include both business with external party and other segment also. Means revenue will include external sales and internal sales also. This much you understood? Follow. This much you understood. Now let us come to the next point. Reportable segment. Now what India says, 108 said, if once you have identified operating segment, suppose 1, 2, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 you have identified. So you have identified operating segment by taking that three condition into that three condition by applying that three condition. Now all segments are not reportable segment. So there are some reportable segments. Suppose these are reportable segments. You need to identify reportable segment for which information is required to be disclosed. Means disclosure is required only for reportable segment, not all operating segment. It means we need to now understand how to identify reportable segment, and this is only important from examination point of view. They will ask you which are reportable segment. Correct? Understood. So in our disclosure, we report only for reportable segment. And suppose, just try to understand. Suppose the revenue of this reportable segment is 300. So we disclose this revenue for each reportable segment. Correct. But my question to you, whether this revenue will match with the revenue in SOPL. Why it will not match? Because there are some other segments which are not reportable. Therefore, for reconciliation, Ind AS 108 says we need to reconcile also. For reconciliation purpose, we will consider this also, but on a combined basis. This other segment will be combined and reconciled as one segment for reconciliation purpose. But we report separately for whom? Reportable segment. Now we need to understand how to identify reportable segment. They have given how many criteria? 4 criteria. How many criteria? 4 criteria. First criteria is known as what? QT criteria. QT means quantitative threshold criteria. Quantitative threshold criteria. This criteria is important. What they said, an entity shall report separately information about each operating segment that meet any one of the following QT. First QT is based on segment revenue. So what they said, segment revenue is 10% or more of total segment revenue. So if any segment is having segment revenue which is 10% more of total segment revenue, it will be reportable segment. Segment revenue means what? Both internal sale plus external sale. Correct. Then second criteria is based on segment result. What they want to say is segment result is 10% or more of combined result in terms of profit or combined result in terms of loss, whichever is greater in absolute terms. Have you understood this? Is what they want to say. Suppose A, D. This is 10 profit. This is 10 profit, 20 profit, 50 loss, 100 profit. Right. So what they want to say, first find out combined result in terms of profit. How much? 130. Then find out combined result in terms of loss, that is 50. But in absolute terms means what? Ignoring negative sign. Otherwise, so this will be always higher now. If you take negative sign, then the always profit will be higher. So ignore what? Negative sign means take the figure in absolute terms, and whichever is higher, that will become benchmark. So if this is higher, so this become benchmark. Now this you ignore. Now calculate percentage based on 130. Is this will be 10 by 130? How much? 7.6%. Then 20 divided by 130. How much? 15%, then 50 divided by 130 how much? 38%, then 100 divided by 130 how much? 76%. Can these three are 10% or more? So this become what? Reportable segment. Have you understood this point? Have you understood? So what they want to say, segment result is 10% or more of combined result in terms of profit or combined result in terms of loss, whichever is greater in absolute terms. Understood? Third is what? Based on segment asset. Segment asset is 10% or more of total segment asset. Can you say everything will be given only to apply the percentage? Very simple. Correct. Second criteria is what? Based on management discretion. What they want to say कि any management can add any segment as what? Reportable segment, even though it does not meet Q2 criteria. So any segment can be added as reportable segment as per the discretion of management, even though it does not meet QT criteria. There may be some startup business. There may be some startup business. So can you say management will always want to inform startup business now? But can you say no revenue, no asset, no profit? So it cannot meet any QT criteria, but they want to report it. So management can report it. Thank you very much. Understood? Point number C, what they said, any operating segment which was reportable during preceding financial year as per QT criteria should be also reportable in current financial year, even though it does not meet QT criteria. Means in the last year, if any segment was reportable based on QT criteria, not based on management criteria, based on QT criteria, will be also reportable in current financial year, even though it does not meet QT criteria. Understood? Correct. Now point number D is also important. Means normally from exam point of point number A and point number D is important. Point number A and point number D is important. What is point number D? If the total external revenue reported by operating segment constitute less than 75% of entity's revenue. My question to your entity's revenue will be only external sale. It will be external sale plus internal sale. No. Entities revenue means what you are disclosing in SOPL. Entities revenue means what? Only external sale. So it means it is only what? External sale. Correct? Are you able to understand what I am saying? Correct. So if the total external revenue, total external sales reported by operating segment constitute less than 75% of entity's revenue, then additional operating segments shall be identified as reportable segment until at least 75% of entity's revenue is included in what? Reportable segment. Understood this? Means whatever you are reporting as an external sales, there should be at least equal to what? 75% of entity's revenue. If it is less than that, identify some segment as reportable segment until it become 75% of entity's revenue. Correct? Who will identify additional segment? In exam, you become management, you only take the decision. In exam, you become management, now they will give some information that you can consider. Correct? Understood. I think this you have understood. Can we take one question based on this? Follow. Yes, na? India is 108. Question. Heavy Goods Limited has 6 operating segments, namely L to Q. The total revenue, internal, external, profit and loss and asset are given. Heavy goods need to determine how many reportable segments it has. You are required to advise heavy good as per the criteria defined under Ind AS 108. Can we do that? So can you say We'll do this plus, first we need to, better we should do or what? Let us do it now. Let's do it. Acha. Can you give me what are the L to Q? L M N O I. Lemon OP गया. OP total. Can you give me first what? Segment revenue. Segment revenue means what? Internal plus external. Can you give me the total? Internal, external. Fast. How much? 16,000. Then 11,250. Then 5250. Then total total. You can give me this total. This total only na. Bolo. 45,000. Now we can find out percentage. This by this and every percentage. Then this by total. This is total. Then then so can you say this is reportable, this is reportable, this is not reportable, this is reportable, this is this is not reportable. Understood? Then we'll go to segment result. So they have given segment result also. Can you give me first in terms of profit? What are the 3,000 then but 1,500 and then 900 and can you give me first total in terms of profit, then in terms of loss, which will be benchmark. Now can you give me percentage in terms of profit? 3,000 divided by 4,800. Then then so now can I say as per this is reportable, this is reportable, this is reportable, this is reportable, this is only this is not reportable. All become reportable. Na? However, we need to check segment asset. Segment asset you can do by your own. Correct now. This by total, this by total. Means you can find out this percentage. They have given this percentage only check karo. Huh? But we have done wrongly. Why it is coming like Our it is date is why 50. Something wrong we have done now. Hmm? Plus 1500. Oh, chalo, but have you understood? Because of that one, we have done mistake. Because of one point, we have done mistake, na. But have you understood the process? So what? Let us see. This is correct. So this is reportable. This is reportable. This is not reportable. This is reportable. This is reportable. This is not reportable. This is 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 reportable. So all are reportable. If any one criteria satisfied, so reportable. If any one, so can you say in this that fourth criteria is not applicable because 100% become what? 100% external sales included where? In reportable segment. The fourth criteria there is no need to cross check. Are you getting? This is what? Criteria 1 based on QT. What was the fourth criteria? Entities external sales to 75% criteria. So 75% criteria is we are not supposed to check it because now 100% sales become a reportable segment. Understood? Are included in reportable segment. Understood? But suppose out of these only 2 are what? Reportable. Then you do cross check fourth criteria also. And if it is not coming 75%, you need to identify additional segment as what? Reportable segment. Can you do that question by Ron? Understood? Correct. Some questions are given in ICAI study material, but I hope you have understood. Correct? Yes, sir. Now come to the last point of this chapter. Have you understood what I am saying? Come to India's 108 1 second. Now, preparation of segment report. Now just try to understand what India's says that sometimes there are matrix form of organization. What is the matrix form of organization? Matrix form of organization means what? Suppose we have P1, P2 and P3 and we have appointed manager for this. So can you say then it is understood that our operating segment is based on product. Correct? But suppose we have location 1, location 2, location 3 also and we have appointed manager location wise also. So it means it can be also based on location. This type of organization is known as matrix form of organization, in which operating segment can be either based on product or based on location. So what India's 108 says that in this case we need to identify operating segment based on the core principle of the entity. Core principle of the entity, correct? Understood this point? Correct? Now it can be what? Based on product or based on location. That will be given by management only. But this type of organization is known as what? Matrix form of organization. Now, if suppose they have decided that this is what? This is what? Operating segment. So we call it this is primary segment. This is what? This is what? Primary operating segment. And this will become what? Secondary operating segment. Normally in exam, based on product will be primary operating segment and based on location will be what? Secondary operating segment from exam point of view. For primary we should report 7 information. For secondary we should report 3 information. Understood this point? Always in exam as per the information given the question. For primary how many information? 7. For secondary how many information? 3. What are the information that I need to give you? So for that we need to what go to disclosure requirement. So I have just given one format. You can see format. We do learn this format. However, it is very easy. So what they said, primary segment, we need to first identify reportable segment. Other segment will become what? All other reconciling segment. We suppose there are 4. Out of 4, 2 are what? Reportable. So balance 2 will be what? Other reconciling operating segment. However, whatever question they have given till now, all are reportable. From exam point of view, they normally give 2 or maximum 3. All 3 will be reportable from exam point of view. Now, first information we should disclose segment revenue. What we should disclose? Segment revenue. Segment revenue means what? External sale plus internal sale plus other operating revenue. Any other revenue? Correct. This will become segment revenue. But whether this total will be matched with SOPL? No, because this include inter-segment sale. From this we deduct inter-segment sale, and now it will be reconciled with what? Entities revenue as per SOPL. So we are just disclosing and reconciling in one format from exam point of view. So first is what? Segment revenue. Second is what? Segment result. So what is segment result? Segment revenue minus segment expense will become segment result. But this segment result will not be matched with will not match with SOPL, profit or loss. So from this we should do some adjustment. Correct. So we'll do less interest expense, less head office expense, add or less exceptional item. This will become PBT, less tax expense. This will become what? Profit for the period. So how we'll understand that this reconciliation required? Just try to. In exam, they will give segment information. Whenever they are giving segment information, that will be segment wise. But they are saying, suppose they have given interest expense and they have not allocated to what? Segment. It means, can I say that cannot be allocated? So that can be used for reconciliation purpose. Means there are some expense which cannot be allocated, which means they are not segment wise. Are you getting? For example, you have taken loan for one segment. So it is segment expense. But suppose you have taken loan for entity as a total. For example, debenture. Debenture is not issued segment wise. Now, you can take bank overdraft segment wise. Location wise means my bank overdraft for this segment and for other segment may be different. But can I say debentures cannot be issued segment wise? Debenture will be entities wise. So interest on debenture will be what? A reconciling item. Can I say that can be understood from the question only? Yes, sir. So this after this will match with what? The profit for the period. Then we'll disclose segment asset. Segment asset will be segment that right on non-current asset and segment current asset. Means can I say this information they will give segment wise now? Exam. And this becomes segment asset. To this will add DTA. DTA cannot be segment wise. Tax cannot be segment wise. Then investment cannot be segment wise. Add investment. Will add other unallocated asset. This will become total asset which will match with balance sheet. Then next information is what? Segment liability. So segment liability will be segment borrowing, segment current liability. Then we'll reconcile with what? DTL, unallocated liability. This will become total liability. Then in this we'll add total equity share capital, total other equity. This will match with what? Total asset. Correct. Reconciliation done. What are the 4 information? First is segment revenue, then segment result, then segment asset, then segment liability with reconciliation. One second. Segment, then with reconciliation. Correct. Then 3 more information without reconciliation. 3 more information without reconciliation. That is capital expenditure during the year, depreciation and amortization, and other non-cash expense. What are three more information? Depreciation and amortization, capital expenditure, and other non-cash expense. 7 information done. Report over. Now coming to secondary segment, this will be always location wise from exam point of view. So you can see reportable segment. In these three information, first is external sale, second is segment asset, third is capital expenditure. Only without reconciliation. This is without reconciliation. External sale, segment asset, segment capital expenditure. Over. Let me take one question based on this. This question have been asked 2 times in exam. Same to same. I don't understand why they repeat the question. Why they repeat, you know? Because students are not able to perform in exam. Believe me, in days 1082, student will not revise before exam. And you only say if they don't revise this question format, they will not able to write properly. In this question, they are not able to write properly. Whether they will give marks? Very baat samjho. If you are CA, you are checking the paper. This question, if you are not able to present the information properly, this is a disclosure point now. If you are not able to write, will we give marks? The only thing. So revision is necessary. And normally, what happened last 4 days, 5 days, you allocate to what? Revision of paper. First 3 days to big chapter chala jata. Consolidation, business combination, financial instruments, share based payment. Ind AS 115, Ind AS 116. Khatam. 3.5 days completed. Balance half days, what you will do? Can you revise other Ind AS? It means you should give some respect to these small chapters also. Like consolidation ho gaya re. And can you say consolidation too easy? You know what question is going to come. Believe me, consolidation revision, I don't have, I know what question will come. Business combination, we have set of mind. Question will come. It will not go beyond that. But from this chapter, chalo theek hai, this time they have asked 2 time question. Time this question have been asked. Next time they will create a new question. Are we able to understand what I am saying? Ind AS 16, Ind AS 38, Ind AS 36, Ind AS 12. They will ask question from there also, na? That is also to be revised. So you need to understand how to allocate revision time. Revision time allocation is more important. Are you getting what I am saying? Pura samjho baat ko. So we should also respect all chapters also. Normally it has been seen 20 marks question will come from C category. C category does not mean unimportant chapter. Huh? C category are those chapters which are very small chapter. 20 marks question that is coming out of 120 marks. Huh? So 20 marks is also important. Na? Are you getting what I am saying? And that will be very easy if you revise. Correct? Isliye I want to say that if you want to get target is more than 80, first to note to selective study. Note to selective study. If you are selecting this I will do, this I will not do, then to I don't know what will happen. First note to selective study. Second important point is what? Time management exam, which I have seen students are not able to manage time. If you are not able to manage time, you are not able to complete the questions. If you are not able to complete the questions, थोड़ा सा known question you are not able to do. Third point is what? That plan your revision properly. Plan your revision properly. Correct? Plan your revision properly. Which chapter should be given how much time. I'm not saying that don't revise consolidation. But I'm also not saying not revise small chapters. Revise that also. You should revise that chapter also, revise CSR also. CSR, that chapter 5 marks question, every attempt they are asking. But if you don't revise, exam में नहीं चलता. What नहीं चलता? Normally, what is our habit? From one more thing which you need to understand. From nursery to class 12. I don't know what you have done in CA Foundation, CA Inter. But what you have done, I don't know. I can give my example, but I can't give you example. But up to 12, all are same. From nursery to class 12, my question to you all, before exam, you have revised 100% or not? And then we went to the exam. No student will say that I have not done revision and went. If they are good student, means CA student are good only. अरे बोलना रे, then only we came to CA ना. Otherwise तो BCom ही कर लेते. It means, can you say we have done 100% revision, then we went and then we write and we pass? So it means we are in a habit to revise full and then went to what? Exam hall. So psychology. What happens? Suppose you have not done entire revision before exam. 1.5 day मिलता है, चलो FR तो 4-5 days, so you have done complete revision. But other exam 1.5 days. If you are not able to revise full before exam, psychology, what? Believe me, your mental status will be negative. That 1.5 days, how to revise, that you should plan. Believe me, when I was CA student, now I don't know about what you do. I used to make sure that I used to revise the entire thing. How? I'll plan for that. But I have done 100% revision. Full in exam. Only one exam, last exam में हालत खराब हो गया था. Because in our days, 8 days continuous exam. Back to back. We are getting 1 day holiday, but in our days, no holiday. 8 to day, back to back to last day exam na. Yeah. Because we were not sleeping. 2 hours, 3 hours sleep only. Correct na. Last exam, I think thoda sa I missed some, but then also I passed. So what I am saying, why I have revised full? Because habituated of that. And when I revise full, then I am confident in exam hall. When I am not revising full, then thoda sa I become negative in exam hall. And suppose I have not revised one chapter and the first question come from that chapter. Suppose full nervous breakdown. Because we are human beings. We are totally emotionally affected. Believe me, in exam question paper, now I always say that is very important in how to control emotions in exam hall. That we need to learn. If you can handle that now, ये pass तो करना बहुत आसान. I am not saying because I passed it, because only the criteria is 50%. 50%. Now they have never said 90%. Only what they have said, 50%. So that you need to understand. Can I take this question? Now, X Limited is operating in coating industry. Its business segment comprise coating and other consisting of chemical, polymers and related activities. Certain information for financial year is this. In coating external revenue including GST they have given. GST is what? 5,000. My question to you all, we should report revenue including or excluding GST? Or including? Sales should be recognized including or excluding GST? As revenue is including or excluding? Excluding, Nare. We never include GST in sales amount. They have given for that only. Means our revenue is 1,95,000 and 67,000. Other operating income, that is also given. Result given, asset given, liability. All is given what segment wise. Then unallocated revenue. This is for reconciliation. Interest and bank charges for reconciliation. Income tax expense for reconciliation. investment for reconciliation, unallocated asset for reconciliation, unallocated liability, reserve and surplus, share capital for reconciliation, depreciation for disclosure, capital expenditure for disclosure, revenue from outside India and segment asset outside India. This is for secondary information, secondary report. Understood? Based on above, how should you should report? Correct? You can see 2 times it has been asked in exam. Understood? First, you should also disclose that what is the company's operating segment comprised of coating and other segment. You can write down in this way. Then you can prepare this. Can you prepare this? Can you see this? Just see the answer. Just see the format. Can we do that? For the external revenue, can you see we can direct it out on this? There is no need to say minus GST. You can write on this. Then other operating income. This become total revenue. There is no inter-segment sale. So there is no question of reconciliation. If there is that, we should do less inter-segment sale. This is a segment result given. Then reconciliation. Unallocated expense. Then this become profit before exceptional item. Yeah, profit before in whatever. Then interest and bank charges. Then they have given what? Tax expense. This become profit. There is no exceptional item. Correct? Then other information, they have given segment asset. Then they have given investment and unallocated asset. This become total asset. Then they have given liabilities, segment liability they have given. Then they have given unallocated liabilities, share capital, reserve and surplus. This become total equity and liabilities. This will match. Correct. Then other information, they have given capital expenditure. They have given depreciation. You can total also if you want to total. But no reconciliation. Then they have given India geographical information. India, outside India, total. You can see revenue we know 3,17,000. Revenue will be what? 3 lakh. This revenue we can take from this. And segment asset is what? 80,000. Now they have given revenue outside India. Check karo. In question they have given revenue outside India. And they have given segment asset outside India. So we can calculate this as a balancing figure. This is a balancing figure. Capital expenditure, how much total? 7,000. They have not given anything. Means it is understood everything is what? In India only. So this is what balancing figure. This is balancing. Understood. Have you understood? Follow. Correct. 2 questions I have taken. Other question you can read from what? Other books. ICAI study material. With this we completed what? India's 108. What are left? Check karte hain. 115 is left. India's 24 is left. India's 101, 105, India's 33 is from tomorrow's point of view. All Indias are very small. Correct? Now these all are very small Indias. So we'll first start with India's 105 because that will take much time. India 7 I have not included. The India's 7 also. Yeah. So first I will do India's 105. Then I will better do India's 7. 33. Yes, 10 I have done. Event India's 10 you are saying. 33 also I will do. Left now. I will do everything. But let's see how much completed tomorrow. How much I can complete tomorrow. Today this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining